separate vote on extending Obamacare health subsidies. That was a key part of the Senate deal. So we still have some work to be done.
Probably done by tomorrow.
You think?
Yeah, I think.
How is that piece of it going to get resolved?
I don't know whether Speaker Johnson has actually said that he's not. But holding it, holding a vote doesn't mean anything.
No, it doesn't. But in the meantime, these guys are going to miss paychecks again.
Yeah.
They have not been paid since October 1st. Expecting people to volunteer, particularly if you're living paycheck to paycheck or every couple of paychecks, maybe you can miss a couple of paychecks. They haven't been paid since October 1st. They're about to miss another one. And just because they pass the vote doesn't mean that they automatically get paid.
The dynamic in the Democratic Party is where everybody's mad at Chuck Schumer, and he voted no. But a lot of people think that guys like Ro Khanna or others that are just fuming need to thank the government that took the flack for that, because you don't want to be sitting there doing. You just pointed out how bad it is.
It's terrible.
Exactly. So the government gets to reopen, so they're no longer going to be blamed for what's happening. So I'll be thanking the ones that gave me cover to pretend that I was still a no. That's not today's. It doesn't portend good things for what we're looking at between now and 2026 in the election. Things are ugly and getting uglier. Without an official end to the shutdown, air traffic controllers are still not getting paid. Airports are still facing some heavy delays. Controllers are set to miss their second paycheck. Airlines are supposed to cut 6% of the flights starting today, up from 4% last week, and going to, I think, 10% soon. Flight Aware, there's a new one you like now. Sorry, we don't like Flight Aware? Huh? Flighty.
Like Flighty.
Flighty.
Yeah.
That's what the
funny
flights
name
called us
for
back this year.
I've heard of Flighty for a long time and didn't want to go all in
But you have to pay for it, right?
because of the charge, but I'm told now it's worth it. So, and given what's happening out there, maybe it is.
What's the charge? How much?
A couple dollars a month.
You don't want those adding up. And it
Well, you know me.
Then it gets
I'm a
to
cheapskate,
dozens of dollars, which FlightAware says close to 3,000 U.S. flights were canceled yesterday. 1,400 have been cut so far today. Yesterday on Truth Social, before the Senate bill passed its funding, President Trump told air traffic controllers to get back to work immediately, saying anyone who didn't would have their pay docked. And he said for those that did nothing but complain and took time off, even though everyone knew they'd be paid in full shortly after. In the future, I'm not happy with you. But then he said he'd be recommending a $10,000 bonus for any controllers who haven't taken time
This
off.
ticked me off too. The idea that, you're not here, you should be doing this for us. Easy to say when you don't have bills to pay that you can't
Exactly,
pay.
where you got to get a second job.
Right.
But they really do need to.
They do need to come in, but
Because
we
you're
need
going
to
to
pay
get,
them.
but you're going to get back pay. You're going to get back pay.
Sure, but tell that to your landlord. Tell that when you can't put food on the table for any of these things.
Well, so
To be a
you're
patriot
not giving any
myself.
credit to the people that did show up?
No, I am. I'm giving
Okay.
complete credit to them.
But
They
you
should
don't
get a
wanna-
$10,000 bonus. But
Right.
the idea, if you didn't show up, I think that's understandable. If you were asked to volunteer for 2 months at a time, you didn't have enough money in the bank to cover it, I get it. You have
Not
to take
like-
a second job.
Not like us, where no one would miss us. I mean, it does matter. I might feel compelled to go in
It
and make
does
sure
matter, but
nothing
if you
happens.
have to take
Yeah.
a second job because you can't pay the bill.
Well, if they're going to cut,
I
if
mean,
you,
listen to Sean Duffy, the transportation secretary, who has talked about how most of them are the primary breadwinners for their family
Right.
in air traffic control.
he said he
Most of
expected
them are already working
wanted
6
them to
days
be
a week.
there.
He wants them to be there, but I don't think you're not a patriot if you don't show up because of the sacrifices that you may be making.
Right. And they know that
in a way.
if you cut back on, go 6, 10, whatever it is, 10%, that hopefully there's enough of
But
your
we were already
colleagues.
dealing with an air traffic controller shortage of 4,000 people, 4,000 air traffic controllers that we were already short. So these people have already been overworked. They're already asked to work 6 days a week before you even got to this chaos. Then when you have people who are calling in sick and you're expected to pick up for your colleagues on top of that, and you're not getting paid.
Someone's
in
gotta
your
be there.
volunteer situation. Someone's gotta be there, sure, but we should also pay them. How about we have
Well-
government function for a change?
We wanted to pay them.
Yeah. We
Trump
should.
wants to pay them.
We should. All right, Berkshire Hathaway CEO Warren Buffett laying out a plan to step up the pace of giving away his estate. In his Thanksgiving letter, the 95-year-old Mr. Buffett said that he needs to accelerate the disbursement of his Berkshire stock to his 3 children's foundations because of their own advanced ages. And that by doing so, it will improve the probability that, in his words, they will dispose of what will essentially be my entire estate before alternative trustees replace them. Buffett also said that he wants to keep a significant amount of Berkshire's A shares until investors get more comfortable with incoming CEO Greg Abel. He did this in his Thanksgiving letter. At the time, he said he'd be going quiet, sort of. He's not going to be writing the annual letter to shareholders anymore that he's always done in the past. That is going to be going to incoming CEO Greg Abel, who will be fully taking over the reins come January 1st. But he did say that this Thanksgiving letter is one that he will continue to use to communicate with shareholders and everyone else because he likes doing it. He talked an awful lot in the letter about how money isn't everything, and some incredible words. And if you want to see it yourself, you can go to the Berkshire Hathaway website to check it out. But he has some incredible words about how kindness costs you nothing, but it's also priceless. It's the most important thing that you can do to anybody. He said to live by the golden rule, that those are the best words he can come up with, and that you should remember everybody along the way is equally important. Just said that those are the lessons he has taken away. He also said that he's prouder of the second half of his life than the first half of his life, and kind of challenged everyone else to do that too. If you ever listen to him, he basically says you should learn things along the first half of your life that you put into play. Give yourself some grace when it comes to making mistakes, but always strive to be better. And they were pretty great words. If you get the chance to check it out, I think you should.
So it's pointed out the Buffett premium's kind of gone out of Berkshire at this point.
Yeah, I think that's been the case. It's
Abel's got it.
underperformed the S&P 500
Yep.
this year, but last week when you saw the big pressure that came in on the AI stocks and technology
Yeah, it
stocks,
held up.
it outperformed the market over the course of the last week, and it cut the underperformance pretty significantly. I think, what is it, maybe 12% Berkshire Hathaway shares are up for the year. If you look at a year to date versus the
Yeah.
S&P 500, okay, so up 10%
Off
versus
the ties,
16.
yeah.
Yeah.
Meanwhile, we got some other news for you this morning. Paramount Skydance saying it expects $1 billion more in merger savings than it previously forecast. That update coming in Paramount's third quarter report. In a letter to shareholders, the company's CEO, David Ellison, spelled out the company's biggest initiatives. Those include investing in growth businesses, growing Paramount streaming operations globally, and pinpointing savings that will help lead to long-term free cash flow generation. Here's Ellison on the analyst call responding to a question about Paramount's M&A philosophy.
I think it's important to know that there's no must-haves for us. We really look at this as buy versus build, and we absolutely have the ability to build to get to where we want to go. We believe we can achieve our goals with our creative content engines. We believe we can achieve our streaming goals, and that we can drive enterprise efficiency, for long, and create value and long-term free cash flow generation, all through the building standpoint.
Paramount also announcing a new round of layoffs that will hit about 1,600 employees. It also said it plans to increase prices for Paramount Plus in the first quarter of next year.
When we come back, we'll have much more on the markets following the best day for technology in months, plus an update when it comes to earnings on AI player CoreWeave. We'll tell you why that stock is lower this morning. A stock off by about 9.5%. Stay tuned, you're watching Squawk Box, and this is CNBC.
reporting a $19 billion gain for its Vision Fund in the most recent quarter, driven by its investments in OpenAI and electronic services firm PayPay. SoftBank also revealing it has sold its entire stake in NVIDIA for $5.8 billion as it looks to capitalize its all-in bet on OpenAI. It also sold part of its T-Mobile stake for $9.2 billion.
Meantime, shares of AI infrastructure provider CoreWeave, they are lower. The company reported better than expected revenue for its third quarter. Now, sales jumping 134% year over year. But CoreWeave gave disappointing full-year guidance, and the company's CEO flagging what is now going to be a delay at a third-party data center. You don't want to miss an interview. It's coming up later today. The CEO of that company, 9 a.m. Eastern Time, with the gang on Squawk on the Street, Joe.
All right, joining us now with his take on the markets, Wall Street veteran Chuck Cloud. The man, the myth, the legend. He's chairman and chief investment officer of Cloud Capital. Was one of the few, select few, to accurately call the dot-com bubble. One of my colleagues at Merrill Lynch in the 80s. You've been in the business 59 years.
It's a good number.
Me,
That's all right,
45. And in my office, people knew, but I mean, they were all screaming Eagles in my office. Jack Joyce, Jerry, all Boston College guys. That's why you were revered. I think I won Beacon Street office, and
It was a good office.
you had a great run at Merrill, I think till 1999. And the run continues, but you're never on TV.
No, I haven't been, no.
I don't know. And your ETFs are killing it, too.
They go well, yeah.
Well, let's talk, since we said that you correctly called the dot-com bubble, you'd be good at calling this bubble, and you don't think it's a bubble.
No, not in the traditional sense. So people always think they're going to relive a recent experience, and the market always has something else in mind.
It barely rhymes.
Yeah, it does. I think there are a lot of market and economic pressures on short-term interest rates. The market wants interest rates to be lower. If we didn't have a Fed, if the Fed wasn't there, short rates would be between 1% and 2%.
And you think that's your greatest call, was the secular decline in interest rates?
In interest rates, yeah. I made an entire career, Joe, on one call, and it went away for a while, but now I think it's back. There are three reasons. One is, in fact, if you look at just what the capital markets are telling you, look, the Fed cut the size of its balance sheet by a third, and the S&P is up 2,000 basis points. If you remember, an awful lot of high-yield bond funds raised hundreds of billions of dollars in the late teens, and they'd starved in the teens. The interest rates were never more than 2%, and they never deployed that money. Spreads never widened out. BBB minus spreads never got above 100 basis points, not for a long period of time, and they're 93 today. And then third, the dollar's supposed to crash, and it's not. It's sort of trading in the middle of its range for the last 10 years, and you have a third of its range for the last 30 years.
It's very orderly.
I think there are three. The question is, interest rates and inflation went down for 40 years. Then, of course, COVID upended the whole thing. The question is, why did that happen? What are the reasons, and have those reasons changed? And I would argue there are three reasons, and they really haven't changed. In fact, they become more deflationary as we go into the 30s. The first, the most important, is demographics. Demographics are probably the strongest reason why the yield curve is where it is for a simple reason. As societies age, they save more. And people are concerned that baby boomers, as they retire, will cut the labor force, and interest rates will shoot upward because of labor costs, and that leaves out part of the equation. When you retire, you stop spending. You don't buy houses, you don't buy cars. Older populations save more. Japan's the best example of that. In fact, if you look at Germany, Japan's been, I don't think the JGB's seen positive interest rates for 30 years. In the case of Germany, in about 2013, about the time of the Greek debt crisis, Germany's savings began to exceed investment, and the Bund hasn't had positive interest rates. Italy's economy is no higher than it was, no larger than it was in 1999. And Germany's been actually contracting. But we're at that point right now. And that sets up a number of important things. One is, right now there are $170 trillion of financial assets in the United States, and the economy is $30 trillion. And it takes a lot of huffing and puffing for a $30 trillion economy to sustain high interest rates on $170 trillion of financial assets. And The point is that if interest rates start to rise, defaults start to emerge. And we're in a fractionalized banking system, so defaults stop credit. And that's kind of where we are right now. Now, I think the reason why I say that affects short-term interest rates is that what the short-term interest rate is, the deposit rate, it's basically the price of financial sector liabilities. It's the price of a deposit or commercial paper or something like that. And if you're in a contractionary debt period, the financial sector is going to shrink. It's going to become smaller. And we're already beginning to see that. Banking consolidation. If you start to liquidate your liabilities, the price of a financial sector liability will decline. Now, if you look at the debt stock, people forget government debt is higher as a percent of GDP, but private debt, which is a larger aggregate, government debt's maybe 37 trillion, private debt's roughly 50, but that's contracting. Household debt now is contracting at 2 percentage points a year relative to GDP, and business debt is contracting also at 2% a year. And I think that's really the story. As debt contracts, it's hard for the banking system to move. It's already liquidated 10% of its deposits. And I think that's a story that will start to unfold as we go through.
And that will mean what?
Bullish,
And that
bullish on stocks, I would think.
Well, it is positive for stocks.
And productivity and everything else.
It says bond yields aren't going to be high enough that it really creates a tremendous opportunity. But, two gentlemen won a Nobel Prize in economic sciences. Merton Miller from the University of Chicago,
right,
and Franco Modigliani from MIT, and they came up with an incentive or an observation that I think describes the markets today. They said you can't change the value of the firm by changing the debt-to-equity ratio. If debt goes up, equity values go down. If debt goes down, equity values go up. And that's kind of what's happening today. I think what you're going to see is a massive shift in the ownership of the corporate sector from the debt holder to the shareholder. As that comes out, the cruise line industry is an excellent example of this. They were forced to leverage their balance sheet heavily during the close down period. Now as they liquidate it, the value of the equity is going to rise, and that's where the equity market is today. I think it benefits enormously as this debt stock begins to unwind. Equities clearly benefit, and that's really the story for this.
One of the problems with the dot-com bubble was so fragmented, so many different companies. And it was, I think, something you call eyeball. Like you were
Right.
The promise of the future.
No revenues, eyeball.
And now you've got 4 or 5 companies that are real, and they got money, and they're leading the way, and there's actually it's underpinned by actual financial performance, but the end result, as powerful as the technology is, could be the same, but you don't have to go through sort of the growing pains maybe of the dot-com.
Well, the entire corporate sector is generating free cash flow. That's never happened before late in the cycle.
But you don't think, and the productivity gains from AI are going to also be?
Well, I'll tell you what's already happened. If you look at hours worked, best way of measuring labor time, they're down about 2% from 2019, before COVID hit. Real GDP is up 13%. That's a tremendous productivity gain. And we haven't even seen the real effect of AI yet.
Right.
I mean, so remember, productivity is profits. So,
and you don't think that AI could be a double-edged sword? Because sometimes I think to myself, we're all talking about, is there an AI bubble and it turns the wrong way? And I think to myself, well, in success, it could also turn the wrong way. Insofar as if we have a productivity boom, what does that mean? It means more growth at lower costs. Where do you get the costs? Look around the table here.
That's us. Well, I think the beauty of a democratic capitalist system is you always find something else to do, right? And that's happened throughout history. Remember, agriculture was 48% of the economy at the turn of the century, and it was 4% coming out of the century. So I'm not worried. I am worried about the labor force. It will have an effect, and we're already beginning to see a political snapback on that. But I don't think that's going to stop the dynamic that we're seeing right now. Now, when you look at the hyperscalers, I'm not sure anybody's going to make money because you're a hyperscaler. But as a hyperscaler, you have the advantage that the two companies that had the operating system, there are only a handful of companies that survived the dot-com boom to become even larger in enterprises. Apple and Microsoft were two. The reason is they had the operating system. where you access the internet. So they created the software that allowed everybody to do that at almost no cost. Remember Netscape, how Microsoft ended that situation in 6 months. And I think that's the situation today with the hyperscalers. They may not make money on the large language model, but they'll throw out software packages at very low cost, and that's why they're so powerful.
Chuck, you just before we're wrapping if we're gonna go, but you had one of your ETFs up 33% over the past year. That's the Select Equity
What's that for?
ETF. Yeah, and 12% in the quarter. I think you got another one that's hedged, which has returned 83% of the S&P's returns, but only 60% of average net exposure. Are those your only two ETFs?
Yes.
Those are your two. CBSE and CBLS, and you're an ordained deacon for the Archdiocese of Boston. Is there anything you can do?
40th year ordination next year.
Is there anything you can do for the? You can't really bless this set or anything. You're not really.
Sure.
You can do that for us. Before you leave,
We could use it.
Right about the payments?
Yeah, just.
I mean,
we'll try.
Joe may have to leave then, but.
Yeah, exactly.
I mean, anybody can bless it. But
No,
I guess I have
I'm
a
with him.
session,
My uncle was a priest, one of the good ones, in fact.
two parishes right now, so
Yeah.
keeps me off the streets nice.
Thank you. It's great.
Thank you.
Great
Thank
to
you,
see
nice to see you.
This was fun.
Really good
coming
to
out of hiding to be on Swap Box.
I like this optimism.
Do I
Use a little.
just get up and walk away?
I think you can stay. We're gonna have a commercial in a moment.
Oh, okay.
Before you grill the next guest?
Did I roll it next time?
Grill the next, no,
Everyone
yeah, you can ask some questions. I don't know who's next.
Thank you, Chuck. We
Thanks.
appreciate
People
it.
have been grilling me for a long time. I'm used to it. Thank you for inviting me.
Thank
You're
you.
welcome.
Thank you.
Thank you.
When we come back, Apple removing gay dating apps from its Chinese app store. We're going to get you up to speed on that story and a programming note for you. Don't miss a first on Squawk Box interview with AMD CEO Lisa Su. That's tomorrow at 8:10 Eastern Time. She will join us on set following AMD's first Analyst Day in 3 years. Lisa Su says that she doesn't have an Analyst Day every year. She only does it when she sees an inflection point. And the inflection point right now is AI. We're going to talk with her about everything she's seeing tomorrow on Squawk Box. We'll be right back.
Welcome back to Squawk Box. Apple confirming it's now removed 2 popular gay dating apps from its Chinese app store. That follows an order from the country's internet regulator and censorship authority. The company telling CNBC it must follow the laws of the countries where it operates. And over the weekend, reports said that the app, it's called Blued, and another one's called Finca, suddenly disappeared from that app store. In 2022, popular gay dating app Grindr was removed from the app store in China as well. This after regulators in Beijing began a crackdown on content that it considered illegal and inappropriate.
All right, coming up, Major League Baseball cracking down on pitch level betting, it's known as, amid a scandal involving 2 Cleveland players. Details after the break. First, so check out yesterday's S&P 500 winners and losers.
Good morning, everybody, and welcome back to Squawk Box. We're live from the NASDAQ market site in Times Square. If you take a look at the futures this morning, Dow futures have actually turned positive. They're up by about 5 points. S&P futures are down by 12 points. The NASDAQ off by 100 points. But yesterday was the best day for the NASDAQ since all the way back to May. The S&P had its best day since the beginning of October, maybe October 13th, if you're looking at that. So big update, and we'll see where things bring us today.
Baseball is going to limit pitch-by-pitch betting in the wake of that gambling scandal that we were talking about. Tessa Brewer joins us now with more take on it. I love that. Bet on everyone.
Well, you still can.
For a while.
You just you just
Forget-
bet a lot. Major League Baseball has extracted commitments from its sportsbook partners to limit the profit players can make off rigged pitches. It says those agreed upon restrictions will cover 98% of the legal US sports betting market, the max bets on pitches would be $200, which is, I'm guessing, more than you put on any single pitch.
We're just trying to limit how
That's
much.
my
you can
sum total for,
And as I told you yesterday, the perhaps more important part will be that the sports books will include them entirely from parlays, where you stack your bets onto each other. Why does it matter? One player has an outsized impact on a pitch, and by limiting the bet size, the books are limiting the profit and presumably making the payout less attractive to the players. But look, I mean, the players meaning baseball players, not the gamblers. But look, you've got the Cleveland Guardians pitcher, Emmanuel Clase. He had a $20 million 5-year contract. If he rigged pitches and shared that info with bettors, as prosecutors allege, it's hard to believe that he did that for the money. The whole scheme with Clase and pitcher Luis Ortiz didn't even reach $500,000. By the way, their lawyers both denied that the players cheated. This is video of Ortiz at federal court yesterday in Boston. MLB says these micro bets create heightened integrity risks because they focus on one-off events that can be determined by a single player. And that can be inconsequential to the outcome of the game, but consequential, of course, for the integrity of the game. FanDuel already prohibits bets on field goals, on free throws, on turnovers and fouls. No prop bets on players on 10-day contracts or two-way players that move between the major and the minor leagues. FanDuel's president, Christian Janetsky, said that the company is committed to working with the leagues and the lawmakers and the regulators. Same from Fanatics, who told us this deal to limit bets on pitches shows the legal market is working. What they'd really like, this is the translation, enforce limits against the offshore sports books. But even there, I'm told by people with inside knowledge of the way the offshore books work, they get cheated when people are cheating on sports. The sports books themselves, nobody wants to lose money to cheating, and you want the players, the gamblers, to feel assured that they're coming in and gambling on what they think they know, not some.
Why don't they just ban it entirely, rather than limit how much you can profit from it? Because you're right, this probably wasn't done for profit motives alone when these guys have multi-million-dollar contracts that are out there. If there's some leverage that the bad guys get over them, like, why not get rid of it altogether?
I do think it matters for a guy like Ortiz, who was making, I think his lifetime career salary was something like 1.6 million, maybe 2 million. For somebody who's making $2 million for a limited time frame, making multiple thousands of dollars on a single pitch might seem alluring. I can't explain it with Clase. It would be interesting to sit down with him and figure that out. But here's what
Well, he says he's not guilty. So.
Right. But I want to, that's right, he would say that to me.
Right.
Good point, Becky. I'm very curious to know how much this would affect the sports books, because as I said, these are micro bets.
Right.
Typically, you're putting small dollar amounts on individual pitches anyway. You're not betting, $1,000 on a single pitch. If you bet $1,000, guess what? That is going to flag the integrity monitors, who then look at, wait a minute, you threw a ball into the dirt on your starting pitch.
But here's what I would say back to the sports books and to the leagues who are interested in saying we want to preserve the integrity of the league. Why would you allow them to bet on these quick flash pitches? It's rewarding the worst sort of gambling, where you're just like, okay, this is like addictive behavior, I need to keep into it. My guess would be for the sports books, it's probably pretty profitable, and it's how you keep your big money players in the game on this and make more money on it. But for the league, why go along with that?
Engagement, because it makes every pitch so much more exciting. And if
It's why I don't believe them entirely when they say they are completely worried about the integrity of the game. If so, act that way. I get it, but your actions show otherwise.
oh, that's you said 20 million a year for Clase, right? It's a.
No, for
total.
5
years,
years,
okay.
five, but still,
You'd have to
like
be
next year.
top echelon. Some do make money.
His salary was going to be $6 million next year.
6 million. Yeah.
Crazy.
The big time pitchers make a lot more than that.
Yeah, but no, I mean, it's crazy to risk that.
No,
Why
right.
put all
It
that
is,
at
yeah.
risk? When you have made it, you're up there, which, again, I don't understand the behavior. And
Right.
he says he's not guilty, but if that's the case, it's like we need extreme measures to stop this, because it's already illogical, if that's the way that what is happening.
Yep.
Contessa, thank you. When we come back, we're going to talk defense investing on this Veterans Day. First, though, a programming note for you. Don't miss Chevron CEO Mike Wirth in a First on Squawk Box interview. That's tomorrow at 7:30 Eastern Time. He will join us on set before Chevron's Analyst Day. Squawk Box will be right back. Welcome back, everybody. This Veterans Day, venture firm J2 is announcing a $250 million fund. J2 invests in companies at the intersection of consumer and defense technology. And joining us right now is J2's co-founder and managing partner, Alex Harstricht. Alex happens to be a veteran himself. And Alex, on this Veterans Day, first of all, thank you for your service. I thought maybe you could just remind folks what it is that you've done. You started actually as a healthcare consultant and then a venture capitalist, but you took a break to go enroll in the Army Reserve to get signed up. And then you did tours of duty in both Iraq and Afghanistan. So what kind of brought you on this entire process to where you are today?
Yeah, thank you very much, Becky. Thank you for having me on the show. It felt like the right day to announce our $250 million fund. I'm actually lived in the city, went to Columbia undergrad, was a healthcare consultant, and then was actually a healthcare venture capitalist at Blue Cross Blue Shield. And I was very fortunate, the fund did very well, and had this sort of money isn't everything realization. And an observation is, it feels odd to me that military service is not something that's more common, to be honest with you. And so you take the 6 train all the way up, you go to the South Bronx, and that's where I enlisted. And then I went to Officer Candidate School at Fort Benning, intelligence school, and then was fortunate to serve in a Special Operations Joint Task Force in Afghanistan and Iraq. And that was actually the foundation of that experience that led me to found J2 Ventures. Mostly because defense tech is kind of the word du jour right now, but there were so many things that the military was lagging behind. Healthcare is a good example of it, one of which is a wonderful product that's on Andrew Ross Sorkin's finger right now, Aura Ring. We have, previous to Aura, almost no mechanism by which we could, in real time, monitor how soldiers were feeling, readiness. If you think about the fact that somebody could fly a $30 million aircraft, and the only rule was 12 hours bottle to throttle, as in when they last drank, to launching that aircraft, with no other insight into their personal health. These are the kind of products that are fundamentally commercial that we need to get into the hands of the warfighter.
And the military is now using Oura rings, and I don't know for how long or in how deep of a capacity, but they're doing it to figure out if if anybody's sick before you send them in.
That's right, a very long capacity. It actually began in COVID. So if you think about the fact that the only time in US history we have lost an aircraft carrier was during COVID, because somebody got sick and got everybody else sick. So you're in the middle of an aircraft carrier, you have no idea that you're carrying this influenza-like illness, everybody else gets it. If you think our enemies are not watching that and figuring out different mechanisms by which they can harm the United States, I appreciate that myopic worldview that might be held by some, but the bigger insight was traditional defense suppliers had no mechanism by which we could stop this. And if you look at everything coming out of the White House right now, I think the market is actually overcorrected. We're trying to find new defense firms, new weapons. The reality is we need to get commercial technologies into the hands of the Department of Defense, Department of War. That is what is going to help America.
So Oura is one of your investments. Another is a prosthetics company, Educator. I've never heard of that before.
Yeah, well, they're in Poland, and Poland is right next to Ukraine, so they've had a lot of practice in bringing their prosthetic hand into the hands of people, into the arms of people that have come out of the war in Ukraine. And the more interesting aspect of that is, as a result of deploying the hand where it was, you have some of the largest electromyography databases in the world. So for all of these robots and whatever that are going to help you fold your laundry, most of that information is being fed by a company that's helping people that have lost limbs in combat. And that is the kind of symbiotic value that we're seeking at J2.
So that company is feeding it, other people who are making robots are using their technology? Is that what you're suggesting?
Yeah, that's right.
In what way?
Think about this, Andrew. When you pick up the coffee next to you,
Right.
you're not looking at it, but you know not to crush that coffee cup.
Right.
That is a very difficult physics problem. Your hand has been trained over years and years of picking up paper to know that you hold it like this, not like this.
No, I guess what I'm asking is, so like the Optimus robot that Elon Musk is making.
Yeah.
You're saying, is he using your technology? Who's using that technology?
He's not yet, but he should.
Okay.
But a lot of other companies that are building Optimus-like robot companies will be using the electromyography database that's being fed from this company.
Because to create the best prosthetic, you have to have all of those very same things that you would need for robotics.
It's a huge data set that people aren't really touching right now. And so another company that we invested in was a spinout from Google, formerly known as Project Loon. This was, Google has the best business model, previously best business model in the world. Google AdWords, 99% gross margin. The only limitation to how you spread that product was the amount of people that had the internet. So Google made more internet through something called Project Loon, which is three things. It was a cool weather balloon, it was a free space optics device, it was a software-defined network. That company was housed at one point, just shelved. Google didn't know what to do with it. And this was back when Google didn't want to work with the military. So I worked with the founder of Excel, co-founder of Excel, Arthur Patterson. We spun the company out of Google, and that is now a standalone company called Illyria. And Illyria is our answer to command and control in places like Taiwan, Ukraine, places where the internet can be shut off at any time through terrestrial networks, and Illyria can create resilient internet on the back of that. So another company, CodeMetal, was a former aerospace engineer at MIT. They now make code translation software. We have all of these companies that are sitting, that have a bunch of old languages that cannot be used, and they're all defense contractors. CodeMetal is the Rosetta Stone that turns those companies into the AI languages of current. So everything that should have been mothballed can now be relevant again thanks to CodeMetal. And they're deployed on just about every major platform, and if not, they will be.
Alex, it's really, really interesting information. Thank you for joining us today, and congratulations on the new fund.
Thank you very much, Becky.
Thank you.
Coming up, pitting Anthropic versus OpenAI, we have a new analysis on when these two giants of the AI economy will start making money. We'll discuss that after this. Welcome back to Squawk Box. This morning's Wall Street Journal comparing the finances of Anthropic and OpenAI this morning. According to some documents reviewed by the journal, Anthropic expects to break even for the first time by 2028. The company focusing on business clients. OpenAI, though, believes its losses will be in the $74 billion range in 2028, with the hope of becoming profitable by 2030. Journal reporting also that OpenAI expects thinner margins than Anthropic over the next 5 years, but is investing more in chips and data centers. So a completely interesting and divergent approach to how to make money. Of course, Sam Altman going down this sort of volume path with hopefully more money on the other end, while Anthropic really trying to focus on higher margin customers in the context of business clients and enterprises. It's going to be very interesting to see what happens.
I was arguing with the chatbot again yesterday, just vociferously arguing because it was just so bad, the information I was getting. And they kept insisting on it, and it was biased information that we talk about all the time. In fact, it had to do with the shutdown. Okay. Finally, at the end, I go, you are a prime example of everything that's wrong with AI. You have no idea, nothing that you're saying is actually true. It came back and said, it's estimated that more than half of AI answers are incorrect.
Wow.
I mean, they
Which service?
More than-
I'm not gonna, what more?
Why are you not going to out the service?
Perplexity,
More than half.
more than half
Wow.
are
Okay,
incorrect
version of
answers.
Perplexity or not?
Are you on Flighty?
I'm getting on Flighty.
Well, I'm not getting on Perplexity.
I'm getting on the Flighty board. In fact, actually, I think I am on it, by the way, and I think I'm a paying customer, I realize.
I mean, I could not believe what I was reading. It was just like talking to someone so obtuse, and I'm like, you are the problem with AI. You have no ability
React.
to really understand an issue. All you do is give it all ego. So they better get going. Maybe they're better. Coming up, the CEO of location sharing app, Life 360, will join us to comment on earnings, a new deal, acquisition that is, and digital privacy. Stay tuned. You're watching Squawk Box on CNBC.
Well, next Squawkbox Life 360, best known as a family safety and location sharing app, is expanding its reach. The company announcing plans to acquire ad technology firm Nativo. Now, joining us right now is Life 360 CEO Lauren Antonoff. Good morning to you. I happen to be a customer. I'm a client, if you will. I'm a paying customer, no less. Our entire family lives on 360. It's kind of a crazy situation. Are you on it too?
Same.
A lot of people are, Lauren. How is this going to change your business, and how should parents like Becky and I, who are on this thing, think about you getting into this other business?
Yeah, well, I would say the addition of advertising helps us diversify our revenue and ensure that we can continue to bring great family experiences to all of our members in more and more ways. And so, as a family-oriented business, we know that it's incredibly important to protect members' data and make sure that we are continuing to use, even in ads, to serve members and bring more relevant messages to, let brands reach our members with more relevant messages in more relevant places.
So how is this going to work? Because maybe I'm missing it, and I was playing around with it last night to see. I don't feel like I see advertising today. Do I?
Yeah. So you're a paying member, so you won't see ads directly in the application. Our free members see ads in the application, but what Nativo lets us do is also deliver ads through other publishers. And Nativo has an extensive publisher network, and we can use our member insights to be able to bring those ads to people where it's relevant to them.
And separately, in terms of the kind of advertising that's going to be on it, I mean, are people I've got kids, obviously, who have this, who are younger. Are they going to be able to see this advertising too? And
No,
what can they see that hopefully adults, I'm hoping that there's going to be a differentiation.
Well, first, we hold a really high bar for all of our members in terms of the type of advertising that we allow on our platform, but we exclude anybody under 18 from targeting. We exclude sensitive places, and so we take a lot of precaution to make sure that we're using, common industry practices and a really high privacy bar to keep our members safe.
Can I ask you just a separate question? This is like a user question. I have never understood why, I think your software is great, but I never understood why this is not built into the iOS. I would have always thought that either Apple would buy you or replace you, effectively, I hate to say this, by doing it themselves, given that they do have Find Me and other things. They just haven't put it in the right format, frankly.
Apple's in the device business, we're in the family business, and that really differentiates us and allows us to build a set of services and experiences that are unique and that serve our members in ways that make everyday family life better.
How much of the business is a subscription business now going to be versus an advertising business long term?
Right now, our core business is around subscriptions, but we expect a lot of diversification over time. So right now, mostly subscriptions, but ads coming up more and more over time, so that there'll be more in balance.
And when you're raising money from outside investors or other things, and they say to you, "What is the moat? What's the moat that prevents Apple from doing this, or building their own products for families?" Which they clearly say they are. I don't think the services are nearly as good as they should be, but what do you tell them?
Combination of our focus on family, our commitment to serve families on all platforms. That's something that neither Apple nor Google wants to be available to all families, and something like 40% of our families actually have people on multiple phone platforms using our service and collaborating together. And just the overall experience that we build over making family life better and bringing convenience to our members.
Lauren, that's a great answer. It is a great product. I really do wish you well with it, and thank you for joining us this morning.
And we will bring your pets onto our platform soon.
And I got some suggestions for you too, so I may send you some notes. Thank you. I appreciate it.
Thank you.
It's just about 7 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Ross, along with Joe Kernan and Becky Quick on our Tuesday morning. Among the day's top stories, the Senate passing a bill to fund the federal government through January. That bill passing 60-40. It still needs to pass the House, and President Trump needs to sign it to end the shutdown. What a beautiful shot of the Capitol right now, live there. Meanwhile, no relief yet for air traffic controllers. They're about to miss their second paycheck. And airlines are expected to cut 6% of flights. That's starting today. FlightAware is saying 1,400 flights have already been canceled today. And SoftBank reporting a $19 billion gain for the Vision Fund in the most recent quarter, driven by its investment in OpenAI and electronic services firm PayPay. Now, SoftBank also revealing, and this is big, and I don't know why we haven't focused more on this, it has now sold its entire stake in NVIDIA for $5.8 billion. It made a small fortune doing that. It's doing that, I believe, in part to fund its investment in OpenAI. So taking money from one pocket to put it in a different pocket. Of course, so much of NVIDIA's future is being funded potentially by OpenAI. It's also selling part of its T-Mobile stake for $9.2 billion, but speaks volumes about where at least Masa-san thinks the future in terms of valuations lie.
And President Trump warning that a Supreme Court ruling against his tariffs would amount to a heavy blow to the country. On Truth Social yesterday, President Trump said those opposed to his tariffs are lowballing the amount that would need to be paid back in the event of an adverse ruling. He expressed concern that the Supreme Court isn't aware of the true cost of overturning the tariffs and put the payback figure at more than $2 trillion. Earlier this morning on Truth Social, once again, the president upped that figure to $3 trillion and said it would not be possible to ever make up for that kind of drubbing.
All right, let's check on the futures this morning. Dow futures up by about 27 points. S&P futures off by 10. The NASDAQ down by close to 85, or just over 85 points. Let's get over to Don Chu. He's got a look at this morning's pre-market movers. Don, yesterday it was the AI reflation trade. What's happening today?
So far we've got a lot of moves tied to earnings this morning. We'll start with shares, Becky, Andrew, Joe, about Rocket Lab, which are popping just about 9.5% right now this morning after its third quarter revenues hit a record due in part to several new launch contracts. The company signed 17 launch contracts for the third quarter, bringing the total to 49. CEO Peter Beck saying that the initiatives from the federal government, including the Golden Dome missile defense system, contributed to the company's revenues. Now, coming into the week, Rocket Lab stock was up more than 100% already year to date. So over the last year, 284%. Keep an eye on rocket fuel for Rocket Lab. Tesla shares, meanwhile, are down more than 0.5% at this point, and after its China sales dropped to just over 26,000 units in October. That's the lowest level in 3 years. That's down from over 35,000 units last month, which marked a 2-year high, according to the China Passenger Car Association. Tesla's share of that China EV market shrank to 3.2% in October, down sharply from the 8.7% the previous month. The company faces now a lot of competition from competitors like Xiaomi in China and others. Shares are still up about 26% on that 1-year basis. And then shares of CoreWeave right now down about 10%, just about 10%, after reporting weaker yearly guidance, even though its revenue for the third quarter exceeded estimates. The company is now providing infrastructure for AI companies, saw multiple price target cuts this morning from analysts at JP Morgan, from Evercore and Jefferies, amongst others. It also said it won an expansion from a large unnamed company during the quarter, in addition to deals with Meta and OpenAI. CoreWeave shares have soared up about 138% over the last 1-year period, and again, a big deal there. For more on this story, don't miss an interview with CoreWeave CEO Michael Intrater at 9 a.m. Eastern Time with our friends on Squawk on the Street. Must watch there when it comes to AI, Becky. I'll send things back over to you guys.
Okay, Don, thank you very much. We'll see you a little later.
Meantime, Meta's chief AI scientist, Jan Zen, now planning to leave the company to found his own startup, that's according to the FT, citing people familiar with the matter. The report saying that he's now in talks to raise funds for a new venture, and perhaps this was in the cards because, you know, Alex Wang came in. That was a huge hire, and Jan, who's been with the company for a long time, hasn't really gotten his way inside of Facebook.
But coming up, getting past the shutdown, Senator Jerry Moran of Kansas on the deal, heading to the House, will join us on set next. Then later this hour, FDA Commissioner Dr. Marty McCary is on the agency's decision to lift the warning label on female hormone replacement therapies. That's at 7:30 a.m. Eastern. Sparkbox returns in a moment. Senate passing a bill to fund the federal government through January. The measure will now need to pass in the House and then head to President Trump for his signature to end the 42-day shutdown. We'll probably be talking about 43 and maybe 44. I don't know. Join us now, Senator Jerry Moran of Kansas. He's chair of the Veterans Affairs Committee. He will honor Veterans Day by ringing the opening bell here at the NASDAQ later this morning. Welcome. And hence, here you are joining us on set, Senator.
I'm delighted to be here. We have a purpose in being here in addition to visiting with the three of you, and that is to honor Americans, veterans, on this Veterans Day. And the NASDAQ is celebrating with us to make certain that veterans know they are appreciated and thanked. And part of my job is to make certain that that veterans are more than just thanked, to express gratitude and respect, that we do our job in the nation's capital, in the committee, and in the Congress to make certain that the things that were promised to those who serve are the things that they receive.
Great, that's a good message, Senator. We were talking earlier, going to the news of the day, that Speaker Johnson has not guaranteed that hasn't referenced a vote. I mean, that's happening in the next day or so, is it not?
Everything I know about the House, and I was a House member before I was in the Senate, is that people are being called back, expected to be there on Wednesday.
Okay.
The House rules, the Republican rules require that there be 48 hours that people can read the bill before they vote. It's part of this reform and often demanded by the conservative groups in the House. But the reality is that text has been out there for days, and so it's surely, and the consequences of this shutdown, I mean, I don't mean to personalize this, but I'm an example of how difficult it is to travel, just coming to be with you and trying to get home to Kansas today. This is, I mean, in addition to all the things that are mostly making the news about certainly SNAP, food programs, Head Start programs, all those things are important. And this, in my view, is, we should never shut down. I've been through this before. I've never seen a shutdown that has good results, that you get something that is worth the pain that you're putting the American people through. It's a mistake, and we need the House to act as quickly as they can, get this country going. And I think something that's forgotten about this, that maybe this show would appreciate, is our standing in the world is harmed by the chaos that we demonstrate. Our inability to govern, our inability to work together, shows to our adversaries that we have some vulnerabilities, and it shows to our allies we're not that dependable because we can't get our own act together. This is on this Veterans Day, this is the United States of America, and we ought to be able to do the things that cities and counties and school boards do every year: pass a budget, appropriate the money, and do our jobs.
Right. Well, there are certain factions that don't really want the United States to succeed. We won't mention any names. So I saw Senator Kennedy, who's just a kick. I saw him on yesterday on a competing network. He says that Republicans haven't done anything since the big beautiful bill. He wants another reconciliation bill to do some of the stuff that was left out of the first one. And because you're never going to get a Democrat vote on anything, you only need 51 for a reconciliation. So do some more spending cuts. I don't know what else you might do. Maybe you could look at something about Obamacare to try to rein in the rampant price inflation that you're seeing on all the plans.
So Senator Kennedy is a kick, and enjoyable to listen to, and really, really intelligent and smart. Reconciliation is a narrow opportunity created in the rules that allow 51 senators to do something that they can't otherwise do, to overcome the filibuster.
You're allowed to do 2 more, he said.
And the rules allow us to do this again. It is a painful and difficult process, and the rules make it very difficult to do more than a narrow set of things. But there is certainly talk about that being another opportunity for the Republicans to increase the things that we think are to get done.
Short of getting rid of the filibuster and just making it, I don't know. I don't know what that would do. I don't know what the president would try to do if left completely no guard. I can't imagine. Of course, same with Democrats. I don't know I don't want to see what happens if either party gets rid of the filibuster.
I'm with you. I'm a supporter. I don't know, that sounds odd to support a filibuster, but it is something that I think is important, not just to the institution of the Senate, but but important to the country. And consider myself generally a member of the minority, whether the Republicans have the majority or the Democrats have the majority, because I represent a rural state in which our issues are different than the vast majority of the nation.
Yeah.
My ability to influence the direction that the country goes is enhanced on behalf of Kansans. When we have the opportunity to require it.
Mansion and cinema are both gone. So what happens what are the prospects for the Democrats retaking the Senate anytime soon?
It doesn't mean, it seems to me that the House is more vulnerable for that to happen. The Republicans in the House are more vulnerable than the Senate. But Republicans in the Senate ought to be paying strong attention to the American people, because I think there's a strong sense of dissatisfaction with the way things are.
Then you would agree to a vote in December as promised, if you were the House, on the extension of the pandemic era Affordable Care Act subsidies.
I mean, I think there's political consequences
If
to
you don't
ignoring
have
the
them.
importance of this healthcare issue. How you do that matters, and the way it was done.
So would you vote yes to extend it for a year?
I would work to change it from what it is today to work better and be something that is more valuable to the individual consumer, to the person who has the healthcare needs, than what it is today.
What's that look like?
Which is really about paying insurance.
So that's health savings accounts or something?
That is certainly something that we've long supported and believe that people need more control over their healthcare decisions. But to suggest that healthcare can be ignored politically or just as a practical caring for people can't be done.
So the prospects for a bloodbath in 2026 in the House, a lot people said 12 months in Trump world is, you have no idea what it's going to be 12 months.
The news changes every day. I think there are issues that, again, are driving people to worry about their future. They are economic, and they're feeling the pain. I mean, there's lots of things going on. You mentioned healthcare, but the business community. I mean, farmers in Kansas and trade with China and others is a hugely important issue. It's how we earn a living. Air capital of the world, Kansas, we manufacture. Tariffs and steel and aluminum, the supply chain puts people to work, and those things, everybody is, and I mean, even the air traffic, I mean, that plane that crashed with a helicopter on January the 29th originated from Wichita, Kansas. We, in addition to all the things that the shutdown has created, is we've not been able to further Secretary Duffy's plan to make air travel safer. All those things, uncertainty, people don't like. I don't like uncertainty. I want to know what tomorrow looks like. Hard to do in this world, but if the politicians, the elected officials don't deal with these economic certainty issues, voters will have a strong voice.
Senator, the outrage towards Chuck Schumer from the progressive wing of his party has some people wondering if politics of old, of the last 30 years or so, where you might see people working around across the aisles, is a thing of the past. Is it tougher to be able to work with anybody from this position, and do you see it getting easier anytime soon?
It is tougher. Politics and the divisiveness has changed in my time in the United States Senate. You feel the consequences. It's become one team versus the other. And we generally now are electing people whose goal is to fight, not solve a problem. I don't want to disparage anybody, but there's a lot of contention as compared to any cooperation. How does it change? The American people could demand that of elected officials. But in the shutdown, and you mentioned the Democratic leader, I've never seen the circumstance that I can recall in which the leadership of the Senate, Republican or Democrat, didn't take the lead in solving the problem.
Right.
Different than leaving it up to 8 senators on their
From a
own.
government shutdown, right?
That's an unusual, maybe again, not seen before, an unusual thing in which the leadership hands off solving this problem of a shutdown to 8 pretty courageous senators.
Some of them aren't Durbin's not running again, right? And Shaheen's not running again. I don't think others are in some pretty... It did take courage. It took much less courage not to do anything for all the others, I think, including Schumer. He didn't... he can't win for losing in this case. He didn't fold, but by losing the other rate, he's getting blamed anyway.
I don't know whether this is true, but one ought to think that voters will reward people who do their jobs well.
Well, then he shouldn't be. Then he sure shouldn't be. Did he do? Whose job did he do? For the American people, or for the progressive wing?
That is where I was headed. We all have our, the things that pull us.
Right.
But there's ought to be things that pull us together. And Veterans Day might be the time to remind people, remind ourselves
Good point, yeah.
about the value of public service. Nobody who was called was drafted or volunteered for service that I know of did so for Republicans or Democrats. They did it for their families, their neighbors, a sense of responsibility, a better world.
Well, you're not in Kansas anymore. You're in Mamdani land, in case you didn't notice. This is New York City Center. We got our own things that we're talking about here. Wow. Thank you for being here. Thank you for bringing that important message to us.
Thank you.
Thanks for writing a good book.
Thank you, sir.
Yes, sir.
Coming up, fantasy sports platform Prize Picks partnering with Polymarket to expand into the U.S. predictions market. This is sort of the next trend in all of this. We're going to talk to Prize Picks CEO about that partnership. Competition gambling, scandals, and so much more. And then later, SoFi launching crypto trading on its platform. CEO Anthony Noto will join us for a first on CNBC interview. That's at 8 a.m. Eastern Time, right here on Squawk. Don't go anywhere. Squawkbox fantasy sports platform Prize Picks partnering with Polymarket to let users wager on real-time sports and cultural moments as both all of these kinds of things expanding into regulated U.S. prediction markets. Joining us right now is Prize Picks CEO Mike Ibarra. Good morning to you. We've been talking about sort of this move and also the relationship between sports and prediction markets writ large. Do they ultimately converge? Is that what this is all about?
Well, first off, it's great to be here. Thanks for having me. Prize Picks, we're excited. This week, we're announcing Prediction Markets is coming, rolling out this week to the United States. And I think it complements our business very well. I don't think it's one takes over the other. This is about expanding the number of customers that we have for our product, but also enabling us to enter new states such as Washington and welcome millions of more people into the PrizePicks environment.
So explain what you do relative to, for example, some of the perhaps even bigger sports betting sites.
Yeah, well, I think a lot of people think about, is prediction markets just like online sports betting? And there's a couple of key distinctions there. In online sports betting, those operators create the lines and they build in profit into those lines. You're playing against the house. Prediction markets is peer-to-peer. And what that means is, it's supply and demand. Is it A or is it B? There is no against the house market there, and I think that's very important to understand.
When you think about this baseball scandal that we're looking at, or you think about even Brian Armstrong at the end of that conference call last week, rattling off a bunch of key terms that effectively people were betting on, and he was doing that, I think, to troll folks, less to manipulate the market. Does that concern you about how these markets can work and how manipulatable they may very well be?
Well, I think it's important to make sure that we partner both at the state level and the federal level, along with the leagues as well. PrizePicks is the only online sports operator or daily fantasy sports operator that has a FCM license by the NFA and the CFTC, the federal regulation that happens for prediction markets. And that's important to us, not only to be legal, but also the regulatory approach and the long-term viability of the business.
No, I appreciate that. I'm asking maybe a slightly different question, which is, when you can bet on everything, invariably there are going to be people who are insiders that historically have not been insiders, right? It's not like being a CEO of a company. Every public company CEO, for the most part, hopefully knows what the rules are. They know what they can and cannot do. If I'm betting on, where the wedding is going to be this weekend, and the florist knows the answer, the florist may not know what the rules are, and the florist may tip off their friend.
Yeah, well, PrizePicks, we're not going to offer everything that's out there. We're going to make sure we curate what's available that's in the interests of our players, but also something that we believe is fair for everybody to participate in. But your point is right. There's a lot of regulation happening. We work very closely and very mindfully and carefully with both regulators at the state level and the federal level. This is an incredibly fast-moving technology and industry right now, and there's opportunities on both sides to continue that collaboration and make sure that it's fair for everybody playing.
Do you think, by the way, that for example, Major League Baseball should shut down the ability for folks to be able to bet on pitches?
Well, I think there's a discussion between the leagues and all of the operators on how to best ensure the integrity of the game, but also enable the millions of fans that enjoy, whether it be daily fantasy sports or prediction markets.
So where do you land on the actual answer to that then?
I think some areas we can work together to limit the betting or the contest in certain scenarios.
Pitches, let's do pitches together then.
Yeah, pitches is something Major League Baseball announced with several operators. I think the industry should embrace scenarios like that.
And then longer term, and this is sort of where I was going maybe with my first question, do you see a demonstrable convergence between the prediction markets and betting sites? I've always thought long term that these folks, everybody would come together, maybe get bought out, or there'd be a whole bunch of mergers, given that I think from the outside, from the customer experience, it may actually not be that different whether you're betting on the house, betting against the house per se, versus betting on those markets. And because you have a group of people, an audience that is basically wants to bet one way or the other, that all of those options will ultimately be available, but they likely end up becoming available on one or two or three big platforms as opposed to the way it's set up now.
Well, I think you're going to see a lot of new players in the market, and the more competition that comes in the United States, frankly, the more innovation and the more customer value you'll see. At PrizePicks, it's important for us to have a single app experience across daily fantasy sports and prediction markets. But we welcome the competition. You know, we hope that a lot of new people come in here and it'll push us to innovate more and frankly drive a lot more customer value.
Okay, Mike, thank you. It's great to talk to you this morning. Appreciate it.
Thank you.
Thanks.
All right, let's take a quick look at the price of crude oil right now. You'll see that right now, crude oil is just above $60 a barrel, $60.48. We're going to get into energy prices and much more with Chevron CEO Mike Wirth in a First on CNBC interview tomorrow morning at 7:30 Eastern Time. He's going to be speaking to the street at Chevron's Analyst Day tomorrow, but he will speak to us first right here on Squawk Box. Right now, as we head to a break, here's your national forecast with AccuWeather's Bernie Reno.
It's a windy and cold Tuesday across the Northeast. 42 degrees, your AccuWeather exclusive forecast in New York City. AccuWeather real field temperatures below freezing all day. Sunshine, cold start in the Southeast and Atlanta, better in the afternoon, and it's warm across the West, at least for now. If you're doing any traveling, wind will cause problems in Boston, New York City, and Chicago. Looks great, though, in San Francisco. To help you make the best decisions and be more in the know, make sure to download the AccuWeather app today.
Still to come this morning, the FDA removing the black box warning on female hormone replacement therapies. FDA Commissioner Dr. Marty McCary calling the warning labels an American tragedy. He will join us next with more on this discussion. Squawk Box, we'll be right back. questions around the use of female hormone replacement therapy for years have kept women on the fence about these treatments, but in a new Wall Street Journal opinion piece, FDA Commissioner Dr. Marty Makary says that it is time for drug manufacturers to remove black box warnings from these products because they've inappropriately scared women off. FDA Commissioner Dr. Marty Makary joins us this morning to go more in depth on this. And Commissioner, thank you for being here today. This is a really big deal and something that probably is not talked about often enough, but there was a Women's Health Initiative study back in 2002 that proclaimed that women who use these therapies, estrogen and progesterone, have a much higher risk of things like heart disease, breast cancer, associated other problems. And when this study came out, it cut the use of hormone replacement therapy by almost 50%. What happened? What are you looking at that makes you think we need to rethink all of this?
Well, that's right, Becky. That was a real American tragedy. The fear machine that started in 2002 with that headline took on a life of its own. And tragically, 50 million women in the United States since then have been denied, not offered, or convinced to not take hormone replacement therapy when they go through menopause. And what happened back in 2002 was that the study went to the media. The authors took it to the media and they broadcast scary headlines about it causing breast cancer and increasing cardiovascular disease complications, when in reality, no subsequent clinical trial has ever found that hormone replacement therapy increases breast cancer mortality. And the cardiovascular complications are a function of when you start hormone replacement therapy. When it started more than 10 years after the onset of menopause, then yes, the cardiovascular complications invert the risk-benefit ratio to make it unfavorable. That is, that there are cardiovascular complications. It needs to be started within 10 years of the onset of menopause. And when it is done that way, it dramatically reduces heart disease. In one study, a 30 to 50% reduction in heart disease, and in another study that just came out 2 years ago, a 48% reduction in heart attack deaths. Well, heart attacks are the #1 cause of death in women, and that's just one of the profound long-term benefits of hormone replacement therapy, on top of alleviating the symptoms of menopause, the hot flashes, night sweats, mood swings, weight gains. There are 50 plus different symptoms of menopause. 80% of women experience them. It is not like I was taught in medical school where, oh, some women go through those symptoms, but they usually last a few years and they're mild. No, they can be severe. 80% of women experience them and they last on average 8 years. And when you look at the long-term benefits alone in reducing cognitive decline by up to 64%, reducing Alzheimer's by 35% in some studies, and reducing the rate of bone fractures, those long-term health benefits are profound.
Yeah, I mean, that's a pretty compelling argument for why this should at least be considered and discussed between women and their doctors. Dr. Makary, there was a Yale medicine write-up about some of the flaws, the critical flaws, they said, with that 2002 study by the Women's Health Initiative. Just for starters, they exclusively studied women who were on average 10 years post-menopause with an average age of 63, which is a demographic that's already vulnerable to cardiovascular disease. And secondly, they only evaluated one delivery method, a daily pill that combined both estrogen and progesterone. And I believe the delivery methods have gotten a lot better since then.
That's right. Now there are more identical forms to the intrinsic form of estrogen that a woman's body produces. The slight increase in breast cancer observed, that is breast cancer diagnosed in that original study, was attributed to the type of progesterone use called MPA. It is no longer a type of progesterone commonly used for hormone replacement therapy. Again, it did not translate into an increase in breast cancer mortality. If you look holistically, well, arguably with the exception of antibiotics and vaccines, there may be no medication that can improve the health outcomes of women on a population level more than hormone replacement therapy. And so this is a message we want people to know. Unfortunately, around that time in 2003, the FDA slapped black box warnings. It was part of a group think. It was a pile-on. It was not scientific or rational. And so we announced yesterday we're going to be removing those black box warnings. We want women to have the right information. All of these issues of women's health have not received the attention they deserve in a historically paternalistic, male culture dominated medical establishment. So in the Trump administration, we're elevating issues of women's health that have been underappreciated, underrecognized, and underfunded. You saw our announcement on IVF a few weeks ago. And so this is, I think, one of the bigger ones that impacts every single woman in the United States.
Yeah, I mean, we don't want to swing in the opposite direction. I'm guessing you're not necessarily suggesting that every woman should be on this, but it should be a conversation women are having with their doctors, and that there is a much more kind of open and educated discussion that's taking place?
That's right. There are some contraindications, like an underlying predisposing risk to blood clots, somebody with active breast cancer, somebody who may have had breast cancer in the past and their doctor has a concern. But those contraindications are rare. And the vast majority of women who go through menopause, which is 2 million of women each year, are great candidates for hormone replacement therapy. It is a conversation with your doctor. We're not promoting a product here, but we are getting away from the fear machine whereby women would pick up these products, they bring them home and they see this very scary black box warning that is not nuanced as it should be, and they decide not to take it.
Is it simply women who have experienced breast cancer who should be more concerned about this, or women who have had any type of cancer? Because I've spoken with women who've had uterine cancer, who have had bone cancer, other issues, who've thought, I shouldn't do this because I've had cancer.
Yeah, so there are a few types of cancer, and it's the types of cancers with estrogen receptors. Now, every cell in the body has an estrogen receptor, which is why in somebody without cancer, there's sort of brain health benefits to taking hormone replacement therapy. But when a doctor sees a condition where there's an upregulated estrogen receptor that could interact directly with the cancer, they're going to recommend against it, and that's a well-accepted practice. And there are a couple of those well-accepted practices. Doctors generally don't prescribe hormone therapy if you're over age 60 or more than 10 years after the onset of menopause. So that's why it's important for people to have the information when they go through perimenopause early on. You know, 50 million women are really a lost generation who have not experienced the benefits. And for many of those women, they're angry, and they have a right to be angry.
Yeah, I hear that, I feel that. Perimenopause sets in at what age, typically?
Perimenopause is typically 1 to 3 years before menopause itself, which happens roughly between the ages of 45 and 55. And that's when the estrogen levels intrinsically go down. And it's interesting, you go back to the Mayo Clinic studies in the 1920s, what they noticed is that young women in their 20s who had their ovaries removed for reasons like cancer or part of a hysterectomy, they went on to have severe heart disease in their 30s and 40s. Well, what's going on there? It suggests a profound, powerful cardioprotective effect of estrogen. And that is why the studies now have caught up and is showing us that it is probably one of the most powerful medications a woman can take to reduce cardiovascular disease. By comparison, statins reduce cardiovascular risk by 35%. Estrogen reduces cardiovascular risk in postmenopausal women by 30 to 50%. So this is something that needs to be a part of conversations. Unfortunately, menopause was not taught in medical schools because there's a feeling that, oh, well, the only treatment out there causes cancer, and therefore there's no point in teaching about menopause. And so tragically, we had about 2 minutes in menopause education in medical school. It's something every woman experiences. And as a result of this kind of mismatch, a woman is more likely to be prescribed an antidepressant for a mood swing of menopause than they are estrogen.
Wow. Dr. McCary, thank you for leading up this charge. Thank you for joining us today, and I hope a lot of people are listening.
Thanks so much, Becky.
Thank you.
All right, coming up, Italy may be about to take its pasta and go home. More on the tariff tiff that's about to boil over. And a quick programming note, AMD CEO Lisa Su is going to join us tomorrow on Spotlight. Italy's biggest pasta importers are preparing to pull out of U.S. stores as soon as January. They say tariffs and anti-dumping duties totaling 107% will make doing business in America just too costly. The tariff on Italy is 15% for most products, but the Commerce Department announced a 92% anti-dumping duty on pasta made by 13 Italian companies. The Commerce Department cited a long-running probe into pricing practices and complaints that accused Italian producers of selling pasta in the U.S. At below market prices. Apparently, the producer of this hour is this beside himself. And to make matters worse, it's Contino's birthday. So
Happy birthday.
How do you do?
Happy birthday, Rob.
How do you do? Slap in the face. Yeah. How do you do? So that's your birthday present, Rob? No pasta. Could be a blessing in disguise. We might live a long time. You're welcome.
Okay, we gotta go. He's next.
We want many more
Let's tease
birthdays.
it. Paramount Skydance rolling out its first quarterly report since the merger, which included some new cost-cutting targets and future streaming plans. We'll break it all down next. And SoFi CEO Anthony Noto is going to join us first right here on set for a first on CNBC interview. He's got some big news for us. We'll talk about it when he joins us in just a little bit. Don't go anywhere. Welcome back to Squawk Box. Paramount Skydance shares trading higher. The company reporting its first quarterly results since that merger. Paramount saw growth in its streaming division and raised its cost-cutting target from $2 billion to $3 billion, also planning to raise streaming prices in early 2026. Joining us right now with more on those results is Robert Fishman. He's MoffettNathanson Senior Research Analyst. Good morning to you. How much you focused on what you heard from David Ellison last night as it relates to the earnings themselves, some of the cost-cutting measures and the like, versus whatever you think the future of their effort to buy Time Warner Discovery is?
Yeah, good morning. So clearly the company laid out their 3 North Stars in terms of supersizing the investment and really investing behind the creative engine. That we've already seen some of those deals like UFC and South Park. The second one being the DTC streaming and getting to global scale. And third, that you mentioned in terms of the efficiencies. But ultimately, we think that the 3 of these North Stars really will be accelerated by a deal with Warner Brothers Discovery. And I think that's what investors are clearly still looking towards.
And what is your expectation in terms of a price tag that you think the investor class in Paramount would feel comfortable with buying in to Warner Brothers Discovery?
So that's the ultimate question there, and really I think what it comes down to is how many bidders is going to be at the table for these Warner Brothers assets. Clearly there's a lot of really great premium IP when you start down the list of the Warner Brothers studio, including DC Comics. Obviously HBO is one of their crown jewels, and if you think about including the cable networks, that brings some sports portfolio along with other assets. So when you think of what the combined bid of that is going to be for Paramount, if they're bidding on the entire company, you're going to have to pay a significant premium to even where the current levels are for Warner Brothers Discovery.
So Robert, you know, the current bid as we understand it is $23.50 per share for Warner Brothers Discovery. At what number is there a revolt? That is actually the real question. In terms of at what number does the shareholder of Paramount say this is a great deal, and at what number do they say this is just too much?
Well, the terms of how they get there, I think, are almost more important in terms of what the number is, because obviously if you do have the backing of Larry Ellison and potentially even other private equity bidders, what the dilution will be to the Paramount public shareholders today could be more limited. So it's a hard question to answer because we don't yet know the terms. If the full underwriting is going to be from the Ellison family, obviously that helps the public shareholders on the Paramount side digest that potential deal and pay even more, including if there is a bidding war for some of the assets or all of the assets, depending on who that ultimate bidder is.
Okay, so if you're a betting man, and we have a lot of folks who are watching right now trying to figure out how to bet this, handicap this situation, do you see a scenario in which David Zaslav, who runs Warner Brothers Discovery, is able to get, we'll call it the equivalent of $30 a share, which seems to be the magic number that people keep talking about, and when I say the equivalent of, either a complete takeout at $30 a share for the entire company, or something that resembles $30 insofar as one buyer, potentially even a Comcast parent company of this network, or somebody else buying the streaming HBO piece of it and the studio piece of it, and then matching that with whatever value you think is in the legacy business that's being spun off, and effectively telling shareholders that this is worth the equivalent of $30.
Yeah, so we think a $30 per share bid for Warner Brothers Discovery is definitely achievable, even more so when you have that +1 bidder. And so it aligns so perfectly with the Paramount assets when you think about the studio overlap. Clearly, in terms of their goal to get to DTC streaming scale, the way to do that is put it together with an HBO Max, because that will very much accelerate their timeline to get there. As a standalone service, they are still subscale today, even with the investments that they've made. So we think that the alignment with the assets on the Paramount side are very natural. You mentioned Comcast. I mean, clearly there's a lot of alignment there. So we think as long as you have a +1 bidder in this process, and you might be more than +1, you could get to that $30 mark.
Who's your +2,
higher.
Robert? Who's your +2?
Well, the question that's been thrown around is Netflix or any other digital player really gonna go in on this asset and make a significant bid? We think all of the companies right now are clearly looking at this asset, as they should, because it is such a unique asset and probably a once-in-a-lifetime type of opportunity. But at the same time, can they all bid? That becomes a different question. So we think that there will be a +1, most likely Comcast, but still waiting to see if Netflix and others are willing to write a big check here.
Real quick before I let you go, Disney, YouTube, Google, of course, parent company of YouTube, Alphabet, parent company of Google. What do you make of this fight and what's happening here?
It's a really unique moment in time because the leverage between the two is up for debate, right? Because clearly having the backing of Alphabet and the parent company behind it allows YouTube to focus on their long-term goals, and their long-term goal seems to be paying less right now for the content. On the Disney side, they clearly can't go too low on the price because of other deals that they have with other larger providers today. So it's really a unique moment in time where Disney has the ability now to capture some of those lost subs on YouTube TV through their own services as well. So we'll wait to hear an update from Disney in terms of the strategy here, but we do expect a deal to happen sooner rather than later.
Robert, we appreciate your time this morning. Thank you, sir.
Thank you.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among our top stories this morning, the Senate passing a bill to fund the government through January aimed at ending the longest shutdown in U.S. history. That bill passed 60-40, with 7 Democrats and 1 independent joining most Republicans except for Kentucky's Rand Paul. That bill now goes to the House and needs President Trump's signature as well. The shutdown-ending funding bill includes a measure to roll back part of the 2018 Farm Bill, banning unregulated sales of intoxicating hemp products. Opponents say that it would wipe out hundreds of THC products in the $28 billion hemp industry. And air traffic controllers are missing a second paycheck since the government shutdown. Airlines are cutting 6% of flights. That's up from 4% last week. Nearly 3,000 U.S. flights were canceled yesterday, with 1,400 more cut today. On Truth Social, President Trump urged controllers to return to work or risk losing pay, adding that he would recommend bonuses for those who didn't take time off.
All right, here's the futures this morning. NASDAQ giving back some of those big gains from yesterday. Everything's down a little except for the Dow. Checking on Bitcoin and crypto prices also giving back some recent rebounds. 104.6 now on Bitcoin. Ether, as you can see now, 3,500. Let's get to Dom Chu with a look at this morning's pre-market movers. Hey, Dom.
All right, good morning, Joe, Andrew, Becky. Shares of SoftBank right now in focus. In Japanese trading, they were up about 2% in action over there this morning after revealing it sold its entire stake in NVIDIA for roughly $5.8 billion. It also sold part of its T-Mobile stake for north of $9 billion. Those sales are coming as the Japanese tech giant looks to capitalize on its bet on OpenAI. Now, despite those latest sales, SoftBank does remain tied to NVIDIA through other AI ventures. Those shares of NVIDIA, though, are falling about 2% in the pre-market trade, and T-Mobile is up about maybe 0.75% on the news here, so keep an eye on those. Another Japanese company in focus, shares of Sony, up right around 5.5% right now after posting stronger than expected operating profits for its second quarter, also raising its full-year outlook for that same metric. Sony's imaging and music businesses were its most profitable segments during the quarter, up nearly 50% and 28% respectively on that year-over-year basis. The company's gaming division, which has a lot of popular PlayStation brand games, was Sony's top revenue driver, but it did see a decrease in profits in the quarter. Sony also announced a share buyback of around $650 million, so keep an eye on Sony shares. And shares of CoreWeave are down about 9% right now after reporting weaker yearly guidance, even though its revenues for the third quarter came in better than estimates. The company, also providing infrastructure for AI companies, saw multiple price target cuts from JP Morgan, Evercore, Jefferies, and others. It also said it won an expansion from a large unnamed company during the quarter, in addition to deals with Meta and OpenAI. CoreWeave shares have more than doubled over the last year or so. Now, for more on that entire story, don't miss a big interview with CoreWeave CEO Michael Educator later on this morning at 9 a.m. Eastern Time with the folks on Squawk on the Street. Big interview there for those guys, Joe. I'll send things back over to you.
Okay, Dom. Thank you.
New this morning, we got the guy at the desk. SoFi launching crypto trading on its platform. Joining us right now, first on CNBC, is SoFi CEO Anthony Noto in town. Nice to see you, sir, in person.
Good to see you as well.
Okay, so what's going on here? This is a big deal.
Yeah, this morning,
Big deal for you.
it is a very big deal. It's a big day and a big milestone. Reverses the course of time.
It does.
We've wanted to be a one-stop shop for all your financial services needs, and one of the holds we've had for the last 2 years was in cryptocurrency, the ability to buy, sell, and hold crypto. We were not allowed to do that as a bank. It was not permissible. But in March of this year, the OCC came out with an interpretive letter that it's not permissible for banks like SoFi to offer cryptocurrency. So this morning we're launching, as the only national bank, the first and only national bank, the opportunity to buy, sell, and hold cryptocurrencies like Bitcoin, Ethereum, and Solana.
So I was going to ask, are we just talking about 3 for now?
We will expand well beyond 3. It'll be a pretty broad assortment. We try to differentiate on being fast, having broad selection, great prices, ease of use. So we'll try to give members, SoFi members, as much selection as they would like.
And what's the difference between going through you and going through Coinbase, or going through Robinhood, or somebody else?
Yeah, there's a couple of really big differences. First, we're a nationally chartered bank, which means we have the infrastructure, the processes, the financial conditions that provides the safeguards that a consumer would expect from a bank, which is going to allow us to scale responsibly. The second thing is, because we are a one-stop shop, you can do all your banking, checking, and savings at SoFi, your borrowing, and your investing, and now crypto. And one of the unique things about that is when you come to SoFi and fund your crypto investments, you'll fund them in a SoFi checking and savings account. That checking and savings account's deposits earn interest.
Say that again, you're going to fund it with crypto?
You're going to fund
your checking account.
You're going to fund your checking account with cash.
Okay.
And then when you buy
Right.
Bitcoin or Solana or Ethereum, the money will come straight out of your checking savings account. So when you're not putting cash to work, it's not sitting in an account that earns no interest, and it's not sitting in an account that's not insured. So the money will sit in an FDIC insured account up to $2 million is what we offer. And when you buy, it will instantly withdraw from that account and send it to the marketplace.
So here's a question. This seems novel in this moment. If we're sitting here a year from now, given this OCC decision, and every other bank in this country, how novel will this ultimately be? Meaning, do you imagine Bank of America and JP Morgan and every bank, Wells Fargo, all the big banks and everybody else will be doing exactly this?
I don't. And a couple of reasons for that. We're the only digital one-stop shop. They do not offer the breadth of products that we offer across borrowing, saving, investing.
Oh, yes, they
protecting, and spending. So we have the ability to not just buy cryptocurrency, but we're now providing the ability to send payments internationally via the Lightning Network, which is a crypto network, and we'll add others to that.
Why can't they? Why can't some of these sort of more traditional legacy banks do the same thing?
They'll have to answer why. I fundamentally believe that we put the member at the center of that what we do, and we focus on these things that are activities to do with your money, not products. And so the SoFi Money account is an account that you can use for international remittance, you can use for self-serve wires, you can now use for crypto buying, you could use for paying friends via email and Zelle. And so
You can
the whole
use it to
idea is
buy
to leverage
drugs.
technology to make moving your money as easy as possible, but also doing all the other things you need to do to get your money right.
Can we just put Bitcoin up on the screen for
You
a
can
second?
use it to
We're
pay
about
out
what,
briberies.
5,000 today? I don't know where we were.
So
So what do you make though of how your your clients who may be buying this should be thinking about this? Should it be digital gold? Should it be a speculative asset that they're sort of trading? What do you think of this?
The first thing is we've asked our members what they want, and 60% of them have said they would like to invest in crypto, but they want to do it from a regulated entity like a bank, and that's what we are, and so that's one differentiation. The second is it is a highly risky asset.
don't believe
It should be
you.
a very, very small piece of a total portfolio, and people should dollar cost average into it and make sure they stay very diversified. Because it is risky and it is volatile, you could lose all of your money, and we want to make sure that our members understand that. But they do want exposure to that, just like people wanted exposure to Amazon back in the mid-90s. Risky, now it's $1 trillion company.
What is your exposure to all of this in terms of the risk to the system? If everybody were to do what you're doing, what kind of exposure would ultimately the taxpayer have if all of this, if Bitcoin goes from this to, loses 50% of its value?
It's like any asset, if it becomes overvalued, that risk increases increasingly over time. If there's a lack of liquidity, that risk increases, and those are all things members should understand. We provide education on the platform, and in fact, when we used to provide cryptocurrency investing, we would have a warning just before you hit buy that said, this is a risky asset, you could lose all of your money. In our press release, we say that exact same thing today. So it's just another asset that's not proven over the course of centuries, that will take time to level out and become more stable from a price and valuation
Can I
standpoint.
ask, does the Noto family invest in crypto right now?
Yes, we do. I have about 3% of my investable assets in cryptocurrency,
Mostly in Bitcoin, or what's the?
mostly in Bitcoin.
And we were early?
I was not super early. We've done perfectly fine. We have exposure to it because, one, I believe we're investing in a technology, not in a currency. The analogy I use with people is, imagine if in 1990 you could have bought a piece of the World Wide Web through some coin called the World Wide Web coin. It's very similar to that. These are networks, they're communication networks used for payments and other applications.
What do you make, we were talking to Kathy Wood just this week, or last week, I guess it's Tuesday, last
Don't
week.
be
we were talking to
bad-mouthing
Kathy
her.
Wood, and she, has had a very sort of sky-high.
Sorgan, watch your
valuation
mouth.
For Bitcoin, I think it was $1.5 million she thought it could ultimately get to. She took that down, interestingly, last week.
Oh, you
and
suck.
Suggested that the success of stablecoin
Don't be bad-mouthing my
so
woman.
much higher than she thought, that in some ways, stablecoins for transactions could ultimately crowd out Bitcoin that might have been used for that.
Big picture, we believe blockchain and cryptocurrencies are a super cycle, technology super cycle, just like AI, and it will be pervasive across all the financial system. Stablecoins is one example that will fundamentally change payments. SoFi will launch SoFi USD, hopefully in January. That will be backed dollar for dollar by reserves. Because we are a bank, we'll actually put the dollars in our Fed bank account, so we'll have no liquidity risk, no credit risk, and earn Fed funds. That's a really attractive vehicle for people to use digital currency for, and that will compete with other digital currencies. It's not clear who will be the winner. Stablecoins are one example, but if there's a huge proliferation of stablecoins and they don't have the liquidity that I mentioned, they don't have the credit risk and duration risk, that could become a very risky asset also.
Should we worry about stablecoins in the following way, which is that hopefully if the stablecoins are backed by something meaningful, like treasuries, that effectively takes treasuries out of the game to be lent in a different way?
Yeah, I actually worry quite significantly about stablecoins from operators that are not banks. Where are the reserves sitting? Is there duration risk for those reserves? Is there credit risk for those reserves? Are those reserves bankruptcy remote? SoFi, the answer to that is zero credit risk, zero liquidity risk, and working on bankruptcy remote. That's three elements that you have to think about with whatever stablecoin you use. Just because it's backed dollar for dollar doesn't mean those dollars will be there when you try to liquidate, just like a money market fund that breaks a buck.
We gotta go. This was great. You wanna put your media analyst hat on and tell us about Warner Brothers Discovery?
I'd love to talk about it, but
That's cool.
unfortunately, I'm not able to do so.
Thought I'd try. Anthony, it's great to see you.
Thank you.
And we should say on Veterans Day, we want to thank you, by
Thank
the way, as well, for those who served our country. And Anthony was one of those who was a graduate of West Point, served 4 years in the U.S. Army. During his service, he earned the coveted Army Ranger tab and achieved the rank of captain. So, remarkable day.
Thank you.
Thank you.
When we come back, a central bank divided, economist Judy Shelton on the Fed's rate path and the dissent among some for a cut in December. And then technology and tariffs. Facebook co-founder Chris Hughes will join us for a wide-ranging interview. We'll be right back. come back to Squawk Box. The futures are mixed this morning. You've got the Dow in positive territory. It's indicated up by about 33 points. NASDAQ futures off by 100 and the S&P futures down by 12, but it does come after a very strong performance yesterday for both the S&P 500 and the NASDAQ. In fact, for the NASDAQ, it was its best performance since the end of May.
You got a problem with that?
Meantime, FCC Chairman Brendan Carr calling on Disney and YouTube TV to work out their differences and introduce...
You know what? Sorghum's already pissed me off this morning. Bad-mouthing my woman, Kathy Woods. I will not tolerate it. I will not tolerate it. Just give me 5 minutes with him. For I'm Washboardjim. I'm Washboardjim, the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. I'm here. I'm here. Matcha. Nice warm matcha. Well, my support was closer than the orb. I put the orb down here at 679.13 and I had 679.38. It looks like we might have hit 48. So, what time is it? I still got a whole hour. Oh my gosh, I still have an whole hour. Let's put this on the 5-day. Today's Tuesday. Volume highs. Google, NVIDIA might be ready at open. I'd love to see this down at 184, but I don't know about that. Regetta has got some volume this morning. Does it have news? These stocks are moving today. Cornwave, NVIDIA, Regetta, no news. Regetta Computing posts wider third quarter loss. That's not good. Not good. Not good. AVGO had a run yesterday and the day before. It's at support. Just at support, which means it can go lower. Tesla's at support. Double bottom at open here. It could drop $6 today. Kroger, high grocery prices. If anything should be at least affordable in this country, it should be at least food. Thank you, Joe Biden, you piece of shit. I heard Joe Biden this morning said under his administration, inflation was down. Inflation was down, he said. Oracle's at 237 with a double bottom, inverse head and shoulders. This looks like a good support right here. Could just go a little bit lower, but not much. Oracle, keep a good eye on it. Google hit my support on Friday. Now we're at a double top, higher high. Netflix has got a split coming up. Called the bottom on it. They were buying it. Remember, they were buying it on this news of the split, and it tanked on them. Don't ever buy it when they put the word out that they're going to split. You buy it after the split. For I'm Washboardjim, I talk about chart patterns, moving averages, and not being a homosexual. Charting the SPX right here. Looks like we got a huge gap, so that support level's got to hold. And there's your pivot point. I'm going to change that color. A little too bright. Oh yeah, that's perfect right there for low support if it dips on down for a strong buy. Right there. And I'm going to change that to a red color. Oh yeah. I like that a lot right there. I mean, if it ever gets down to there, I'm 67.20. I'll go long. And pivot point is going to be right here inside that channel. Right there. And first support right there. Okay, let it be said, let it be done. I had joy, I had fun. SPX. Oh yeah. Snap. Starbucks. Starbucks had a big pop yesterday morning. China. Oh, AMD at open. It hit my support level. AMD might be the one to watch this morning. Apple's already had a breakout. Yeah. Jimmy likes AMD. 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 We held the 9 on the weekly on the SPX. Definitely at the top of my support channel on AMD. Pay attention to what I'm saying. Whoa. Strong buy if it gets to 234.82. Do you understand? Let's remove this and put in this. And change that. You can do this. You can Wemo that. You can Wemo this. You can Wemo that. You can Wemo this. You can Wemo that. You can Wemo this. You can Wemo that. AMD is very interesting. The big investor sold its stake in the AI chip maker, NVIDIA. Yep, I think I got a little buzz on that there, matcha. It's starting to hit me now. Matcha is a healthier caffeine than coffee. It's a cleaner and sustainable high to where coffee can make you drowsy. And that's a fact. For I'm Washboardjim. I talk about chart patterns, moving averages, and being a narcissist. My goal is to drink these 2 big glasses of water today, and I will do it. My next goal is to take off my shoes and put on my house slippers. And I wonder how many women do not wear underwear in the United States. I wear underwear. In fact, I buy 2 full packs every year. The only time I don't wear underwear is when I'm sleeping. For I am Washboardjim, Spelunk. Good morning, Bobby. Good morning, matey. One of the ladies in here yesterday said I look very professional. On YouTube. So what's going to be? This is a game I like to play every morning. I'm going to kind of go through the top of my head here. I was looking at boots this morning. I want to buy me a good new pair of boots all season, but I'd like for them to be a little bit waterproof. And they're going to be farm boots. Like these here look like a good pair, but I want to be able to wear them when I'm mowing the yard, and I can't have slip-ons. I no longer can wear my black slip-ons, so they got to be tied up. Now them look pretty good. Them are insulated. But I want to be able to wear them in the winter and also in the summer. I mean, my boots right now are really in bad shape. Bad shape. That looks like a good pair right there. Carolina men's. That looks like a pretty good pair right there. But I don't know if I want to get suede this time. Because if I do, I'd have to put mink oil on them. Which I did on my very first pair. So that looks like a good pair right there too. I'd probably get that. Maybe. Gotta be steel toe because I'll be out in the woods, cutting up trees and trimming out brush and shit. And I gotta be able to keep the chiggers out of my feet. Ticks and chiggers. And I don't want to get snake bit. These Carolina boots, they look like they're a real good brand, but they're expensive. I think I gave $50 for my last pair, and they lasted me 20 years. I definitely got my money worth out of them, if not longer than that. But I know I got them because of my job at nights, dealing with the snow and the ice. They got to be grippable rubber because I'll be out on ice. So we'll keep shopping. Yeah, I think I got a little buzz off that matcha. Matcha can get pretty expensive. Oh, let me see. I've got this before. No, not that one. I've got that before. That right there. You'll probably get some more. I like drinking it. It's healthy for you. It's a little expensive though, but make it in like a milk. Put it through my frothing machine. I got guy sent me one of these with a bowl and matcha. So the government's going to be open Monday, I think. Everything back to normal. I think yesterday was probably the run. We're going to consolidate off that. I'm liking where we're sitting here on AMD a lot. So if we hold that 242.09, we came back and touched it three different, well, we touched it here. And come almost yesterday and touched it again after hours, pretty close. So it should be good for a good buck. And then see if it breaks the 200. That's what I'm going to be watching this morning. And what is it? Oh yeah, I want to check out that bitch AMC. I called a bounce on this one here over the weekend. Last Friday. I'm not all in love with it. I'm just saying. So this is called top of my head when I go through here and I just kind of think of stuff off the top of my head. Boeing is under 200 bucks. Boeing gets FAA approval for certification flight test on the 777-9 jet airliner. So that's good news. Boeing offers new deal with higher bonus in bid of St. Louis workers' strike. That's bad news. They don't have money to be giving out bonuses. What they'll frickin' do is raise the airfare on us again. Flights will be back to normal in about a week or two. All I hear about is these union government workers. Trump's wanting to give a $10,000 bonus to the workers that actually stayed on the job and didn't bitch and complain. It's not his fault the government shut down. We had a little dip here after hours on Bind. Now they got that Walmart contract. Bind Meat shares are trading lower after the company issued weak fourth quarter guidance. So that's what it is. That's not good. That's not good. We could probably get it cheaper. United Airlines. Trump threatens air traffic controllers amid shutdown chaos. That ain't what I heard. He didn't threaten them. He offered them a freaking bonus. You get off your, I mean, I don't go to the airport very often. But when I do go, customer service sucks. Especially if you don't know how to use the airport. And you just want to, and they're big and you want to know where to go. When I hit that Charlotte airport in Charlotte, I'd seen so many sour grape faces. I was told to go one place. And then when I went to the one place, they said it was at another place. So I went to the other place and they said, well, that flight's not here. And then I went back to that same place and I said, it'll be here in a half hour. We're just American Airlines. And I said, well, shit. I've been all around this place. And then I get in line and I'm the last one on the plane and everybody's fighting to get on in the front. And I don't think it matters. It seems like a lot of people feel like they're entitled. At least that airport, and it was trashy. Under construction, the whole dang thing, it looked like it was. And I can see how difficult that would be. You'd almost have to build a whole new place, a building, and get it all cleaned up and fixed, and then. But it was definitely I just kept my mouth shut and been nice and just smiled. And, okay, ma'am. Nobody wants to help you. I was at Walmart this morning and I'm walking around looking at all the employees, you know, they all look drowsy and not smiling and stuff. And I seen these two guys down the aisle. They were just having a good time working and smiling. And so as I walked down there, the supervisor walked by him and said, hey, you have to go here and you have to go there. And I said, hey, I got something to say to the supervisor. I said, these two guys are the smilingest people here, and I really appreciate that. And I walked in there about a month ago, and this guy was harassing this chick, and I said, hey, you want to harass me, punk? He didn't have much to say. I said, learn how to treat women. PLTR had a good run yesterday. We'll see if SPY holds 679.38 or 13 in between there. Gosh. We're at 7:55. Facebook co-founder on tariffs. What's Facebook got to do with tariffs? Oh, Lord help me. Help me, Lord, help me. I wish they were like this when Biden had that high inflation. I was pissed. I went into my supplies store where I buy my supplies for my business and said, what? Paper towels that I buy were at $18.95. And then that first year of COVID in 2021, they jacked them up to $28 a case. And I said, what? This is a 30% increase in my price. I said, you're trying to run me out of business? Mop bucket. Last time I bought one, it was about $50. They wanted $149 for the motherfucker. I said, I can't believe you people. All of a sudden you jack these prices up to where I can't even afford them in your wholesale place. I can go to Walmart and get it for half that price. The same bucket. So I buy most of my stores up here at this expensive grocery store. I ain't paying them kind of prices. I told them. Unless it's something I really need. And of course, it's paper towels and toilet paper. And they jacked toilet paper up $20 a case, $25 a case. So now I'm paying about $80. This is good stuff. Okay. Oh well. I was looking at maybe starting a coffee roasting business when I retire. And I was looking at coffee roasters. I don't need a very big one, but I need a good one. I can do about 50 pounds a day, maybe 100 pounds a day, 50 pounds a day. $1,600 for that one. So I'm going to be looking at $7,000 for that one. $10,000. Well, that's huge. Oh no, it ain't. It looks huge. It looks huge. 6,000 for that one. And I don't want to be sitting there rotating it. It's got to be self-rotation. $52,000 for that one. Home and small business coffee roaster. I don't know if that'd be big enough. There's probably something. 22,000 for that one. Call it the Sneaky Snake Coffee. Oh, Jim Kramer, what you got to say this morning?
And then their CapEx wasn't as much as people anticipated.
We're going to work together on this interview. That's exactly what I'm talking about.
Sure, I'm happy to.
Yeah.
Cornwave.
So you think I was...
Cornwave, where slides despite revenue beats.
Yeah.
I said, we're pals. We have a lot to work on this because I think that my goal is at the fulcrum of whether there's real build out or whether I have to worry about the nebulous build out or what, you know what I mean? I have to worry about the Rigetti quarter. I mean, there's a lot of stuff going on that's just...
It's been sliding in a way.
Whether there's real build out or real demand. That is without question.
This looks good.
I think there are people this morning who are saying, you know what? There's oversupply. There's overbuilding.
Oh, we're at the 200 EMA. I like this one.
Conclusion.
Because there's a lot of people.
Where's the 200 SMA?
This whole thing is a little bit chimerical, and then you start
I don't
seeing
see it on here.
SoftBank, I figured that I got this morning. I said SoftBank. I see that they sold their stake in Nvidia. And the first thing I said is, wow, SoftBank's really in trouble. No, I come in and it's bad for Nvidia. I mean, give me a break.
We should be pretty clear that the exit on, I mean, compared to the market cap that was added alone just yesterday, it's not really
I think
material.
that SoftBank, look, I love Renee Haas. I don't know, do I want to be an ARM today? They got a big stake in ARM. Or is ARM they're going to be their
Just taken on.
I don't see it.
Mentioning this is they need the money in part to pay for the commitments that they have made, SoftBank, to OpenAI.
This
They
looks
are one of the larger investors there now.
They're now committed to some, I think it's 22 billion.
22 billion. Now they've been able to successfully syndicate, I think it's as much as 10, because it was originally over a $40 billion commitment. They have already put some of the money in. Obviously, OpenAI has an unquenchable need for
capital. That's part of the problem of what we're talking about.
Plus, Jim, the critics out there, the skeptics, Michael Burry, again yesterday, looking at the prospect of, in his words, understating depreciation, overstating earnings in the case of Oracle and Meta. Goldman had a nice chart of IG spreads, which I know we're watching. They have two lines. One of them is looking at 1990s tech, and then the other one looks at Gen AI. And you can see in their argument, if you index to 95 and 22, you'd be on the alert for something like that.
Well, there was, when you build fiber, which was the most expensive thing that was going on back then, and you have no customers, obviously it's going to lead to bankruptcy. In these particular cases, there's more than enough customers. That's not the problem. The problem is being able to build these very difficult structures. I don't know this, Mr. Murray. I have been around for 42 years, and there's always someone who got short something and did it right, and for the rest of their lives, they are celebrated as brilliant. And I totally get that, and they are brilliant. But I will not listen to someone who got it right once, involved in a completely different industry, and now has said charges that, by the way, you go to prison for. You go to prison for the charges you said. There's a prison right near, my wife's on board of Bucknell. Okay, there's two things in Lewisburg. There's Bucknell, and I really like them, good school. And then there's Lewisburg, not as good.
How is calculating depreciation?
The other one, overstating earnings. Go to jail for that.
He's just saying you
well, I just think when you hear overstating earnings, and I've been involved in cases where overstating earnings, it's justice. And the question is whether you go to jail or whether you don't. You ain't going to
Jim Cramer.
jail. And Lewisburg is a place.
How many times have you called a stock out and it didn't break out and it pulled back?
Right. All right, but all of
Come
that
on.
goes back to this larger question as to whether you raised, so whether there is
What about General
actually supply
Motors?
constraint, or whether in fact there's somehow overspending taking place that is going to go towards no actual return.
What happened in the last 3 minutes since you've come around to my view? That's the issue.
I'm not.
Oh, God. I can't take no more of it. Oh, Jenny, hello, baby. What's going on?
Try to compete right now more aggressively, frankly, with names like OpenAI and as well as Alphabet developing these most advanced AI systems.
She's wearing black, turtleneck.
Zuckerberg has really been focusing
It's not a good sign.
away on the longer-term horizon research efforts of Meta's fundamental AI research lab, which has now been coined by the acronym, of course, FAIR, otherwise known as FAIR. But we've seen really this overall role been taken since, by the time since about 2013.
Yeah, I think that little matcha gave me a buzz. I'm going to try it first thing in the morning.
After concluding that Meta had fallen behind its key rivals. So over the summer, Zuckerberg did bring in Alexander Wang to run a new super intelligence division. As we talked about, there was floated things like 7-figure salaries or 7-figure signing bonuses. I mean, it really got outlandish at that point, but they spent roughly $14 billion to hire, the
You need a haircut, girl.
28-year-old Scale AI founder and acquire a 49% stake in the company. So 28 years old, and worth, at least upwards of billions of dollars because of how much of an appetite there is right now for this top talent. We've also known that Meta Platforms has stolen away some of the talent from names like Microsoft as well as Apple, OpenAI, Alphabet, but it does feel like it's part of the broader shift right now that we're seeing overall with talent and these top engineers and these top really quantum thinkers that are right now being sought after by all of the biggest names in tech. We're seeing a natural turnover and also right now some trimming of the workforce glut that we had seen really since the post-pandemic era, where a lot of these companies are just trying to operate more efficiently, and that's resulted in some layoffs as well as just some turnover at these C-suite level type roles.
Thank you for that. We'll continue to follow that story here of Meta. And I wanted to move on because when we think about Michael Burry, this was a guy who really called the great financial crisis, head of the great financial crisis. He was calling out housing in particular in 2008. And so now people listen.
Oh, he was 2 years behind me, baby. Hey, what is the deal with your turtlenecks today? You know I don't like that outfit. And he was too late, 2 years after what I said. And I called the crash 2 years in advance. What I said is if Obama got elected, the market was going to crash. And it did. But you all want to blame it on the housing crisis. It wasn't the housing crisis. It was the threat of our democracy.
Frauds of the modern era. Last week, his, of course, Cyan Asset Management to take bearish positions in AI darlings like NVIDIA, Palantir, as he hinted at caution towards AI that has boosted a lot of this year's market rally. So in his most recent post, highlighting that hyperscalers have been aggressively increasing now their capital through purchases by NVIDIA chips and servers that only last, in his opinion, about 2 to 3 years. But according to Berry, extending the asset's lifespan on paper does let firms then spread the depreciation expenses over longer periods, which then lowers the reported costs and also does inflate the net income. So as his estimates, these adjustments could lead to a cumulative $176 billion understatement of depreciation between around 2026 and 2028. He further estimates that names like Oracle, Meta will also overstate their earnings by roughly 26.9% and 20.8% respectively by year 2028, and also share that right now firms have gradually increased their reported useful lives. This is not a new thing, but it's been really ramping up since about 2020. So this is fascinating. I mean, we know that the network lifespan of some of these products has been in question, but I've never really seen it called out to this extent and leading to these cumulative, huge profits from these major tech companies as well.
Yeah, and look, I mean, most of the tech names are down today. NVIDIA is down 2%. We talked about SoftBank and the $5.83 billion sell-off there. And you're mentioning Palantir here, down 1.5%. Most of the names, NVIDIA, Microsoft, Alphabet, mostly down arrows here today. And Palantir, just this month, down about 3.5%. Jenny Horn, great to see you. Thank you so much. Coming up, we'll get a look at the trading day, and Joseph Shapochnik's with us from Rainwater Equity, coming right up.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a
We've got 13 minutes after 9 o'clock. We have 17 minutes till the market opens. Are we ready? That's the question. Happy Vets Day to all our veterans out there. Good morning, Randy. Good morning, Livid Goose. Good morning, JM All-Rounder, Jesse, and call me everyone. Whoa. Today I'll call you Martha Stewart. He's getting ready to make his rounds. Well, I'm going to make mine right now with a hit tune.
some rips. Break out some rips. Break out some rips. Buying the dips. 3 black holes in the market scripts. Full flag waving, profit saving. Washboardjim, keep the trade winds blazing. Break out some rips. Buying the dips. 3 black holes in the market scripts. Full flag waving, profit saving. Washboardjim, keep the trade winds blazing. He teaches dummies, yeah, you and me, how to ride the waves of the S&P. Moving averages, patterns bold. The man's got wisdom worth its weight in gold. He don't stress, he don't shout. Jim
knows what it's all about.
Break out some rips.
Break out the rips.
Break out some rips. Break out some rips. Buying the dips. 3 black holes in the market scripts. Full flag waving, profit saving. Washboardjim, keep the trade winds blazing. Break out some rips. Buying the dips. 3 black holes in the market scripts. Full flag waving, profit saving. Washboardjim, keep the trade winds blazing. Break out some rips.
Boom, baby. Break out the rips. Okay, we now have 12 minutes left. Make sure your platforms are up. Oh, cough. I'm gonna go check my phone. Oh. Today for lunch I'll be having salad. November 11th. It'll be either the, I'd like to see how cheap we can get the 80s, but 83 or 82 for right now. And I'd rather go with an even number, but the 83s are cheaper. Start off with 5 on the SPY, maybe 10 if it gets down cheap enough. This for November 11th. And if we hit 68.1177 on the SPX, that's going to be your support for today. Do you understand? This is a Fibonacci chart right here. These are Fibonacci numbers for that time frame. And that's right up, and it held right at my support level. So, you know, that's pretty good. That's a pretty good setup. 50% pullback. We will see. Do you understand? We're at the VWAP on the /ES, and pretty good volume pickup into open. We have 6 more minutes left, and I'm making a, don't tell nobody, but I'm making some hot chocolate. Making some hot chocolate. It's our secret. Nicole, I hate that top. Oh, God. She's wore that twice now in the last 2 weeks. What are you, some kind of snake? Oh, is that a hint? She wants to join my club, the Sneaky Snake Trading Strategy. What is it, girl? Man, none of you girls have any cleavage today. It's going to be horrible. No cleavage at all. Oh, God. Why? I mean, I sit here and I wait all night long for this. Ladies and gentlemen, we are definitely setting up for a breakout here. Ready to open. So I'm going to jump into SPY. You watch. Now there is an inverse head and shoulders. Right there. I mean, if it dips on down there, that's going to be a strong buy. But yep, I wish the bell would ring right now. This is going to be interesting. Interesting morning right now. this ain't gonna work. Remove. Open up the note. This, oh, here we come. We're getting right there. Oh, this is going to be good. Okay. Randy? Only if you got the balls. We got less than a minute. I'm gonna jump in this thing, right it open. My ding-a-ling-a-ling, ding-a-ling-a-ling, ding-a-ling-a-ling. Oh gosh, it went down to 32 cents. So I'm going up to 680. $6.80 or 681. 681. $681 at 97 cents. Yippee-yi-yi. We're doing slow-mo again. Should have sold them when it was up there at 115. We're above the 9. Set a tight stop, this thing don't hold. because we came down twice already. So this really, for it to stay bullish, we need to hold that 9. I'm going to look at the SPX here. We're at the VWAP on /ES. And we almost hit my support level. We did hit that upper channel of that on the SPX. So it could drop more. Right now it's bearish. Unless we break the VWAP here on the /ES. And AMD. See, I said AMD at open. We had a dragonfly. They're pumping corn leaf today. It spies at the 200 and the 63. And the VWAP. Attempting to get SPX. Let me see. Trade 2 at once. And they're probably expensive. Not too bad. The 68.50s, if we hold, are at 240. Strike is 68.50. Come on, you bitch. Back to 240 right here. So I think it's telling us now it's going to go ahead. They've got a triple bottom on SPY. Interday. $240 for the SPX. So far it ain't working. We kind of needed to go right there. It'd be a little late start. I'm still holding to 200. That's the fourth touch. We had a real extremely good run yesterday. Applied down to 28. We got Nvidia down $5. Hims down $1. Coin down 6. Oracle down 4. Tesla down 6. Meta down 650. In the green, we got Oxy up, Nike's up $1.45. That's my Black Friday stock. Starbucks is up again. And Wendy's, I heard, is closing down a bunch of stores. We got Netflix up $11.50. Disney up $1. I don't know if I want to put Target on my wish list or not. /ES has to break the VWAP today. We're up here at resistance again on the SPX, and I'm down $50. And if we break out of here, I think I'll jump in if we break the 200 EMA, add more. We're at resistance right now, the 200 EMA. And get to the SMA. Man, this platform's really not doing it anymore. I hate to have to go to another platform to chart. Starbucks is double top. Yesterday's high. Come on. Let's do some VWAP breakage. The VWAP's right at the 200 EMA on the SPX. AMD created a new high. I really like this one this morning. Ooh, Apple again. God, Apple's just been crazy. I dropped the ball right there at 160. Not good. $150. I had it on right there. With 240, I got one, and I got 4 at 150. If this doesn't hold, I'm going to stop out. About even. I am now. Let's go. 190. Go. $215, $225. Yay. $230. $245. Now we're at the 200 exit idea, unless we decide to break out. $250. Woo! Turn down for what? Turn down for what? And they're still in the SPY. I added on them too. Gap up, gap up, gap up. 290. I'm out. For I'm Washboardjim, the founder of the Sneaky Snake trading strategy where I don't give up. Oh, watch your mouth. Oh, yeah. We're at $1 on my SPYs. We're at resistance. Oh, yeah. 104. Okay, I'm ready to go to the beach. Jim, you done did it again. My grandma wants to ask you a question. Is it true that you're single and that you haven't had sex in over 7 years? Well, ma'am, I have to take the Fifth Amendment. On the grounds that it might incriminate me. We're now back to 220. That's why, Randy. I accept your apologies. I accept your apologies. Did you erase it? Oh, no. I accept your apologies. I'd hear Randy say, "I'm sorry. I'm so, I'm so, I'm so, I'm sorry." I'm sorry. I'll never do it again. You have to admit that sometimes you just don't know which way you're going to go with it. But I don't give up. Randy taught me that. He says, if you first don't succeed, try again. Sheba, would you like to give me a good grade? We're now at the VWAP. Oh, I don't know if I want to dip by. I feel like I need to here at the VWAP. Let me look at that. /ES might hit the 63. So I'm going to give it just a little bit more. It could bounce here. If I was to go in, it'd be small. But I'm going to wait. There it is. There it is. 68.50s at $1.75. 70 cents. Right here. It's kind of bearish right here too, because it just broke below the 21, but we're at the 63, so I'm going for it. I don't know how he does it. I have no clue how he does it. Today I'll be having salad. Protein on the salad would be 2 eggs scrambled. Not darn it. Come on. 170. And we're at 140. 170 and 145. That's it. I have 6. 6 contracts. Ooh, geez. Now I'm going to have 12. God. That's nasty. Why? Okay, 120, 145, and 170. $1.39. Averaged up. We have a megaphone. We have a megaphone pattern, folks. We have a megaphone pattern. Will you please report to the front counter? Megaphone pattern. We have a megaphone. I never want to be left alone. Spelunk, spelink, I'm in the green. It's never been seen. Spelunk, spelink. I used to call my sister Penguin when I was young. And I called my other sister Miss Piggy. My sister had like a penguin nose, and my little sister was kind of chubby. Kinda. She was. We have a megaphone. We're now at $1.50. Jim, have you ever thought about selling? No, not yet. We are at a pivot point area. I could sell now. I do have $100 in my pocket off this trade. You have 12 contracts, is that correct? Yes. I have 6 at 120, 3 at 145, and 3 at 170. And after this, I'll be eating my salad because I've been up since 2. And I've had nothing to eat. Not even a Tritz. Well, I had a Trix. I did have a Tritz. What was that? Twix? a small little Twix candy bar, a matcha, a coffee with cream, and 2 other coffees. Come on, Megaphone, pay off. Could be one of them kind of days because we're really not. We do have an expansion pattern, but it's a megaphone, la la. It's a megaphone, la la. /ES chart. I am ready for some Dean Martin today. Oh. Woke up this morning in a real good mood, waiting to trade the SPX. Herman knocked at my door, said, I brought you a dirty whore. I said, that's fine with me. I gotta go to work right now. Tell her to come back at 3. Found support on the bottom of this megaphone. I don't want to be left here all alone. Whoa. The singing day trader. It's kind of one of them days today. I think we need to scalp at resistance levels and just wait for it to break out past, oh, I was going to say double top, but if we can maintain above the VWAP. Now this is as low as it can go right here. Right here, it's got a hold. We're in shit trouble. It's got to hold 68.3376. No lower than that. And I'm tempted to load the boat big time here. Add another $900. Baba's pulled back to a new low. You'd think it would be moving up on that. AMD's pulled back here. Meta's at a double bottom. Where's Google? Yeah, this is not looking too good here. We've got to hold down that /ES. We got to hold that support level right there. And we're right on it. Right on it. Okay. $0.80. Come on, baby. That brought me down. Oh no. This could get nasty. I don't want to see a whole body candle below that line, but we're seeing one. Might get back into SPY again, but not right yet. Everything's selling off. Got to get above the 9 before I feel confident again. On the SPX. Same thing with the SPY. And same thing with /ES. We just got one candle below my megaphone, so that's not real bad. It's bad, but it's not bad. If we break the 9, I'm not going to worry about the trade. Because we'll go back to the VWAP, to the head and shoulders on the /ES. But the only thing I kind of worry about is because I'm below my little jagged line. Let's go! Down 15 bucks. Down 10. Oh, we got a falling wedge breakout. So far that might be good. That might be good. You see the fallen wedge on that /ES? I do see it. I do. It can pull back and hit the resistance line on the wedge, but if it breaks out here, it could get enough momentum to hit the VWAP on the /ES. And we got to break 68.16 here on the SP. Right here, we got to break. We're at a resistance now. I'm even. So if you're in trouble, this is what I'd suggest, is especially new to trading, take what you can at 120. I want to see if I can get a little bit more out of it because I'm greedy, but we're at the 200 SMA. So I mean and I got 24 contracts, so I ain't fucking around. We got a hold right here. We got an inverse head and shoulders off the fallen wedge. Inverse head and shoulders off the fallen wedge. So if we hold that, we're good to go up to break the VWAP, maybe do a double top. Again, you know, I'm a little bit skitsy of how today's going out so far, but after this, I'm going to go make my salad. I don't want to stress out. And I'll probably hold a few of these because I'm so heavy in it. I think someone wrote me yesterday, you know, sell whatever you got in the trade and hold the rest. But I don't know if today's a good day to do that in or not. I think it was Bug told me that. Sell what you have in it and then hold the rest. Coming down to the right shoulder for the second time. So we had the wedge and we wait for the pattern. It was inverse head and shoulders. And we come down to the second time and that's got to hold. Then we break out maybe. Right here. Nancy, shot of vodka, or give me some of that rum, that pineapple rum and a volume. Now that Nancy's going into retirement, I'm not going to have the alerts that I used to get, the insider business, you know what I'm talking about. She was a good resource. Well, Jim, we're getting ready to put $30 billion into Rivian. Be sure to buy Rivian. Here's $1 million. It's going to jump up about $6 or $7. Sell it 3 days after I buy the contract. Okay, Nancy. Ball and wedge. We just hit the line with a hammer. Break it this time. Yeah, I don't want to work this hard for my money. Starbucks has got a lot of volume today. Burger King follows familiar game plan as China expansion. I got a headache. Yeah, I don't think we're going to have that big breakout today. TTM squeeze is looking bullish. We got a double bottom on Meta. We got a double top on Apple. We got a 1, 2, 3, 4 on Nvidia with a fallen wedge. We got a fallen wedge on AMD. So we're at a squeeze spot on all these. Hey, hey, hey. There she goes. It's what happens when the girls don't show cleavage. And they keep pumping CRWV today. After lowering fourth quarter guidance, that's why it falls. So I wouldn't be pumping that stock right now, girls.
Supply constraints. So that's another issue that they cited. The shortage is not in power, but instead has to do with the availability of partly completed powered shell data centers that CoreWeave can then set up.
That's not good. That's not good. Starbucks is real strong today. Tempting to go make my salad. I gotta fry 2 eggs.
Retailers have actually flagged as well. I'm just wondering, as you sort of comb through some of the analysts' commentary and remarks today, what sort of sticks out to you as to what they're saying here?
It's a lot of what we've mentioned. The concerns about the delay, concerns about the backlog. Everybody wants to know who this new hyperscaler customer is. That's mentioned. Also mentioned a couple of the notes, the CapEx for 2026 expected to be what the company called well in excess of double the total for 2025, which should be about $12 to $14 billion. That was cited in a few as well about just concerns about CapEx spending, but we've seen that sort of reverberate through earnings season so far.
Reverberate.
Okay. Thanks so much for that, Marley. I'll catch you a little bit
Big
later
words.
on. And we will have hopefully an example trade for you. We will get our guest with that. Just having some technical difficulties at the moment, but morning trade will be right.
We're having technical difficulties.
And also, what is moving markets overseas?
Technical difficulties. What's going on, Ricky? YouTuber? They're having technical difficulties. We have fallen wedge on NVIDIA. On Meadow, we got to respect 220.85, 220.94, 620.94. We got a fallen wedge on NVIDIA, and Apple has double top head and shoulders.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical
And
analysis.
we got a double bottom on /ES.
Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Well,
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are.
I don't want to see commercial cleavage.
Live from Chicago, this is Trading 360. I'm Marley Caden.
You're hot.
Macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market.
You're hot, Marley.
From Chicago, weekdays at 11 a.m. Eastern on Schwab Network.
Look at that dress she wears. It kind of has that.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed.
I'd have put my application, if I wasn't as old as I was,
Important things is you're making a play in a risk-defined
I'd put my
way.
application as the chartist artist on Schwab. Take his job.
Smart insights, actionable data, veteran traders. and
He's good. I mean, it'd be hard.
Streaming live and on demand.
Schwab Network, streaming 24/7.
He's real good.
Anywhere, free. SchwabNetwork.com.
Rick is.
Welcome back to Morning Trade Live. I'm Sam Butters, coming to you live from the floor of the New York Stock Exchange. It's time now to take a look at the sectors that are moving markets this morning. So for that, I'm joined by Kevin Hinks over in Chicago today. Thanks so much for your time, Kevin. What are you seeing as far as your takeaways from the action we're seeing today? A little bit of a caution sort of creeping in here.
Yep.
Hello, Sam. You know, the easiest way to describe today versus yesterday is the exact opposite, right? We've got 6 sectors of the S&P 500 higher and 5 lower. But, and here's the big but, Sam, we don't have Information technology. That
Sam's
was up
got a big
yesterday,
butt.
Down today over 1%. Communication
Did I hear him right?
That was up yesterday, down 4%.
Let's go. Give me a second
Consumer
chance.
discretionary that was up yesterday.
We're at the orb on the SPX.
0.4%. Those
Now,
three sectors, as you know,
I got to ask myself, do I sell it here at a small loss? Or do I just, because the market's, like you said, it's acting just the opposite of yesterday. My opinion, it's consolidating from yesterday's run because it was really extremely too much. You got a two-headed snake right now. That's something to learn, is when you have a huge run in one day, it's not going, it'd have to take some real good news for it to continue. Like, Democrats all vote for the government to go back together. I mean, for the shutdown to stop, all of them. That'd be great news. I've heard 9. I'm hearing 10. There's not too many smart Democrats out there anymore.
that taking some of their capex and moving out to next year versus this year. That has that stock under pressure. But their CEO came on TV, as you know, and gave a glowing response to their quarter's earnings. So watching CoreWeave, watching the rest of the market, a lot of headline risk. Both yesterday and today. So just watching that play out as we wait for the government to open and unleash the large queue of economic data that we're all waiting for, Sam.
Yeah, the $150 billion fish that got away from Masayoshi Son. I do remember that very vividly. Kevin Hinks, thank you so much for that and getting us across some of the sectors that are moving markets today. Checking in on the action out in Europe right now, the FTSE hitting a record high on some bad news for the economy, good news for the markets. And that is because the UK unemployment rate climbed the most since the pandemic to over a 4-year high at 5% last quarter. That's now raising expectations.
I'm going to put my chart over here on the window, go do my salad.
Week, if you remember. Keeping it in Europe,
need my eggs going.
Companies are rallying today on optimism around a possible deal with the US to lower tariffs on the country. The two sides are reportedly inching closer to an agreement to bring down duties to 15% from 39%, which would be consistent with the rate on EU exports. Now, Switzerland's watch group among those trading higher in the Tuesday session today. A mixed picture out in Asia overnight as some markets, uninspired by the rally on Wall Street yesterday, gave back some gains from the Monday
session. You got to gain respect above the orb on the SPX.
Overnight, the Japanese tech giant Sony, a bright spot, shares rallying after the company beat on earnings, raised guidance,
I'll be right back.
and share buyback of up to $648 million. Up 3.5% right now. XPeng surging 17% over in Hong Kong. The company has been on an absolute tear lately. It's been described as going full Tesla. It held its own AI day last week. A lot of attention on robo-taxis and humanoids. Yes, there's a view now that by seeing another company enter this space only validates Tesla's strategy, which is perhaps good for Musk, who has to meet big targets, but it shows that Chinese companies are looking to be more competitive in this space as well, and investors are certainly paying attention. The ADRs right now are almost 4%. Coming up, it's time for Inside Out, and we'll take a closer look at Circle ahead of earnings and bring you an example trade for that name when Morning Trade Live returns.
The market's not very bullish today.
Hey, investors, you know the market moves. and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
We're back on Morning Trade Live. We'll get a closer look at the stablecoin and blockchain space tomorrow before the bell when Circle reports earnings. This stock is down nearly 20% so far in November, but it's still up more than 45% from where it opened trading at $69 per share on June the 5th. So will this one come full circle is the big question. Let's go inside out on Circle ahead of earnings report. Joining us now is Vladislav Ginsberg, founder and CEO of OneSource. So what are your expectations for this report card? Good morning to you.
Good morning. Thanks for having me, Sam. I have expectations all over the map. We have Circle, which is at this point in its life, really a treasury money market type of trade. They have 76 billion USDC out in circulation, which must be backed by US short-term treasuries or cash equivalents. So their earnings are really coming from interest on those US treasuries. Now, with the recent rate cut and an upcoming rate cut, that's really going to squeeze their earnings potential, where that interest is about 80 to 90% of revenue at the moment.
Okay, so what metrics will be important to look at when we hear from this company come tomorrow?
Well, we're of course going to hear about those short-term instruments, and we're of course going to hear about that interest earned for the company, but we're also going to look for what the margins look like as their business scales. I want to hear more than an issuance story, which is how many USDC they plan to issue, and I want to hear more about enterprise adoption and on-chain transactions that they're serving.
What about the competition here? I mean, no doubt it's a very established company in this space, but you know, this is gaining a lot of traction in the cryptocurrency space.
Not a doubt. And Circle has a big competitor called Tether. And we see with Tether, it's a stable coin that has increased global adoption. It was really first to market, and USDC is second to market. Now, Circle is fighting for market share with Tether, but I would say globally, Circle and USDC are appreciated as sort of more of the regulatory-backed stablecoin, the one that is really has an eye towards enterprise and really an eye towards regulation. So I do think that Circle is taking market share for more of an enterprise use case, if that makes sense.
It's not a good day.
Yeah, Absolutely. I mean, look, we have certainly seen a lot more sort of a corporate adoption as well this year. I mean, that's very much been one of the
AMD's coming back to retest
just also wondering, you know, what are the
support.
potential risks? I mean, you've mentioned obviously the short-term issuance. I mean, you've mentioned obviously the treasuries and also, you know, around the macro environment as well, which looks largely favourable here. But
IWM ain't done much today.
We also be mindful of in
We got a triple bottom on the SPY.
Very nascent.
In the SPX.
Absolutely.
So this is going to be it. It's got to break out here.
That you're looking for,
or we're in trouble.
Than, rate cuts, which we talked about, could step on their earnings a little bit. It really is a question of adoption.
We kind of got
Circle's business at the moment is
we got a falling wedge on the QQQ.
Dressed up as fintech, and that's fine for the short term.
So we got triple bottom,
adoption. Very early
higher lows,
life cycle,
and a falling wedge.
The next thing you want to see, the next thing you're looking for, really now in Q4 and in 2026, is can we really have adoption? Can we really have on-chain transactions?
So we've got IWM has higher lows.
USDC.
We got a falling wedge on the QQQ. We got a triple bottom on the SPY, and we got a triple bottom on the
SPX. And
SPX.
challenge Tether as the globally adopted stablecoin. And
So
long
something's
story
going to
short,
happen here
we have to
soon.
see the adoption. It has to be more than an
And I'm going to go in there and continue on my
And
salad.
obviously with the price of some of these cryptocurrencies, Bitcoin for instance, it's sort of just been stuck in this range. It hasn't managed to sort of garner the sort of same momentum we've seen in equities, particularly off the back of 1010. So I think that's also noticeable as we look at across the price action too. Vlad, absolute pleasure. Thanks so much for joining us and giving us a preview of Circle. Vladislav Ginsburg there joining us, founder and CEO of OneSource. Let's trade it now with Tom White, who's the host of Fast Market. Very good morning to you, Tom. Give us your example trade for this name.
Yeah, Sam, you look at the stock, it's pulled back about 66% from those all-time highs that we saw post-IPO, $299 nearly. So it's been on a trend to the downside here. So if you think the stock's going to maybe rebound, maybe has some upside, maybe the bar is really low on this one going into earnings, this type of strategy takes advantage of it. But also the different implied volatility levels between the option series. So I looked at a bullish call diagonal. The option market's priced in about a plus or minus 11, 12% move either way, and the shares, the stock trading right here around $100 per share. So I went up to the November 21st monthly cycle, expires in 10 days, about a week and a half until expiration. We bought the 100 strike call, and then against it in the near term November 14th weekly options that expire in just 3 days, sell the 110 strike call. So a bullish $10 wide call diagonal. We're going to pay roughly about a $5 debit code. So you're only paying about half the width of this bullish call diagonal because of those implied volatility levels I mentioned. Now, if you pay that $5 debit, that's going to be your risk, $500 per spread. Your break even on this trade, anything above about 102 is going to be profitability. Now, I mentioned the fact that we're only paying about half the width of this call diagonal, and that's because you're buying about 136% implied volatility on aggregate in that November 21st monthly options where you bought the 100 strike call, selling about 190% implied volatility in the near-term November 14th weekly options that expire in just 3 days on that 110 strike call. So that vol dispersion really lowers the entry point and risk on this type of trade. Now, because you're paying less, about half the width of this call diagonal, anything above that 102 level is going to be potential profitability, and you will have that opportunity to roll that short option into the next November 21st monthly cycle. That creates credits, that increases potential profitability, and also lowers risk. Now, this is definitely a bullish trade. You need to move to the upside of about 2.5% to get above that break even of 102. But this is about the strategy, Sam. If you're more bearish on a name like this, a put diagonal to the downside, you're just taking advantage of those vol levels when picking the directional bias on a trade like this.
Okay, an example trade for us from Tom White on Circle. Under pressure today ahead of this earnings report, as we mentioned. It's down about 20%. throughout the course of November. Still up 45% though from opening at $69 on June the 5th. We'll be watching out for that report card. Thanks, Tom. Let's just check in with the markets, where things stand. We're about an hour and a half or so into trade right now. We've seen a bit of a mixed picture, so a little bit of caution in these markets, a bit of a rotation out of technology and consumer discretionary, the things that were working for us yesterday as we saw that relief rally, moving into more of a sort of defensive type cyclical trade today. We've got the S&P 500 underwater by about 0.4%. The Nasdaq also taking a breather after the gains we saw yesterday, down almost 0.9, and the Dow Jones is managing to just hold on to gains there to the tune of 0.4%. Not a good day either for some of those small caps as they are losing some steam and momentum as well. So a mixed picture across the major indices this morning. That's going to do it for us here on Morning Trade Live. Thanks so much for joining me. I'm Sam Bartis. Download the Schwab Network app, available in the Apple App Store, and tune in 24/7 on schwabnetwork.com. Trading 360 with Marley up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
I'm Sam Bartis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Good morning. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Marley Caden, coming to you live from our Chicago headquarters. Here's what we have coming up in today's show for you in our 360 Spotlight. We're going to dive into the world of AI stock picking with David Trainer from New Construct, after his company is partnering with Google Cloud to launch an AI-powered financial research agent. Today's disruptor is Viasat after JP Morgan upgraded shares to overweight. George Dillis will walk us through the call and also give us an example trade. And then in our 360 round, we're going to dive into CoreWeave's earnings, which is under heavy pressure after its report, which did include better than expected results on the top and bottom lines. Before we get to all of that, though, let's check in with the markets this morning. A bit of a mixed picture right now to start the day. The S&P trading down about 1/3% at 68.10. The Nasdaq trading down more, about 0.8%, 25,410. The Dow, though, up on the day about 1/3% right now, 47,541. And the Russell lagging about 1/3% at 2446.33. Taking a look at some other products here, we have the 10-year at 409, the dollar at 99 at 24, gold trading at 41.12, which is down 0.2 but higher than we saw yesterday. Crude oil trading at 60.98 a barrel, that's up almost 1.5%. And Bitcoin trading down under pressure today, down about 2.5% at 103,735 right now. I do want to bring Alex Coffey into the show, though, co-host of Next Gen Investing and our senior equities contributor here on Schwab Network, to talk about some earnings that we got and a stock that's rallying. Unlike CoreWeave today, which we see under pressure, Paramount Skydance is having a great morning so far.
Yeah, my last check up something like almost 8.5%, so a really nice jump for stock ticker P-Sky, as this is the first time since the August merger, Marley, of Paramount Global
we're at the
Skydance
63.
Media, now Paramount Skydance, that we've gotten since that merger happened. They came in with pro forma revenue for the quarter that was flat at $6.7 billion, but that was just behind the expectations of closer to $7 billion. But they did show double-digit streaming growth.
We're at the 63 on the SPY, the SPX, the QQQ.
The filmed entertainment revenue jumped 30%, primarily due to...
And we still have higher lows on the IWM.
Skydance's licensing and sales. For the fourth quarter, the company guided for revenue between $8.1 and $8.3 billion. That was above consensus estimates. And then
So
also,
we just broke the 63s.
Stuff around. So
now we're finding some resistance here on the SPY.
Quarters, but for example, there's going to be
and
a
the
$500 million
QQQ.
Restructuring charge that's going to hit this
And
current
we got
quarter
a
results.
triple top
And
here on the
only counting Paramount Plus
SPX.
subscribers while reorganizing.
I'm going to still hold on. I'm taking a risk.
Starting next quarter, so be on the lookout for that. But I think the better than expected guidance really got.
Let's see if we got enough momentum to push. The SPY is the one that's kind of scaring me right
when
now.
your CEO comes out and says they expect $1 billion more in
If we can break that
potential merger
200,
savings
we're off
they
to the
originally
races.
estimated. So big move to the upside, trading up about 8.5% right now on P-Sky. Thanks, Alex Coffey, for being with us to break that down.
Better I sell and take my loss.
So talk more broadly about the market
right
and
here
some of the
and
market
buy the
action
dip.
we've seen. Joining us now, Paul Schatz, the President and Chief Investment Officer at Heritage Capital. Paul, good morning to you. Thanks for being with us on this Tuesday morning. As you take a look at the market action we've seen so far this week, a bit more of a mixed picture than we saw yesterday to start the day today. But what are your thoughts on this action?
Look, good morning. Good to be with you. After yesterday, you would have to expect some kind of retrenchment in the morning. The Dow is up, but I always caution people, don't look at the Dow. It's only 30 stocks, and it's highly weighted towards the ones that are expensive. So you look at the S&P is down a little bit. The Nasdaq had an absolutely phenomenal day. So you'd expect some morning weakness. I'm not surprised. I would be surprised, frankly, if the markets really reversed and took out the lows from Friday. That would not be a good sign. It would certainly mean that the 5% pullback that we just saw was not over, and we were going to probably head towards 8 to 9%. Again, you've got a lot of seasonal tailwinds in Q4. The catalysts for large declines, except for 2007 and 2018, are typically not there. Doesn't mean we have to rocket higher, but it's harder to get the markets lower in Q4. You've got holidays. I mean, there's just it's not impossible, but it's difficult. So I would say you can certainly buy weakness for a rally to new highs into the new year.
You've got this seasonality at play in the favor of the markets in theory, but I also noted that you sent some notes over and you said that this rally is becoming narrow. So, as we're seeing this narrowing, and we are seeing some rotation even just in today's trading, is it a warning sign? I know we're going to look good through the end of the year, but what's your outlook for the first half of 26?
So it certainly is a warning sign. So I guess I view it like this. The conditions are right for a storm. It doesn't mean a storm has to come. Conditions often get ripe, quarter to quarter for some more significant downside. But, in this case, you've got, the percentage of stocks in uptrends is going down as the market's going up. It's a warning sign. The number of new stocks that are making new 52-week lows is rising as the market's near a new high. Leadership is okay. These things often warn, and they're almost always present before a large decline. But it doesn't mean we have to have a large decline. The market could go sideways, go up and down, and right itself into the new year. I'm not saying that it won't happen, but you have to be concerned.
Now the IWM kind of
you've got sentiment that
still has a higher low, but barely.
People were panicking and they were fearful and despondent. And now you've got
resistance
euphoria,
levels where we were at the triple bottom.
Outright giddiness. So late comers to rallies are normally punished, and that's usually sooner than later. You've got the seasonal tailwind, so at some point, unless the markets really right themselves, you're going to get some kind of pullback that was deeper than we just saw in the last couple of weeks.
So if we're set up for this pullback, how are you positioning right now?
I think you've got to be more nimble than you've been, certainly we've been since late March. Since late March, it's been a one-way street. It's been easy, fun, work less, giggle more. And now you've got some warning signs. So I think you dance closer to the door, number one. Into some kind of crazy up days if you've got stocks or ETFs that have those little mini melt-ups. I think you do, and we will pare those back. So if you owned a stock that was 4% of your portfolio, it's now 5% of your portfolio. Trim back the 1% to get back to your original position size. There's nothing wrong with taking some chips off the table. As winter, I'm using so many metaphors. As winter approaches, you're harvesting some acorns, but that's what we'll do. Into those kind of rippy up days, we will harvest some acorns. I keep going. We're going to prune and then maybe replant into some weakness. But look, it's been a phenomenal run. I never think I have to get the absolute top tick, nor do I need to get the bottom tick on the downside. I want to get the meat of the move, and I want to do things thoughtfully, and that's good portfolio management.
And I also saw in your notes that you sent over that your biggest concern that you say is the dollar, and the dollar potentially bottoming out. What's your risk there, and what does that mean more broadly for global liquidity and commodities?
Doesn't mean so many great things. Just because the dollar rallies, we've seen the dollar rally in good equity markets. So when people say, well, the dollar is strong, therefore stocks must go down, it's not the case. But a strong dollar is a tailwind. I'm sorry, a strong dollar is a headwind. 5 times and it puts the international companies on guard that the easiest profits won't be that easy anymore. And most investors don't realize, the stock market represents, one finger, and the bond market represents 2 fingers, and currency markets are 3 to 4 fingers. It's an enormous market. So if the dollar goes against you, meaning the dollar gets stronger, it makes global trade more difficult. It's more of a risk-off play. Again, it doesn't mean it's the death knell for equities. It just means that it can provide a bit of a headwind. And as you said it, global liquidity takes a little bit of a hit.
All right, so it requires some rotation if we do see some strength come into the dollar here. But I want to talk about some stock picks you sent over too. You've got a couple selections. You want to walk us through them?
Sure. LRN, which I always say learn its stride. This is a play on a decline in public schools in the United States. The stock is historically super expensive. It's not expensive now. The stock's absolutely been battered. It's got 10% free cash flow. It's a great business, a really good balance sheet. Again, it hit a big pothole with earnings. I think it's a short-term problem for the company, and I think the upside could be 50 to 100% in a year. That's one. Schlumberger, which is that's the NVIDIA of energy. That's along with Chevron and Exxon. So again, oil's super cheap, and the stock's super cheap. Rock solid balance sheet. The company's almost always profitable. What we see in Saudi is a bottoming of production. It's industry leader, 3% plus dividend yield. And even if I'm wrong about oil prices and oil does not rally, this company has staying power. Competition will start to shrink. So this thing, I think, low 40s. And lastly, Carrier. It's a quick one. Carrier, the economy is resilient. The economy continues to surprise to the upside. You know, carriers is the old UTX, United Technologies spinoff.
We're back
really
up there
good balance
again.
sheet, good free cash flow. I look at it, $75, and the economy is going to continue to be stable to strong and well
Since
into
9
2026.
o'clock.
I love when people
So
pick
about-
stocks that
here we
aren't
go,
stocks we
finally.
talk about every day. So thanks for picking ones we don't highlight. Last question,
That's
Paul.
all I got. I only have the non-favorites.
I like it. I like the non-favorites. Those are more fun. You know, last question though.
Now we
do
broke
you think that we're
resistance
in
on the
middle
SPY,
of
so I
this
gotta
bull
kind of
market
determine.
rally? Are we nearing
We have
the final innings
the
here?
QQQ and the IWM.
I think we are certainly.
And we have a little
it's later in
that
the
needs
bull
to break
market.
resistance,
Now, if you want
and
to use
we're at the
baseball or
SPX at the
football,
200
this is
EMA,
not an
which is an
early
exit
game
idea.
story. You know, the bull market. Look, we had a 20% correction.
But if we
decline.
can maintain
bear market, whatever we're going to call
support
it,
on the
tariff
SPY
management in April.
at the 200
Historically, that
on the
normally
1 minute,
insulates the
I
market
think we
from
still have
another
a chance to
double-digit
move up.
decline for a year. So that gets
That'd
us into the
get out of
middle
the
of next
trade.
year. But clearly, if the market doesn't repair its lack of participation, the longer this goes on, people said this is the dot-com bubble again. If it is, it's not 2000 yet. It's early 99. But the market, if the market can repair itself, the bull market can live on. If the market cannot repair itself, then you're going to have another decline longer than we've seen in 2020 and 2025. It won't be a 4 to 6 week one. It'll be a multi-quarter decline in 2026. But I think that's putting the cart before the horse. We've got plenty of time to see what the market does in the next. It's November 11th, so in the next couple of months.
Paul, we appreciate you being with us this morning, taking the time to be on Trading 360 today. That's Paul Schatz, President and Chief Investment Officer at Heritage Capital. And we've got plenty more for you on Trading 360 as well. Next, we've got the big three stocks, 3 charts. Rick Ducat will walk us through the technicals, and Jessica
Always
Inskip
clean
will
as
take
Jim.
us through the trades for Alphabet, Apple, and Taiwan Semi. That's next on Trading 360 on
Yeah,
Schwab
what's up,
Network.
baby? Yep, we're doing good. Yep, thank you very much. Today's salad, my regular with cheese chips,
From the most iconic
croutons,
trading floor in the world,
romaine
this
lettuce,
is Opening
carrot,
Bell with Nicole
radish,
Petalides,
pickle,
live on the floor of the New York Stock Exchange.
cherry
The
tomatoes,
countdown, the setups, the stories that make
with
markets
ranch
move.
dressing.
Minute by minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage
Feta
the investments
cheese.
for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Welcome back to Trading 360. I'm Marley Caden. It's
go.
time for the big three. We've got three.
Buy
stocks,
back at
three
resistance
charts.
again.
Rick Ducat, of course, will walk us through the charts, and here to take us through the trades today, Jessica Inskip,
We've not
Director of
quite broke
Investor
it yet.
Research at stockbrokers.com. Great to have you both with us as always. Jessica, thanks again for joining us. Love to get your thoughts on this market action we're seeing so far this
SPY is one of the most I'm paying attention to right now.
Absolutely. I think we got a lesson yesterday, even with the price action, that the market really does not like uncertainty. Any glimpse
We can go
that
to 1 minute
have,
candle
for moving
above that
uncertainty,
200.
which the likes of the government shutdown ending just put us into
There we
rally
go.
mode. And I just think it's
There's
an
the
interesting
starting of
lesson
it.
that we certainly need to keep. AI is still driving the market, and earnings are broadening, but
No.
they're broadening slowly, but that's still
Need you to go
healthy.
up.
So I still see a healthy market overall, and that's a good thing.
Yeah, and AI certainly a part of some of your picks today. So let's dive right into your first one, Alphabet.
Absolutely. So it's so hard to stay away from artificial intelligence, bringing in any of your picks, because it leans into productivity and the overall broader
Did I say egg?
ecosystem and the
Also,
overall
I have two
market.
eggs
But
in here.
Alphabet specifically, it's really leaning hard into artificial intelligence. We're looking across search. Some risks are OpenAI coming with their own search platform, cloud hardware, now consumer-facing finance tools as they just relaunched their Google Finance. But what I like
thought we were gonna
most
keep
about
that
Google
above
is
that.
their TPUs, or their
That
tensor
body didn't
processing
stay above it.
units. They offer meaningful compute advantages.
I need a whole body
something
above
that's
that
made
for it to be
in-house
bullish.
is different from your CPUs and your GPUs. TPUs are very important and a part of Google's overall ecosystem that allow for faster training and faster models, and they're used by other providers as well. So talking about a couple
If I can
things.
get a body,
Ironwood
yeah,
is
this might be
expected to
it.
roll out. That's the next gen TPU. That's their 7th generation, and it's going to be broadly in weeks, and that's
If I
going
can get
to
a body above that
really be faster. And if it's faster, more
resistance line of the
enhancements is what
200
we're looking
SMA.
for, then that's certainly going to translate positively, I believe, into Google's earnings. Now, thinking about search and monetization,
Takes a lot of patience
Gemini
when you're in
and
a trade
AI
like
mode,
this.
there's
See, this is
query
almost
volume,
there.
but there's still improving ad performance there, and we saw that across the earnings. We see improved TPU efficiency, again, that TPU again, with Google Cloud demand, and there's a lot of long-term hardware optionality or opportunities with those TPU capabilities, and that's where I think the opportunity is for Google, and it continues to be a top pick for me this year.
All right, Rick, so let's take a look at the chart for Google for Alphabet, and what are the technicals showing us?
Everything Jessica said made sense to me. If I were to just be looking at the chart alone, though, I would think this was probably one of the best of the bunch
Almost
overall
there.
in terms of bigger tech stocks. It's held up much
We
better
got a
than
spinning
many
top
that
right
we've
here,
seen
Doji.
recently during this market downturn. We're still basically
There we
at
go.
the highs in this name.
That
For
could
the
be the
most part,
catalyst.
though, price was traveling upward in this rising
Now, if there-
wedge
we have
type
follow
of
the
shape
leader
here,
come in.
typically regarded as a more bearish type of pattern, but really that is not certainly going to happen. Like, this can go either way. What you're looking for would be a breakout above either of those two lines. In this case,
It's
it
not
would
quite-
coincide very closely with those previous highs. So any push
I mean,
above
I needed this
292
thing to
would
be above this,
noteworthy
but
for traders here. To the
it's a better looking
downside, though,
chance.
275 stands out. That was about where we had our highs before.
Now, if the
a
next
small
candle
gap
stays
up.
above
That's
it, oh,
about
there we
our
go.
Lows.
There we go.
A few sessions ago there, that also lined up with our trend
There we
line
go.
going across the lows here. If we were to incorporate some of our other studies, we can see
There we
that
go.
in this case, our moving average is not too terribly much help. We've moved beyond them here.
There we
Our
go.
21-day, within a few days, we'll probably catch up to that 275 level. So that
How many
could be
times should I
an
say
area
there
to
we
watch
go?
If we have a confluence there that develops, RSI trending downward here. But as always with RSI, it's more nuanced than it may seem at first, because we are still in the overbought area, which is a sign of strength. So a bit of a mismatch.
And I'm heavily
signal there
invested
here,
in this
but
trade.
for now, momentum's still very high. Make no mistake about that, as we gauge the probabilities of a potential jump to the upside. When we look at our volume profile study, we can see that we have held on above this small node that developed here
I
near
didn't give up.
270, so that's another supportive area to consider. 376
There we go.
is where our 376, excuse me, say it that way, is where our +2 standard deviation channel comes in for potential resistance. To the downside beyond 275, our +1 channel comes in around 267.
All right, and we're just trading just off of those highs right now. We're at about 288.80, those all-time highs, 291.59. So just below those levels. But as you always like to say to me, Rick, stocks can always go higher. So, Jessica, let's move to your next one. Another player in the Mag 7 here. We're talking about Apple this time. Is iPhone demand a part of this pick?
It absolutely is. We're heading into the holiday season with strong iPhone demand. The iPhone 17 is off to a strong start, and we've got some bullish holiday.
Now I got an issue.
Positive for Apple.
The SPX is almost to the 200.
For Apple, it's also services growth. There's
So I
rising
gotta ask myself,
monetization, and so
are we going to break
iPhone
here?
17 cycle off to a strong start.
'Cause I got a lot of money in this
AI
trade.
app engagement trending higher. I think that's going to bode
Or do I
well
just
for
need to get
Apple
out and take what I got?
positively into earnings.
I'm green.
And what I think is so interesting, though, is everything is connected. And if we go into the services aspect of Apple's revenue driver and some AI app insight, there's this competition between the AI models.
What would you do?
And Gemini is certainly rising. But if we were to take Gemini and then push that against Google search,
Anybody
you
in
can
the
see
room
some
got an
flat. So
answer?
it's just really leading into Google. But it's
Would
very
you sell it or
interesting
hold
to
it?
me how the services sector here is gaining more revenue for Apple, and I think that's something we should pay attention to. At one point, iPods were really dominating their revenue, so markets and revenue structures absolutely change, and that's what I'm paying attention to with Apple. We see this continuous increase in service revenue, and now we're getting positive iPhone demand for the iPhone 17. Hopefully next year we'll see something come with AI. There's more partnerships being announced, even something reiterated.
Do you like how I'm
with
calling these
Gemini
trades out?
And so much more happening there. So I really think that we're at this moment with Apple where we
I know
need to
what's
see
gonna
some
happen
AI
when it
follow
happens.
through, but the combination of services and iPhone demand is boding
Before it
positive.
happens.
I haven't thought about my iPod in
We're
a
at a
long
resistance
time.
right
There's
here.
some nostalgia here. I remember being so proud to have that iPod Nano. All right, Rick, iPod Nanos aside, as we take
Green
a look
is
at the
green.
technicals
That's
for
right.
Apple, another player here in the Mag 7, what
I'm
are
up.
these telling us?
Yes, trending
Real
upward
nice.
here for the most part. Once again,
But
this
I
one
mean
is
real
held up
heavy.
better than many of the other companies in this space, despite being the laggard for much of the time leading up to it here. But once again, pretty close to those highs. 277.32 is the point to watch. In this case, the downside area of note is these old highs and the subsequent lows near 265. You could also say 255 was a similar low point. In this case, though, it doesn't match up quite as well with this series of highs.
This
that
is
we've got
it.
Here. So perhaps 255.
I got to make a business
based on the
decision.
lows. 257 based on where the closing prices came in the previous range here. So that general
I got-
area could be supportive, though.
Then I
When
got
we
to,
also look at our RSI study,
I got a lot of
in this
money
case,
in this
a little
thing.
bit weaker than our previous chart here, but a similar trajectory trending downward with repeated crossovers into that overbought area. Once again, though, looking like we are on the verge of re-entering that point and breaking above that trend
God.
line. So that would, again, be a sign of strength in a trending market for that RSI to push above the overbought level.
Oh, yeah.
Especially if it happens in tandem with price breaking out into new highs as well.
Jim, you're one of the best
21
traders I've ever
days
met in my
lines
entire
up with
life.
those old highs.
My
And
wife
also
wants to know if she can
our
meet
trend
you
line as well, near about
privately.
265, so extra emphasis on that point. When we
At the
also look
Ritz-Carlton
at our volume profile
tonight at
study,
8
a
o'clock.
similar volume node has formed here near about
155.
270. We can also see that 255 stands out here for our +1 channel and our old lows. So those would be some points.
Anybody
watch.
want to share their
Bear in
wife
mind,
with me?
too, our +2
Say yes or
channel is
no.
very close to our current highs. That comes in near 275. So potential speed bump there.
All right, and right now, Apple
about you, Live It Goose?
270.
Is that your wife?
They are 1.1% higher on the day. Your last pick, we spent a great deal of time talking about yesterday. Taiwan Semi came out with some slower than normal revenue growth numbers, but pretty much in line with expectations. Under a little bit of pressure today. Walk us through this pick.
Well, so they are generating a mass amount of cash, though, and
So I'm
that's
Washboardjim.
especially if we're thinking about these
I'm out.
hyperscalers and these larger companies that are spending so much on AI. So because of this massive amount of cash, it allowed it to raise their dividends and invest heavily in next-generation chip manufacturing at the same time. We still see demand for AI chips, and advanced semiconductors are absolutely still exploding, and Taiwan Semi is one of the strongest really for the long-term winner in AI hardware, in AI hardware. So I like that they did increase their dividend, but I also like the disciplined investment that they have. They usually spend about 55 to 80%
One of the guys in the room
cash flow
said, "Grandma called.
CapEx. I know
I'm
that
pregnant."
is a wide range, but they tend to come in under that in the spending, which tells me that they're disciplined and there's longer term growth that's there with their investments into AI. As we're hyper scrutinizing and analyzing companies that have big CapEx spend, we want to see that translate positively, but I also want to see them utilizing free cash flow and not taking out a bunch of debt. So that's something that I like with Taiwan SIMD, and I expect that to continue and translate into earnings as long as that momentum is there, but we're seeing demand for AI.
Unbelievable. I hope everybody's out.
We definitely have the demand based on all the recent commentary. As far as momentum in the technicals, Rick, what are they showing us?
So once again, a
There you showed some of them.
picture here. This chart is a little bit more choppy with more gaps because it is an ADR. That's very common for that to take place. But what
That's
we
a
can
real
see
nice
here,
trade for
a
me, I have to
general
tell you that.
range between about 307 at the highs and around 280 at the lows, with some intraday fluctuations.
$65 times 48.
That's the general range. You could also perhaps argue that it's more of a very modestly downward sloping channel type shape between our extreme points there. Kind of depends on how you look at it. These things can be rather subjective sometimes, which can be, you have to make greater decisions than based on your own personal view at that point. So we can see our 21-day EMA is about where we topped out today and opened 293.60 is where that indicator comes in right now. To the downside, we can see that our 63-day EMA in orange there is pretty close to our lows and our bottom boundary line there. So around 276 to 280 or so stands out as potential support.
Got to get out when you see that 200.
Not held up as well as our past two charts we've examined here. We are on the verge of pushing below that
No one else will do that.
line here, but price is still hanging on decently. We're still in the middle of our range.
Unless
here,
you're
so
following the
certainly not any
Washboard
kind of
Jim.
collapse or anything like that we see developing at this time. So finally, volume. We have a node here that's rather sizable at these highs near around 300. So if we were to break above that level and test those old highs near 307, 311 then comes into play here. That would be our plus one standard deviation channel in this case, very, very close to those old intraday highs.
Average down 5
Around
times.
260 is where we have our next notable volume node. It's quite small, but that's the area that stands out.
All right, and we're trading about $20 off of those previous 52-week highs, but still on the year up more than 44% in that same time period. I want to thank you both for being with us for Big Three today. Jessica Inskip for the picks and Rick Ducat, of course, for breaking down the technicals. Coming up next, we're going to spotlight AI stock picking with David Traynor of New Constructs after his company partnered with Google Cloud to launch an AI-powered financial agent. We'll learn more about it next on Trading 360.
We're back at support. 3 black clothes with tweezer bottom.
My man.
Sometimes, you could have done better. Same goes for where you invest.
So YouTubers, I'm going to explain what I did here.
Morning movers, be the first to find out what
'Cause I think it's a good learning
market
lesson.
action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8
Once I
a.m.
eat my
Eastern,
salad.
only on Schwab Network.
This thing is good.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform
Don't teach them
features
bad
and
habits, that's true.
resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com
I'm getting ready to jump back in.
and start learning today.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price
It's
action.
'cause I'm Washboard
Fed
Jim,
policy to global
the founder
growth
of the Sneaky
to
Snake
inflationary
trading
risks
strategy,
and geopolitical risks.
where I talk about chart
Smart,
patterns,
fast, and always
moving
live
averages,
from Wall Street to your
and
screen.
being in the now.
Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m.
And I talk
Eastern
about
on Schwab
candlesticks.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime,
I have a lot of
wherever
patience.
you are.
5 years ago,
Welcome back to Trading
I would've
360.
panicked.
I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight
And
AI
I've been under a lot of
stock pickers.
stress.
Joining us now, David Trainer, the founder and CEO
so I think
of
taking away the
Construct.
stress,
David, thank you so much for
like
being
right here,
with us.
man, this is
You know,
going to get
a very
good.
exciting
You ready?
partnership you have here with Google Cloud.
I'm moving
Walk
these
us through
up.
this concept and how it's going to work.
To
Thanks, Marley. It's
6830.
good to be with you today. Yeah, I think that when people think about AI, they need to understand that there's an evolution. In the beginning, it's about collecting data. And the aim AI makes data collection easier. And then it's about modeling the data. And then ultimately you want to get insights.
280.
And with FinSights, the AI we created with Google and our proprietary data, we're jumping straight to the insights. Why? Because New Constructs has created a data set and an ontology that's proven to generate alpha in the stock market. So if you can build
6830 is
AI
at
on
280.
top of truly reliable
We have
data
1, 2, 3, 4.
and
You
truly
kept
reliable
4. You
signals,
can make a lot
now you've
more.
got something that you can truly call a very powerful agent
Randy.
that you can rely on to do things besides, book appointments and look up restaurants.
So, David, when you're creating something like FinSights, what kind of problems are you solving? What existed in non-intelligent investing that this AI agent will
We're at
work around
340.
and ensure doesn't happen in its process?
Yeah, that's a great question, Marley. And this is the biggest problem with AI in general. You can't trust
350.
the underlying data.
Make a
right?
business
I mean,
decision.
For the most part, ChatGPT and these other AI systems, they're all based on the internet. How much of the internet can we trust? And so trust in the underlying data and trust in the ontology. Really AI that's not a black box. And that's the problem we're solving. This is an AI agent. FinSights is an AI agent that's
Make a
based
business
on
decision.
fundamental data that's been
If you can count to
perfectly
4,
curated. This has
you
been
can make a lot
validated
more.
by Harvard Business School, MIT Sloan, and now live traded indices managed by Bloomberg that dramatically outperform the market. So if you've got
One
super
of 'em,
clean data,
2
and
bets,
signals that are proven to
3 bets,
outperform,
4
now you
bets.
can trust an agent built on top of that to give you advice and recommendations, insights.
$60 a contract right here.
And so, David, walk us through the specifics of the partnership itself. You've got the super clean data that's backed, but what specifically does New Constructs bring as the data provider, and what is Google Cloud bringing?
Yeah, that's a great question. So this all started with a discussion with the head of their professional services organization around what they're doing with AI and what we're doing with data. And we found that there was a real synergy in being able to provide their cutting edge, Google's cutting edge Vertex platform, Gemini platform, with the best in class data in a particular domain. So the idea is that large language models sound great and they're
Irene,
supposed to potentially figure out
the
everything,
bell.
but they don't really work. And so
What was your
we narrow
comment,
the
baby?
world down into what we call maybe a small language model or smaller domain, and we arm an AI agent or technology with that kind of intelligence, then you can truly endow the machines and the technology with real human subject matter expertise. And so for Google, the win-win here is that they're able to demonstrate the art of the possible with their technology when it's actually endowed with real expertise. And the benefit for us, of course, is that we're getting access to this tremendous Google technology that's making this agent work and deliver stock picking and analytics like the world's never seen.
And David, what's the rollout going to be like? Are you in beta now? When is it going to be public, like accessible for the public to use?
Yeah, we just came out of stealth, right? And so we're in beta now. We're rolling out to a few choice customers, and we're actually going to be making this part of our sort of standard package at New Constructs for those that are signing up in the next month or so. So that's important to keep in mind. And then in the first quarter of 2026, there's going to be a broader rollout, not just individuals, but we're going to be doing this with institutions as well to really complement their own internal AI build out. Fundamental data is important, but we want to complement that with other proprietary data sets that organizations have available to them.
And David, in that beta process, what metrics or milestones are going to help measure the success in the beta testing phase?
I think that's really the same question in terms of all of these AIs. It's adoption, right? It's really getting more people to take advantage of what is a new and better tool, and for them to to see how much work they can get done when there's an AI agent they can really trust. A great example is friends of mine that are still on the sell side and the buy side, and you ask them about using AI and they laugh, because when you type an answer in and you're not sure it's right, it's more work to check it and then do the right thing. With us, with FinSights, professionals on the buy side and the sell side can type in questions and get answers they can really trust. So it's really going to advance their workflow. On the retail side, you're going to be able to type in questions around, hey, what are the best stocks in the tech sector? Which stocks in my portfolio are most likely to miss earnings? And you're going to get answers you can trust. And we just, for us, success is going to be getting this into as many hands of investors as possible.
So you mentioned this can apply both on the buy and the sell side. When you envision its adoption and how it functions in the workflow, how do you see it performing for asset managers, hedge funds, analysts on the sell side? What specific tasks is it going to replace or improve for them?
That task of
We're at
having
390.
to download a 250-page 10K and
So I want to talk about this last trade. I'm still in this trade. I should go ahead and sell them while I'm talking, but I'm going to see if I can get a
and to know that that's been done consistently and accurately and comprehensively.
head and shoulders up here.
The task
You got this head,
it's sort
head,
of like having
left shoulder, left shoulder,
a
left shoulder.
version of Warren Buffett.
So get it back up here to the 200.
And build models for you, provide insights.
Or you get out now.
That are done consistently across effectively an infinite number of companies. That's the work that's being done. And when you have an AI that can perform that kind of high-level work,
exit idea.
Marley, is one version of the truth. Right?
Oh, yeah.
Multiple versions of the
Oh,
truth
shit.
for companies. Like at the end of the day,
4.60.
it's a straightforward thing. Our technology provides that one version of the truth so that analysts and buy-side folks can collaborate better around, hey, what's going on with this company? What is the profitability? And what does the valuation imply about future profitability?
Oh, yeah.
So that more time can be spent on thinking strategically about where are those companies' new products or
I
distribution
want to talk about both these
strategies
trades.
lead to better growth and profits than expected.
I don't know how he does
Exciting
it.
times, David. Thanks for being with us to tell us a bit about
Jim,
FinSights.
my grandma called.
Trainer from New Construct.
She said
and
she was
coming up
pregnant.
Next, we've got the disruptors. George Tillis
Said
will
what?
join us to take a look at Viasat after it was upgraded to overweight at JP Morgan. He'll break down the call, also give us an example
She's
trade.
pregnant.
That's next on Trading
You got to be
360.
kidding me. Oh my gosh, out of 460. Unbelievable, that's what you are. I think I've done my limit today, but we're going to talk about this trade.
Stay connected to the market.
I think I'll put it in a bigger prospectus
Tune in
here.
24 hours a day, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services. Schwab Network.
So the first thing I do,
anytime, anywhere, on any device for free.
Whether you're an experienced
I should have me a cup. I'm going to make a cup of coffee before I talk about
Charles
it.
Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks?
It's going to be a learning lesson.
Technical Analysis
I might
webcast
record it.
series breaks down different
So I'll be right
charting
back.
techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Marley Caden here in our Chicago headquarters. Let's head out to the New York Stock Exchange for a check on the market. Welcome in Nicole Petalides, host of Opening Bell and the Watch List. Nicole, thanks so much for being with us today. You know, we're about 2 hours into this mixed session, a bit of a rotation today. You know, what have been some of your observations so far this morning?
Listen, I mean, we're getting used to some volatility over the last week or so. I think the fact that yesterday's rally is holding somewhat today brings some optimism. Today you have areas like energy, healthcare, and consumer staples leading the way. Weakness coming from technology, consumer discretionary, and communication services. Some of the themes continue. The government shutdown still underway. You have the Senate moving that through. Now it goes to the House, so that seems to be good news. I will say we did get in the small business optimism index, and that showed a bit of decline, reduced profits, reduced sales. So you don't necessarily want to see that. The ADP number here, also they're now putting out some new stats, showed some weakness in the labor market. But I'd say the big picture is the guests that are coming on are still optimistic, still see growth in tech, still see opportunity, are still buying the dips, and are not running for the hills. They're not screaming bubble. They're not terribly worried. I mean, they may be cautious or taking some profits, but, you know, here and there. But you still have plenty of folks who are very optimistic. I mean, Michael Burry still is negative on NVIDIA and Palantir. He doubled down on that. This is the guy who called weakness in the great financial crisis in the housing market. So there are some naysayers, but for the most part, we have guests on that still seem to be fairly positive, even on tech and AI. Marley?
I'm hearing the same sentiment of guests I'm speaking with as well. Not too much concern about a bubble here, but let's speak about NVIDIA. You just mentioned Michael Burry, you know, still having some issues with NVIDIA. We are seeing SoftBank selling its entire stake off of NVIDIA, but then also seeing reports that they're saying that it has nothing to do with concerns about AI valuations. So, you know, walk us through this story.
Yeah, and that's the interesting part of this. First of all, when I was looking at it and I was saying, oh, the entire stake, boy, that seems like so much, only to do the history and go way back to the $4 billion investment that SoftBank made in NVIDIA in 2017, which then they sold off in 2019. And of course they made money, but then they were looking, you know, it seems like they're fiscally responsible or just looking for more opportunity. Then they went to Uber and WeWork. Had they held that position would now be $210 billion. So when I say that they're selling off the entire stake of $5.8 billion, feels like peanuts compared to what they could have had. However, the story really is not that they're tired of NVIDIA or they don't see growth.
Ladies and gentlemen, in 5 minutes, Washboardjim is going to be here to explain this chart pattern and what he saw and why he stayed in the trade.
So that's really more the SoftBank
in
story
5 minutes.
They're now looking to ChatGPT.
So gather your friends and your family.
And so that is the idea. As far as
grab
NVIDIA
your Bible.
We just heard this week about NVIDIA and Taiwan.
Grab your old lady.
More and more demand. You've heard
and
about
get
the
ready.
Blackwell systems
Because what I'm about to do
billions of dollars
is belch.
In revenue growth going forward for NVIDIA. So there are no naysayers at this moment really screaming that NVIDIA is a terrible investment. On the contrary, people still seem to be pretty optimistic. Nancy Priel this morning talked about doubling and tripling of many of the AI names. So that's the big picture. It's more about SoftBank moving to OpenAI than it is about SoftBank not liking NVIDIA anymore. Marla.
Yeah, you're certainly still seeing a predominant strong buy and buy ratings pretty much across the board for all the analysts who cover NVIDIA.
Jimmy
Nicole,
called out a
appreciate you
megaphone.
being with us for your market thoughts and
be
also
right back.
walking us through that NVIDIA story. That's Nicole Petalides. And now it's time for the disruptors. George Tillis, our senior markets correspondent, is here with today's company, Viasat.
I guarantee it.
Shares are higher after
If
JP
you're new to
Morgan
trading,
upgraded the shares to overweight.
I want you to take
right
time
now
this
they're
weekend.
trading up almost 5%.
Forget about
what's
your-
behind the call, George?
Your kids.
Well, I think there's
forget about
the
your
call
wife.
really about what's happening from a secular
Forget about
trend
anything you
standpoint,
got to
Marley,
do. Just learn
communications,
chart
direct
patterns,
to, of course, satellites.
moving
This
averages,
has been a trend. If you look at
and
Apple,
being in the
for
now.
instance, they start offering things like SOS services and things like, you know, Find My iPhone or Find My Location are using, of course, direct to satellite communications, bypassing cell towers. So that's essentially what's been happening behind the scenes with low Earth orbit satellite constellations like what Viasat, Intelsat, as well as Iridium Communications supply the marketplace. Now, VSAT actually has a large deployment of technologies for communications that use interfaces for avionics. For instance, Wi-Fi on board services for airlines, commercial and private jets, but also government applications and maritime applications as well. And they compete again with other companies behind the backdrop.
This is called a parabolic knife.
Including, of course, Starlink, SpaceX. But JP Morgan's call is really
So ready?
about, I think, a
Okay, let's
breakup
get ready.
possibility. They increased their price target to $50 from a quite conservative $23. They actually
Okay.
see the defense business as well as the
So
advanced
write it open.
technology segments of VSAT's
I'll call it a
business
megaphone
potentially as a breakup.
pattern.
And they also see growing trends, like I mentioned just a moment ago, in the communications
We were
business.
about
So
here, and we
they're
were
looking
about
at it
coming
sort
up
of
to
the
here
sum of the parts
before we got
valuation, multiple
to the
expansion,
VWAP
considering
on the
again
/ES.
that, the stock
And this is
seems
what
to
I
be
went by. I
trending
went
quite
by
well over
using
the
it.
past
I got the
year or so
SPX over here,
because of these secular
and I got the
tailwinds that are going on in
/ES over here.
communications
So I
space.
drew out this
Yeah,
megaphone.
you said you're trending quite well over the last year or so, up more than
I ended up getting stuck in it.
in 12 months. But clearly, JP
But on this
Morgan
third
seeing
dip,
more potential to the upside. Their new
I held
adjustment is
on.
about 30% higher than where we're trading right
And I
now.
run it all the way
so,
up.
George, with that and knowing how much they've skyrocketed just
To
recently,
the top of that
even if I just look
megaphone
at the 6-month metric,
and got out of
they're
the
up more than
trade.
300% there as well. How would you sample
So we got a
how
1,
would you
2,
structure
3,
an example trade here?
and a 1, 2, 3.
Sure. If you look at the chart, there's quite a bit of a
Then it dipped back down, and it jumped up. I got back in the trade.
VSAT. Then they actually posted a 9-cent adjusted profit. If you compare that to last year, they lost 23 cents. That's quite meaningful as a catalyst, they suggest. But again, it doesn't trade very robustly in terms of liquidity in the options because it's typically, lower price.
So the
stock,
second trade,
$40.
we had a triple
so you have to be
bottom.
mindful of that, but the trend is still intact. So you have to be mindful of that when you're placing a trade like this. It's still trending above the 50-day moving average. So what I'm going to do is I'm going to take a more of a longer-term approach here, and I'm going
We
to
had a
structure
triple
what's called a
bottom.
long-call diagonal spread. So in essence, I'm basically going to sell an out-of-the-money December contract,
1, 2, 3.
$45 strike.
And it run
I'm
up
gonna
to
use
the
the proceeds
200
of that out-of-the-money
for an
call
exit idea.
to purchase a February 35 in-the-money call, which is a little bit more expensive and which has deep valuation.
We had a parabolic. You
Now,
had to watch the
altogether,
candles.
You could essentially buy this for about $7 a share or $700 a contract. So again, you're selling out of the money with a short duration. That's 38-day expiration.
And I said we needed candles to go above that trend line.
Over 100 days for February. Now, when you place this trade, $7
Or above,
is your
was it
max
the
loss.
200?
It's your outlay. If you do
I think it
hold
was
the
the
position
200.
through December, you're just capped to 45. You won't participate beyond that. But if you don't hit 45 by December and it rolls, the December contract
We
rolls
broke above
off,
the 9,
you
and once we
effectively
broke
have a
above the
limited
9, it
cost
started becoming
between now and the
bullish.
February expiration. But you have to be mindful of your break-even price for February.
So I'm sitting here
100
watching
days,
this here
which is
resistance
$42.
level.
All right, George, we appreciate
Then we
you
pulled
being
back
with
again,
us.
then we
You
had
talked
that
through
big
VSAT,
engulfing
also structure
candle.
that example
And then
trade
that
for us.
broke
That's
above
George
that,
Tillis.
that,
Thanks
that
again.
support
And
line.
coming up next, we've got our 360
and gained
round.
respect.
We're going to take a look at earnings
And then it
from
was this one
CoreWeave,
here that
which is
made
under
me say,
pressure
okay, this is
after
going to
its
look
report.
good.
We'll break down the numbers next on Trading
Oh,
360.
shit, I can't remember. We had a fallen wedge off that
Trading
megaphone,
Schwab is powered by Ameritrade.
and then we
Unlocking the
pulled
power
back
of
to a
thinker
double
swing.
bottom.
The award-winning trading platforms. Bring your
And
trades
we
into
came back
focus
up, and
on
we pulled
Thinker
back
Swing
to a
Desktop
triple bottom.
with
And
robust
we had
charting
another
analysis
wedge.
tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization.
Then we had a triple
And track
top
market
breakout.
trends with up-to-the-minute news and insights.
It was above the 63.
Trade brilliantly with Schwab.
And then it came back and retested the 63 and kept on going up.
This is Next Gen Investing, where we track the trends shaping tomorrow's market.
All the way up that last trade I jumped in. I hit the 63 and jumped in the trade and run it all the way up here
Analysis and forward-looking market
to
coverage
280 to-
every trading day.
to what?
This is a make or break level for this.
460.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
No, it was right here. God darn it.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the
This
area.
was the one where it
Really
run
started
up
with
from
nothing.
280
He worked
to
hard, and
460.
After he passed away, the torch has been passed to me, and my advisor Jennifer, she was with me with the journey. helping with the estate distribution. The 2 grandchildren planning for their college educations. Someday it'll be their
So
turn.
we're going to remove all this gibberish.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders
I used to,
need
like
stay
I said
ahead.
earlier, I used to get
Fast Market weekdays at noon Eastern, live on Schwab Network.
anxiety attacks
SchwabNetwork.com.
when I
Welcome back
traded.
to Trading 360. I'm Marley Caden. It's time now for the 360 round. For that, let's bring in our panel to discuss
I had to
earnings
overcome that, or I
before
couldn't
we-
be
joining
a
us, Dave
successful
Nicholson, Chief
trader
Research
anymore.
Officer at Futurum, and Mike Maloney, CEO at Insight. Thank you both for being with us. Dave, let's start with you. You know, thoughts on the report? Better than expected numbers, but shares under pressure today.
Yeah, good to see you, Marley. Yeah, I think this is really the question of profitability versus kind of overall performance. There are constraints that are preventing CoreWeave from being able to deliver on its backlog. So, excuse me, it's a natural thing to see.
So right here is when I
Mike, coming
decided
over to
to
you,
put in that
what were some of your
megaphone
key
pattern.
takeaways?
I'm going to actually have to
wanna
agree. There's
take-
a huge backlog there, but hidden in the report is how much they can expand.
Where
They
I
grew by
started, it was
120
right here,
megawatts
and then
this
right down
quarter
through
alone,
here.
And they have up to 3 gigawatts that they can go ahead and grow. That's going to allow them to fill that backlog. So I'm
I think
bullish
I
on the
introduced Randy to a
So
megaphone
you
pattern.
mentioned, Mike, that they're growing,
That was
but
when the
efficient.
market
They have
was
the
at a
61%
resistance level.
margin. How
And you
much
start
confidence
seeing
do you
more of
have
them
that
expansion
they can
patterns.
scale into profit while also spending $12 to $14 billion
So I
in
take the
CapEx
bodies.
next year?
If they continue on the path that I'm seeing for them, they should be adding between $1 and $2 billion per half year as they grow that power. That's easily going to allow them to pay that about $9 billion of debt, around 6%.
And that's your megaphone
that
pattern.
they're looking to take on. So long
The
term,
200
I think the debt is the fastest
is the
way for
pivot
them to grow.
point
It's going to have small earnings per
on the
share
chart.
issues right now, but it's going to allow them to really springboard.
The
in
200
late next year.
SMA and EMA.
And Dave, you mentioned, you know, the backlog and the delay issue.
So when we got down to this last trade, it was a triple
How
bottom.
likely do you think it is, the CEO saying, that any of those
You
potential
had a 1,
issues will
2,
be
3.
cleared up
We
by
hit that
Q1
megaphone
of
right
next
there,
year?
and it bounced
Do you buy
up.
that timeline, or
And it
is
came
this
back down
a
again.
structural
And that's the kind of day we're having today. It's not a big
No,
bullish
I think that's
day.
reasonable. As was just mentioned, I think they've got the.
So we
they've got
came
the
down here and did a
framework in
triple
place
bottom.
to grow into this
And when we hit the
backlog.
triple
Another interesting
bottom-
thing to look at is the other sort of neo clouds that are in this cloud service provider network around NVIDIA. Most of them are privately held, so you don't hear a lot of noise from them.
You can see the
but they're
wicks were still being
experiencing similar
respectful
demand, and that's a very good sign.
to that triple
the
bottom.
fear would be CoreWeave being sort of a canary in the coal mine. If those people
Then
who are
we broke
committed
out and we come
to
up here and we
capacity
started hitting
back
the
out,
200
then
EMA.
the whole AI market sort of collapses like a string of dominoes. But I don't think that we're in any
We had
danger
the
of
triple
that in the near
bottom.
term.
Well,
And Mike, what are your thoughts on the canary in the coal mine setup here for CoreWeave as the backlog potential for this to be sort of the AI canary in the coal mine?
Yeah, Dave
And we
hit it right on the head.
consolidated-
If you go a little bit further down the field, though, everyone's talking
Right
about
in
chip
here.
constraint. I think
And I
CoreWeave
said
has really solved
5
for a
times.
constraint that others
I
aren't
said
able
5.
to
This is
solve
the
for,
5th time
and
we
that's
tried to
the
break
data
that
center and
200
power
EMA
access
and couldn't
constraint.
do it.
They're piggybacking
And on that
off
5th
their
time,
Bitcoin
it came
mining
back down.
roots.
You take a little nosedive
So
when you hit the
if they're
50
canary in the coal
SMA.
mine, I think they're going strong.
Then
I'd
it
be a
came
little
up
bit worried
with
about
that
the
big
smaller
engulfing
private groups
candle.
out there.
And as we're talking about these
So
smaller
once it
private
started to
groups,
break
Dave,
above
coming
that
back to
200,
you know, are there other
I needed
players
another bodied
in
candle to
this
stay
same
above that
ecosystem,
200.
in this NVIDIA
And there it
tied
was right there.
ecosystem that you
And that
think
continued
are
on with the
better
run to
plays,
the top of
perhaps,
that
than CoreWeave,
megaphone.
Or is CoreWeave still
that was
the
your
best
exit
pure
idea.
play bet on AI here?
Then we jumped back in
Yeah,
it
they're
on
really,
the
they're
dip.
addressing different.
Well, this
different
was
target
number 4
markets, but if you look at somebody like a
on the bottom of that
mass
megaphone,
compute,
on the bottom of that
you know, if you
quad
need
top,
hundreds
quad
of
bottom.
GPUs,
You had the
you don't
triple, and then you had
necessarily
the 4th
need absolutely the
one
latest
with a
and
hammer.
greatest to do your latest.
So I
feature
automatically
model
jumped right in
training
it.
run.
I didn't hesitate
That's a
1
place
second.
that you'll go, and there
That's
are
called
others
a
in the market space,
parabolic
but no, I don't think that we're in the same category
pullback.
as CoreWeave.
And I jumped in it right on the hammer. I didn't even think about it. And if you were going to be smart about it, you'd wait for it to break out and pull back. And that created an inverse head and shoulders. There's your left shoulder and your right shoulder in your head.
Because their business is so
then it went ahead and broke out past that.
NVIDIA's GPU supply, does that dependency worry you at all, or does NVIDIA's
So that 200 was the pivot
make
point. You hit the resistance here. It couldn't touch it here. It touched it here a couple times, and again, and then finally you had this here doji,
right now is showing a little
long leg doji,
actually right there on the board. So I would
and
say
it broke
that
on
the
out.
casual observer would be a little bit risk adverse and maybe pull
So
out. However, if you're bullish long-term,
I'm sitting on cloud 9 right now. I don't even want to trade anymore. I've had,
in the United States,
a 5x day.
Pure play access, and long-term, I think that's the way to go.
And Mike, you drew an interesting correlation.
And I'm being real relaxed. I came, when I was down in the hole, I just started playing my guitar.
Just walk us through that.
Yeah, I think that's no surprise.
So I don't ever want to get real nervous. It's all about the mind over matter.
Seeing right now. These
I used to
large-scale
box
data centers that were built
when I was younger, before they told me I couldn't box anymore because of my health.
All across the United States and other jurisdictions to provide that power. Well, that's a diminishing return in the long term, even as Bitcoin
I was a skinny guy,
crypto continues to grow.
And
they're now being repurposed, sort of.
And everybody thought they could whip up on me, and they did for a while.
That new in-demand
until I came in there one day, said this is going to have to stop.
Core Scientific, and I
I'm
think
going to have to stop getting beat up so bad.
Bitcoin miners moving the same way.
And
Hut 8 already announced it.
I built
sure
a layer of confidence in the ring.
Well, thank you both for
and
being with us this morning to talk about
when I played baseball
after its earnings and its future potentials here. That's Dave Nicholson from Future.
I wasn't good enough to play basketball, be on the team, but I did. I tried.
Trading down about 12.75%. Also, want to thank all of you for joining us
or
today.
Anything I do, trade stocks.
I'm Marley Caden. You can download the free Schwab Network app available in the Apple App Store.
Picture framing.
And tune in 24/7
I wanted to be the best.
I'll be back later today with Market on
So I had my mind was
Central, but stay with
dialed
us. Fast
in.
Market with Diane King Hall is coming up next.
And I had to figure out trading with Vegas. I used to breathe real hard in the mic, and she hated it.
Whether you're an experienced investor
She just couldn't
or
stand
just
it.
getting started, Charles
Because
Schwab
I'd be in a
offers
trade and
webcasts
it'd be going down
right
on me, and
for
I'd start
you.
hyperventilating.
Platforms and tools webcasts
And I
are
didn't
designed
have the
to
confidence in
broaden
my
your knowledge,
strategy.
platform features and resources.
And once I got in this room, when we started this room, I had to come up with something new. I didn't have the scanner. I had to come up with a strategy without trading with her.
Best of all, you can ask questions.
I had to come up with some other strategy.
It's
And I put everything together that I've learned through the years from a guy that I traded with on TrendSpider.
Start learning today.
One of the founders of that taught me a big lesson, that I used to look at things horizontally, so I started looking at things vertically and letting that add up, instead of just waiting sideways for my support lines to hit. I started taking things at a different level. I started looking at things vertically.
Follow the biggest headlines, live analysis, breaking news, and
then I took
trade ideas
about 2 months and just studied chart patterns. And then I kept moving my moving averages around.
And precision.
I think one of the most important things is you're making a play in a risk-defined way.
And I think I've got the perfect moving averages right now, but you never know. Something else might come up,
Smart insights.
and I find it more appealing.
Veteran traders.
But get your pencil and paper out.
Streaming live and on demand.
Schwab Network, streaming 24/7.
And I use the EMAs.
Anywhere, free. Schwab Network.
The 9, the 21, the 63, and the 200. And I got 2 SMAs, the 50 and the 200. So EMAs are the 9, the 21, the 63, and the 200. And the EMAs are the SMAs are the 50 and the 200 SMA. And RSI, which I don't use that much, but I use the volume.
I'm Sam Vardas, live from the New York Stock Exchange. When the market moves, we're on it. Getting the
Sometimes tells me, and I use the time and sales.
Real time. Stream Schwab Network at schwabnetwork.com.
And I'll use the news. And I used to use the level 2. So before I jump in a trade, I like to I'm always gazing down here at the news. On any stock that I'm looking at. And I'm using the volume. So this one was 1, 2, 3, boom. This one, and I had to add on that one trade because I just kept adding on because as long as I was inside of that, close to that megaphone, I worried about it, but I didn't worry about it. I was kind of antsy. I had to take my mind off of it, go and make a salad or
Welcome to Fast Market here on Schwab Network. I'm Diane.
write a song
on
or
noon Eastern here at the New York
pick my
Stock
butt.
Exchange, and trading activity has been mixed so far today.
And then
Let's
that number
get
4
into it
with a hammer.
check of
Boom.
your scorecard as we hit the lunch hour. We've got, again, mixed market. The S&P 500 taking a little bit of a step back.
So I hope that helps
by
a little
just
bit.
shy of 0.25%, but still managing not to break through that 6,800 level that we saw reclaimed yesterday. In
Google.
terms of the sectors, where you have the biggest weakness is information
Bullish.
technology, followed by a little bit of softness in consumer
Bearish.
discretionary, but putting some support under that
Sharp.
weakness is our gains in energy, healthcare,
Patterns.
and materials, followed by consumer staples. The Dow has
Reversals.
a gain of more than 0.5%. The NASDAQ 100 taking a step back today, down 0.8%.
Then go to
We've
image.
been watching some pressure in
Pick you out
NVIDIA.
a-
Russell 2000 off by a little more than 0.1%. Here's the roadmap for
Pick
today's
you out
show.
some kind of
We'll look at
template.
example option strategies for AMD, which is hosting its Analyst Day today. Plus, the team from Likefolio will be along with sentiment
And
data
keep that to the
on
right of you.
holding. That one's been an underperformer so far this year. And Oklo is also
Or the
on
left of
our
you.
radar. Set to release its quarterly report
Or
card
above you.
after the close today. Keep in mind, this is one of those pre-revenue companies. Now that we've got the roadmap for today's trading action, time to bring in my co-hosts and veteran traders, Tom White in our Chicago studio and Kevin Hinks joining us live from the CBOE. Okay, guys, let's talk broad strokes across this market. Yes, we have some mixed action, but again, one of the things I'm, noticing is that we're not breaking through that 6,800 level
And
on the S&P 500.
work on
Tom, when you
knowing
look
when they're
broad
going to
strokes, what's your take?
squeeze.
Yeah, it seems like thin trading here on
Like when the
Veterans
higher
Day,
higher
maybe
lows
that's
get
a
higher and
play
then
here.
the higher highs
Bond
get
markets are
tighter.
Closed, although they're trading on the Globex platform.
This
So
is a descending
maybe some
flag,
tight
but it's
trades,
coming in a
some
downtrend.
consolidation after that massive
And
rally
it can go
yesterday,
either
where
way.
Maybe a lot of
But
what
it depends
came
on
out overnight
an
with the
ascending
Senate voting,
triangle.
to end the government
So
shutdown.
you're coming out of
Now
a
they've got
snake
votes
and it
for the
starts to
House
break out of the
scheduled
snake
for
and then it forms an
tomorrow,
ascending
before it
triangle.
goes to Trump's desk.
Or
So
you're
maybe
coming
just,
down on
some
a
consolidation
knife.
here warranted. Maybe it was already built into markets at this point. Then you look at the ADP numbers. They
what's
saw
this?
that over the past 4 weeks, averages of over 11,000 job losses per week, and that up-to-date data is what I think the market wants more.
Coming
than
out of a
anything.
knife, you got a
It
rising
confirms
wedge.
This bifurcation that we're
When that
seeing
starts to
between the
squeeze,
jobs
usually
market
they pull
and
back.
inflation, which is
You
at
got a
the
fallen
3%
wedge.
level and
Coming
above
out of the
Fed's,
knife, comes out of the
2% mandate,
snake.
where it's got people
Goes to the
scratching their head a
upside.
little bit and trying to figure this out.
Okay,
Will they
well-
cut in December? Well, the CME FedWatch
then
tool is telling you that they are going to
study
cut in
the
December, and
candlesticks
jobs
that
market
break out from
continues
there,
to,
like a dojis.
get a little bit weaker, and will that flow basically into the economy, which will flow into the equity markets at this point, especially with these markets, Diane, at
Get your
really
little template.
elevated valuations on a historical basis. At
We got
this
the
point.
dragonfly.
So, yeah, maybe just
Long leg,
a calm
common
before
doji.
Maybe more storms coming down
This one I
the
don't
pipeline.
talk about much.
Maybe some higher
For
implied
price, I've never
volatility
heard of it.
levels
And you
that
got
we
the
never got
gravestone.
in September and
They're
October.
a lot more flatter. They
but
got
we're
big
starting to
bodies on
finally
them.
See them rear their ugly head here in November.
There's a dragonfly,
Maybe blue skies.
long-leg
Love to see
doji,
that, especially
classic
with how
doji,
frigid it is
gravestone
here
doji.
in New York. I know it's been cold there as well.
And
Great point
hammers,
about the
candlesticks.
thin trading potentially because of Veterans Day, because the
third.
drain was light this morning on my way in. Kev, when you look across broad strokes across the market, what's your take?
I see today as kind of the exact opposite of yesterday. There's one
Candlestick
right now
patterns.
I've got almost seven sectors of the S&P 500 higher despite the market being lower. But what are the key areas that are lower?
Bullish engulfing. You
Information
got the
technology is
hammer,
over
the
1%
morning star,
lower.
which I call spinning top.
Communication services is down.
Piercing pattern.
Consumer discretionary
Marabuzu,
is down. Those are
whatever
the
the
three
heck that
big
is.
drivers of
That's
this
it.
market.
That's where I come up with
Like
the
they
3
were
black
up
crows
yesterday,
and the 3
they're
white
all
soldiers.
down today, and that is why this market
3
can't
white
seem to
soldiers.
get above ground.
Tweezer
That said,
bottom, inverted
if
hammer.
there's dip buyers, Diane,
Bullish
they'll
hard
show
money.
up the second half of the day for sure.
When you got that candle
and the
inside
other thing
your-
is,
your
something we
third
talk
crow.
about on this show a lot, headlines. They're
So I'm
very
always looking what's going to
headline-driven
come
market
after
this
them
morning.
crows.
All
What's going to
over
come?
some of
What's
the
going
big
to cause
names
that
all have
reversal to
headlines
go up?
out about them, kind of weighing down some of these names. So headlines are really overwhelming
three
this
things
market
you need to watch.
right now, causing some
Okay,
hesitation.
I'm done.
So that's the way I see this market. It's almost the exact opposite of yesterday. And why is it the exact opposite? Headlines, Diane.
Good point. Speaking of those headlines, NVIDIA on the receiving end of one of those. Shares lower after SoftBank.
The 6820s are at $1 grand.
Company had some more than 32 million shares. Tom, what's your take when you look across the weakness we're seeing in NVIDIA? I mean, and keep in mind it did gain some ground yesterday.
Yeah, giving up some of those gains, down 3.5% today. But
We're back at resistance now on the /ES.
I'm not sure.
We're coming up to a double
investors are
top
taking this as
on
a
the
hint that
SPX.
Maybe we are starting to see maybe some topping out in some of these AI names, but you can't ignore the move that you're seeing in there today. Sold $5.83 billion worth of their stock. This is the second time. Remember, they entered in the investment in NVIDIA in 2017, sold all their shares in 2019. They're doing the same thing now. I think it's more of a diversification issue at this point. The firm stated, SoftBank stated that this is asset monetization, right? They've already got that deal with NVIDIA AI chips, their $500 billion Stargate project that they're helping out with data centers here in the U.S. So they still have coverage with NVIDIA. But if you take a look at their earnings that came out, they saw $19 billion in stake sales.
Unbelievable.
Along with that, NVIDIA.
That's what you
they
are.
sold most of their T-Mobile also. That was over $9 billion. So maybe just a little bit of diversification.
It's time for a song.
You can't ignore the fact that they're getting out of some of the tech space or their coverage in it. It's trying to diversify maybe their holdings a little bit. But at the same time, if they've already got a lot of partnerships and they're going to continue to work with NVIDIA, they're not abandoning AI by any stretch of the imagination. And NVIDIA is right in the crux and needed across the board in everything else they invest in at this point. So yeah, not a bad thing at this point, but it's definitely hurting their stocks. And a lot of those stocks that were doing really
Watch
well yesterday
ad-free,
are getting hit
offline,
on the back of that,
and in the
whether it's
background.
Micron
And listen
some of the
ad-free
other
on the
tech
YouTube
names
Music
that
app.
were up pretty
That's
significantly
right.
along
One
with
subscription,
NVIDIA.
2 apps. Continue watching the highest quality videos from anywhere by seamlessly switching devices. Set up automatic downloads.
Double top, baby, yeah. Double top. yeah.
This is headline risk, but it seems in some respects it could be seen that way. What's your thought, Kevin?
So why did Michael Berry come out this morning on X and say these things? Well, probably because he got freight trade yesterday in yesterday's market. And Daniel Newman, the CEO of Churro Group, came out and said something very interesting. Michael Berry made his name by shorting the housing market, right? Credit default swaps. And he said, there's a very more nuanced structure to what's going on right now in AI with these chips. And these are not ninja loans for houses that we're talking about here, where he made his original money. This is a much different thing. And depreciation and how they're being used is much different and more nuanced. So yes, he's made a name for himself shorting, remember, the housing market in The Big Short. These are not them. So let's see how that works. But not surprised he's on X this morning, because he probably looked at his P&L this morning and it wasn't pretty, being short Palantir and NVIDIA. So, well, you know what? Time will tell how this plays out. Time will tell what inning we're in. That's one of the big discussions. But boy, Jensen Huang telling Taiwan Semi yesterday that he needs 50% more chips, that doesn't sound like anything that's coming to an end anytime soon, Diane and Tom.
Speaking of the demand picture, when you think about AI, CoreWeave has been talking about that, and they say, you know, it's more of a, it's a problem meeting demand, right? They had to reduce their guidance. Those shares are under pressure. It's getting worse as the day progresses. They did meet expectations, but they flagged that issue with one of their third-party data centers. And to me, my take was that was about meeting the demand, but investors are, you know, selling first, ask questions later. Tom, what's your take when you look across CoreWeave?
Triple top.
Concentration risk, and think about it. CoreWeave's got concentration risk. They've got 3 or 4 big customers, right? And one of those customers is probably putting off the timing on build-outs of these data centers and the rentals of these data centers. And that's going to be a concern. We talked about this yesterday about the guidance moving forward. Yeah, revenue grew 134% from a year ago levels. The backlog now stands at $55.6 billion, and that's at the high end or right in the middle to high end of what the expectations were. So they're having these performance obligations that are going to have to be met, right? If some of their big customers continue to invest and use CoreWeave's products. I think that's one of the concerns that investors have at this point. But the stock, you know, the bar was relatively low going into this report. But I think that lack of clear guidance, the J.P. Morgan downgrade kind of highlighted that, where they're not going to maybe be able to meet goals for the next quarter or two. And that's a concern, I think, here for investors and why you're seeing the stock down pretty significantly.
You know what's interesting? I saw the CEO was here today, actually, Michael, a trader, and he seemed just very calm, cool, and collected. And look, that might be his personality. But Kat, when you think about CoreWeave, what's your take off the back of this?
I saw the same interview that you did, Diane, and he basically said this: we are as busy as we can possibly be, but a data center development delay caused them to push numbers from this quarter to the beginning of next year. Not canceled, no lack of demand, but just those delivery numbers got pushed out. So they're not gone, they're just delayed. So his recount of their quarter and how their business is going was similar to Jensen Huang using hyperbole, and he couldn't have been more positive about his business. But the stock is reading into those delays, and they're selling the stock off pretty hard.
Well, they just can't get over CRWV.
How much weight we put in that? But certainly, I listened to the same interview you did, Diane, and wow, he didn't show any signs of wavering, not even one word of hesitation out of his mouth.
Yeah, well, maybe his view is delayed but not denied. Tom, I want to get a quick thought on you because we've been looking at P-Sky, Paramount Skydance. Those shares rallying more than 10% off the back of its quarterly results. What's your take when you think about this one? It seems like investors are just focusing in on the positive or what the future landscape looks like.
Well, it seems like their DTC business, direct-to-consumer, is doing really well. The media lagging a little bit, but then you start saying that, hey, we're going to cut another 1,600 employees. You know, they're cutting costs. They're making those hard decisions at this point. They came out and said they're going to release about 15 movies a year. So maybe the cost cutting there also, where they're just not throwing things at the wall and hoping they stick, I think has investors a little bit more excited. And then also they announced that they would be raising prices for streaming service in the next year. So some positives here, but typically you'll see that when the results are a little bit better than expected, the guidance is a little bit better than expected, but then you throw in the additional job cuts and cost cutting across the board. Maybe that's why we're seeing a little bit more optimism in this name.
I know this is not your favorite space, but you've got a quick 30-second take, Kev.
You know what? Streaming and entertainment is going through a major upheaval. And so I think with all the mergers and acquisitions and everything that's going on there, there's a lot of dust that needs to settle going forward to get this figured out. So I think, listen, if you're interested in streaming, if you're interested in this, you're right. I'm not an expert in that, and that it just seems like they're going through a major transition trying to get this right. And listen, if you like that business, trade Netflix. That would be the way I look at that, because the rest, very uncertain.
Yeah, that's a good point. Netflix has been at the top of the leaderboard in that sector. Other companies trying to figure out where they can fit in the lineup. All right, guys, we'll put a pin in that. We've got Bull versus Bear coming up. You guys get their example traders. AMD, as it gears up for its Analyst Day. That's happening this afternoon. We'll have more fast market after this break.
All that negativity, the way they were talking this morning. They were talking very negative this morning, but it didn't bother us.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. Big day for AMD as it gears up for its Analyst Day today. CEO Lisa Su is expected to update AMD's AI forecast. Now, Bank of America is projecting AMD will boost its 2030 total addressable market outlook for AI accelerators from $500 billion to somewhere in the range of $750 to $850 billion. All right, let's throw on the trading glasses now. But welcome back in our co-hosts Tom White and Kevin Hinks. It is bull versus bear time. Before we get to the example trades, got to get your take on AMD. I mean, think about this one. This has practically doubled since the start of the year. So it goes to show you really, if you think back in terms of hindsight, you can't count it out. Kev, I'll start with you. What's your take?
Yeah, you know, AMD, the numbers, they put up 36% year-over-year revenue growth in the last quarter. Diane, the question everyone wants to know is this. This Rock M7 chip that they have, is it competing with NVIDIA, right? And they say it is. And they say they've got good partnerships. They've got partnerships with you know, couple different firms, Oracle, OpenAI. They've got high-profile names. The stock has jumped off when they announced the OpenAI bill. The stock jumped, and it's staying there. But my only problem, Diane, is we've heard this before from them, and then NVIDIA comes out with a new chip that just extends their lead. So the bet is, you know, the idea is that people are looking at here is, are they competing with NVIDIA really? They claim they are. I'm sure today will be more of that, but are they really? I mean, that's the tricky part. But the numbers they're putting up, they're starting to grow. That's why the stock is up and holding these levels, Diane.
Okay, Tom, when you look across AMD and across the whole landscape, what's your thought?
Yeah, if you look at their last earnings, Kevin mentioned, they beat on EPS, they beat on revenue, that growth of 36% on sales. And then, you know, their data center grew 23%. That was a little bit above expectations. You look at their CPU unit of their business, that came in above expectations at $2.9 billion. And gaming even did well last quarter. So not surprising, the stock's had a great run, up nearly 100% this year, but it's pulled back about 10% from those all-time highs. I mean, the analyst day that they're going to have, you got to look for that commentary about whether these deals with OpenAI, you know, OpenAI has agreed to purchase upward of 160 million shares of AMD, about 10% of the company. Are they going to be able to afford that? You know, those are the questions you have to start asking. And, you know, how thinly spread OpenAI is becoming with all their investments in these roundhouse deals that we're talking about. But Lisa Su's got to put it out there with whether the MI400, you know, segment of their chips, these higher ends that you know, compete with the Blackwell, are doing as well as they stated on their last earnings report also.
Okay, so let's get into the example trade approach for both of you guys. Kev, why don't we start out with yours?
Sure. Mine is, you know, because this stock has traded as high as $267, and then it's come back down to right around the 240 level, just below that now. I looked at something taking us into the month of November, and just something looking at the expected move during that period and just doing something in the calendar spread family, Diane. Now, I bought the December 5th. So December 5th, I'm going out 24 days, so 3.5 weeks of duration here, and I bought the 260 call. Then I went into this week and sold the 250 call. Now, you don't have to go to this week. You can go to next week, the 21st, and sell it.
So I had 48, like 68 20s.
Premium left.
Can you imagine what that would have been like?
This week. That's why I shortened it
I
up.
had 48 of them
on the table with that 260 call. So I that's worth about $565. It's traded about
times $1,700.
So it's a bit lower than that. But this allows you, think about it, Diane, it allows you to extend duration into the November 21st expiration, then the November 28th expiration, and then you could extend one more time and the December 5th expiration, each time chipping away at that debit, Tom. So this is just a longer term, gradual move towards $260, Tom. That's what I'm looking at here.
Yep, let's break this one down. 24 days to expiration, going out to the December 5th weekly options, buying the 260 strike call, out of the money to the upside by just about $11 here. And then in the near term, November 14th, weekly options expire in 3 days. Sell that same 260 call. So about a 3-week wide call calendar to the upside gives you exposure to the upside on that 260 strike, paying roughly about $565 debit, trading a little bit lower than that. But the debit you pay is going to be your risk. So about $560 per spread on this one. And you can see here from the risk profile, the apex of profitability, you want it to go at or near 260, but you've probably got a range between about 245 and 275 that you can still be potentially profitable on this one. And I think the key here is that, as Kevin mentioned, as you get closer to expiration over the next 3 days, you know, that 260 strike call that you sold in the near-term options, those are trading about $1.05. And those are $11 out of the money, $12 out of the money to the upside. So that's extrinsic option premium that you're selling. The idea here is as you get closer to expiration, you buy that short back and then you roll it to a next weekly cycle or close the whole trade. The idea is you want it to be as close to 260 as you can because you're going to collect the most credits. The market's open, you can make those adjustments or rolls that collects more credits, increases potential profitability, and reduces risk every time you do that. But you definitely need to move to the upside here to get within that window of potential profitability, as I mentioned, between about 245 and 275. So upside exposure at maybe a lower entry point cost-wise than maybe buying a vertical or something like that from these current levels. Now, let's flip this script here, Kevin, and I looked at the bearish side of this. And it's not completely bearish, it's not aggressive. This example trades a little bit more passive because you don't know what's going to come out. That AMD conference with the analysts starts in about a half an hour here, so you got to take that into consideration. And then also stay risk defined. Kevin's call calendar is risk defined, right? The debt you pay is going to be a risk on that one. And this one, you know exactly what your downside is also. So we're not to the November 21st weekly cycle. So just 10 days expiration, shorter term positioning on this example trade. We're going to sell it out of the money call vertical. We're going to sell the 250 call and then against it because we want to stay risk defined by the 260 strike call. Short $10 wide neutral to bearish call vertical, collected roughly about, was trading 250 earlier, it's trading about 230 right now, so you might not collect as much, but the stock has come down a little bit.
Yeah, it has.
But if you collect that 250 credit, that's what you make, $250 per spread with $750 in risk, but that's all the way above 260. And Kevin, this is one of those strategies where, hey, I'm not going to make as much, I've got a lot more risk, but at the same time,
it's a lot different.
The probabilities are in my favor on this one.
69%.
It's a lot different feeling when you're down here and you're hoping that it works to when you're up here looking at, God, it did work. You only hear about the triple top, triple bottom. I come up. I don't think anybody knows this here strategy. If you can count to 4, you might make a little bit more. And boom! Boom! I ain't never heard anybody talk about the quad.
Across the sector, stock still down today. Stay right here on Schwab Network. We've got more Fast Market after this break.
Hi.
Blind date.
I'm Dean. And I'm his mom. Sometimes, you know,
God.
you could have done better.
Your new girlfriend looks like your mom.
Level up and invest smarter with Schwab.
I'm Sam Barnes, live from
Hi,
the New York Stock Exchange.
I'm his
When the market
mom.
moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
And that reminds me of a night when I lived in Seday, Missouri. I went out dancing at the bar and met this girl, and we got along real well. And then I went my way and she went her way. And I get on the door the next morning, and there's this little 11-year-old girl standing there. And she looks up at me and she says, "My mom wants to talk to you." What? My mom wants to talk to you. It was the girl that I met the night before. She drove around the whole town of Sedalia. She must have took down my plates or something. But she found where I lived. Hello? My mom wants to talk to you. And what the fuck are you sending your daughter up here to knock on the door? That's the strangest. I mean, I went out and talked to her, but I felt awkward. Like, brings. My mommy wants to talk to you. I said, okay, I guess that's going to be my future wife. Or I'm going to be her sugar daddy. That's not creepy? You being funny? My mommy wants to talk to you. It's okay. What does she want to talk about? She wants to know if you can be my daddy.
By their customers that are seeing growing demand that are
She
in the
does.
right sector, which is luxury and exclusive type of style, then this is a stock worth looking at here at 35% discount compared to where it was at the beginning of the year. So everything we're seeing for On is
Will you be my
positive
daddy?
From a consumer perspective, from a mega trend perspective, they're on the right side of the K-shaped economy. So we really like what we're seeing here from the company, and we
I knew right after that it was a no-go.
The stock here, really solid opportunity for investors.
Yeah, Andy, down 36% just so far this year. That one chart kind of sticks out to me, and you mentioned it, that bifurcation that we're seeing between what your data shows and the stock price. That's probably the widest gap that we've ever seen in that. Do you feel like On Holdings is getting thrown into this bucket where you've seen the deterioration in share from Nike, from Lululemon, anything in athleisure, anything in maybe athletic?
It was on a Sunday morning,
where,
too.
Hey, I'm just getting thrown into that boat, even though your data is saying the opposite at this point, just because we've seen some softening consumer trends overall, but maybe that doesn't apply to On Holding, right?
Yeah, and they're also getting thrown out, I think, for decent reason because of tariff pressures. I think that's a fair, reason to be skeptical about.
And then I remember we were signing yearbooks in college, and some girl wrote on the back of it, oh gosh, let me read it to you.
You know, their expansion into Asia has gone remarkably well. China same-store sales up 50%. Those customers are chasing the same thing as U.S. customers have already discovered, and that is, you know, status, quality, and business culture.
1992.
Yeah, we really like it here. We think there's some valid reasons for growing. On holding stock out a little bit. There's also a lot of misconceptions about this company.
1992.
All the other footwear companies, which we think is completely unfair.
So let me ask you that. So I know
People
that,
called me
you know,
Bo,
from your sentiment,
Jimbo.
it looks like there is still strong sentiment or
I
and
can't
interest
tell
in
you who I am.
holding. And when you look at
Please forgive me.
analyst views on this, they are
I've
largely
watched you
in
from
the
afar
buy camp on this one, actually.
for a
So there is
number of
conviction, but
weeks.
it doesn't seem like that's
Often
translating to
imagine our
investor
relationship
interest. What do you think is the issue here? Is it
artistic,
because
athletic,
just forget about
and
the
hot.
whole group? Because as you mentioned,
Someday
the pressure
when
that
I
we've seen across the board, whether
am
we're talking
free,
about Nike and its
I'll come to
turnaround
you.
or beyond.
Yeah, you know, I think that one of the reasons that, you know, I
You'll
love
know
what you
someone
guys
is
do is because you dig in
coming for
beyond
me.
what
Someone's calling me
you know,
for
kind of
borrowing
momentum traders or the basket traders on Wall Street will do.
something
They'll
to
just
go,
put a
have
bunch
to
of
go.
stocks
Someone
together in one
is
basket and
coming
just say,
for
"Look, we're
me
not going to look at that
for
until
borrowing your
this
book.
one macroeconomic condition is solved." But inside of those
XXLD
baskets are often
question mark.
jewels, diamonds in the rough, and I think on
I wondered who that chick was.
Category
Finally.
because, again, when you find companies that are
10
getting
years
thrown
later.
out by Wall Street for a variety of macroeconomic
Jim.
reasons, but at the same time continue
I hear the same thing.
you know, build their
Jim,
base and build loyalty
I'm here.
among their customer group.
It's been 10
that
years
often
ago.
has translated into incredible
got a
opportunities
girlfriend.
for longer term investors.
You're a little late.
Real quick here, you know, going into this, it seems like you guys are, you know, an earnings score that's probably elevated above what the street has at this point. But, you know, when you look at this, everybody's talking about the top, you know, the affluent, you know, consumer at this point is still spending. This is a more affluent product at this point, and you see that brand loyalty that's starting to come into play here. When you look at this, are you seeing any trends going into a lot of these retail earnings that we're going to get over the next couple of weeks that there might be signals out there in other areas and sectors that are going to get punished this quarter, or is the bar relatively low for a lot of these stocks?
Look at
Yeah, I think the bar
hundreds
is
of stories.
low, and you know, we saw with Ralph Lauren, you know, that ticker symbol RL. It's just a steady kind of premium-driven growth. Again, the bar was low there, outperformed off of sentiment lows. So we think that there's opportunities in individual stocks in this market that Wall Street just isn't recognizing.
I'm sitting at
yet.
the bar one
And
day and
you know exactly how
this
we
girl
like to play
taps
it.
me on the
I will
shoulder
say,
and says,
you know,
Jim.
in this earnings season, we've
What?
seen kind of a sell-first
Laura.
mentality.
I haven't seen her in
across the board,
15
and
years.
Some of these names have gotten really
We kind of had a little
harshly
fling
punished,
on
so
the
I'll leave it up to you
school
guys to
bus.
make sure that we're defined risk going into earnings. But
So I'm sitting there and I buy her a beer,
like
and
this stock and think that they're
within about a
executing
minute, she spills the
across
beer all
board
over
for their
me.
customers, and eventually
I'm
Wall
sitting
Street
there again. I buy her another one.
All right.
She knocks the
great
frickin'
stuff.
beer
Thanks
on
so
me
much for bringing
again.
your data today,
So what
Andy.
the
It's super helpful. That's Andy
the heck's going on here?
co-founder of Likefolio.
And I
now
buy
get
her
the
another
trading
one.
perspective on all things
And she
on-holding.
spilled the
Want to bring
third one
Kevin
on
back
me.
into this conversation. And Tom, get a final thought from you. When
And
you
she
think
was a
about the insights, I
cheerleader
think
from
that
one of the high
stood out
schools.
to me as well about,
I didn't see her like
what
15 years
demand
later.
looks like from one side versus
She's
the
all
other.
shook
so you
up.
think it does have a lot of support from.
And we
when
end up
talk about
living
the
together for
K-shaped
10
economy
years.
and the higher income shopper. But
So how am I going to drive home smelling like
your final thought before
beer?
you get into the example trade?
Yeah, Diane. You
So I
look
called
at
a
it,
cab.
overbought
I didn't want
or
to take the risk.
Oversold, excuse me, on a technical
And the
basis.
cop
The
would open
RSI
up the
is
door
down
and said,
27,
"Man, you've
on
been
this
drinking."
one. It's just been in a trend to the downside since probably January of this year. And like I said to Andy, I think this is one of those stocks that has been thrown into this bucket along with Lululemon, Nike, and some others that have underperformed.
Okay, we're hovering up above
But that doesn't
resistance.
mean, it doesn't deserve to be down at these levels. You have to take that into consideration. But Kev, I'll bring you back in here. Option market pricing in about a $3.50 move. Andy mentioned it, that bifurcation between, their data and what the markets, what the stock price has been doing. What are your thoughts here on an example trade?
Yeah, obviously on holdings playing for an upside.
Do you remember when I called AMD out?
There is a strategy that you can use
on the pullback.
Looking at the implied volatilities of the front expiration versus the second. Front expiration,
It's still down.
145 on the implied volatility. The week of November 21st, a 95 implied volatility. You can look at the expected move
it's still down.
$3.40, and you can do the 38 call calendar, Tom. You buy the Nov 21st, 38
Did break
call,
out a
sell
little
the
bit,
Nov
but
14,
still down.
38 call, currently trading 20 cents, Tom. And actually 20 cents, it's actually trading
NVIDIA's
a
at the
bit lower
200.
than 20 cents right now. So I think this is an opportunity to spend very little money,
Time is
very little capital.
11:41,
and get an
jeez.
upside play in
Man, I
line
should be
with the
paid
expected
sitting here
movement
all
on
day.
holdings, Tom. A very inexpensive way to play the upside. And by the way,
I might be taking up the
probably
collection
play the
plate
downside
soon
the
for
same
another
way
vacation.
if you wanted to.
Yeah, let's break this one down. Just really short-term positioning on this one.
Does anybody think it's a good idea?
Call calendar to the upside that kind of sets up with like Folio's
Randy?
data here. Buying the Nov 21st monthly options that expire.
I've been waiting
10
for your
days,
generous
buy the
tip.
38 call. Sell that same 38 call in the November 14th weekly options that expire in 3 days.
Randy's a
20-cent
tightwad.
debit. That's your risk. $20 per spread on this one to give yourself some upside exposure on this. Now you can see here from the risk profile that we've got the apex of profitability. Where you make the most is if the stock goes up about that one standard deviation and sits around the 38 level. But you've probably got a range between 34, 35 on the downside and about 41 on the upside, and you can still be profitable on this type of trade potentially, just due to the fact that you're going to see that implied volatility, get crushed post earnings in the near-term options. It'll come down in the options that you bought also, so that'll contract the price. It does look like you can make maybe $150, $180 per spread on this, but you've got to be cognizant, Kevin.
Have to go.
When you
Someone
look
is
at a
coming.
trade like this,
Forgive
it
me
only
for
costs a
borrowing your
20-cent
book.
debit. You don't expect to make $100 per spread on this one. You've got to be more realistic where, hey, if this thing expands to 50 cents or 60 cents, that's when you start looking to maybe close it out if the market's open, right?
Well, unless you want to be extremely patient, have extremely strong hands, and hold it all the way till expiration on Friday at 3 o'clock, close to 3 o'clock.
Tonight,
because that's where
I need to get
it
paper
peaks
towels, or I wait a
around the
day and do it
$38
tomorrow.
level. So,
I
yes,
might do it
if
tomorrow.
you're looking for a short-term trade where maybe you're putting it on today, taking
Oh.
it off tomorrow,
I know what
you're
I need.
not going
No, I
to get
don't. How
all
about
the way
extra?
to the peak of that profit graph. But if you're the kind of trader that has patient hands that can hold
get
it
them
all the
towels.
way to
Shoot.
expiration, remember, it
gotta
increases the
wait.
chances that you'll be more profitable, but it increases the risk as well.
Might go in the
As
kitchen
when
and
it
do
moves
some
away
dishes.
From there, you would lose some of those profits. So it all depends
Take a little
how
break from
patient
this.
you are and your risk tolerance, Tom.
Yeah, we always talk
For a
about that,
second.
Kevin, price action. You got to know where the stock is because you're not going to get any max profitability unless it's at or near that 38 strike as you close that out, as you get closer to expiration on Friday. That's ideal.
We're still above
on this type of
resistance
strategy,
levels.
but,
We're
Diane,
still
this is an
bullish. We can break
inexpensive
out
trade,
again.
Get some upside exposure and
Prepare ye in the
save
name of
risk
the
to
Lord.
find on it. You know exactly what your downside is. It's $20 per spread that you put on in this one.
Is this what they talk about, the diamond hands, you guys, Kevin? All right. Thank you, guys. We've got the breakdown coming up. We're taking a look at Oklo as it gears up to release its quarterly report card. Will it be okay? We'll be right back.
Double top.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
What's going on
And on
here?
all your
Oh,
favorite streaming
I don't
services.
have the right thing
Schwab
up.
Network. Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn
68,
tips and tricks to help
57,
navigate Schwab.com,
17 on the slashy yes.
and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education
Double top on the
coach.
SPX.
It's interactive learning at its finest. Tune in live.
Inverse head and
watch
shoulders
on
with the
demand.
right shoulder.
Head over to
Boom,
schwab.com
to the double top.
coaching and start learning today.
Hey, hey, hey. There she goes.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall, live on the floor of the big board. Before we get to the breakdown, let me give you a check on where markets stand as we get closer to the bottom of the hour. We got the S&P 500 hitting the flat line right now, Unch, at the moment. We'll see if it turns positive. The Dow right now has the stronger gain. It is better by 0.8%. NASDAQ 100 lower by 0.5%. Russell 2000 off by 1%. Oklo set to release its quarterly report card after the bell today. Analysts are expecting a loss of 13 cents per share, which would be an improvement over the prior quarter. The company is seeking to build small nuclear reactors to power AI data centers. It's seen its stock pull back sharply over the past month, that after a year of big gains. Now, today, the company announced it has a green light from the Energy Department, giving the nod to its safety design agreement for its Idaho facility. Company still pre-revenue. Keep that in mind. Time now for the breakdown. Joining us now for that, we've got George Silla, senior markets correspondent. Let's talk about Oklo and how you analyze this one, because this is pre-revenue. So it's always like how long is the runway for this, for how investors view it?
Well, I mean, it's a good question, Diane. I mean, first off, without any top-line sales, it's really difficult to do any sort of valuation analysis. So we have to consider things like, what's going on with market cap, capital structure, business expectations, and so forth. And if you look at what's been going on, and I can see where there's going to be huge demand. There already is huge demand for electricity. One of the challenges with traditional electricity supply is it's constrained. You can't build power plants tomorrow. You can't actually increase the grid very rapidly. So the demand is higher, but the supply is relatively constrained. The only offset there is prices, which again is a very big challenge for local public utility commissions to pass on to customers. Irrespective of that, we know that there's been huge demand for forward power contract agreements from data centers and, of course, the major hyperscalers. But now there's also this aspect of, how do we reinvigorate high-yield electricity through, of course, nuclear, without, again, having to go through all the regulatory approvals to increase the utility-based nuclear, and that comes from these modular on-site development modules that essentially companies like Oklo are looking to essentially start deploying. They're already past the design phase. It really comes down to regulations. Now, based on what I saw, they're not expecting anything when it comes to manifestation of revenues until at least late 2027. So we've got some time to certainly consider. Adjusted EPS, at least what I found, is down 13 cents. That's down 62% from
Hard
last
dinner,
year.
yes.
But I think right now, the same sort of theme fits. We talked about Rigotti,
Unless you
which
want
is
to take
the
it to the
company
another
yesterday.
resistance level.
How that stock is still higher, very much so year to date, but it's been down over the last 30 days. The same is the case here for Oklo. Again, two different companies, two different industries, but the same theme, which is, pre-revenue in this case for Oklo, very low revenue for Rigetti. And again, the distribution right now seems to be that of favorability in terms of the market narrative to the companies that are proven to generate sales and revenue. So I can't say what's going to happen, but I will say this: if you just consider the market cap, which is quite large for Oklo, around $16.5 billion, roughly speaking, last year, because it's really a company that's not burning a lot of cash because they're not developing a product per se for sale, they only lost about $56 million. That's a very small sliver of the total market cap. So my premise is that because they don't have an exorbitant cash burn, you may not necessarily see a lot of decline in the stock price, but you may also not necessarily see a lot of movement to the upside.
And that's the question, right? When we get to its results later today, is the focus basically going to be about timelines? Because, we're not going to, because at least with Rigetti, they have revenue, right? So is this about timelines and how much closer they are to executing on timelines? Well,
I think clearly right now, the market this year is really disregarding time, I think, because we're sort of in a hype phase. Let's just put it frankly, with AI. I do see the demand for small modular reactors. And in fact, if you think about the technology, the military has already been doing this for decades. So it's not only new or unique, but it becomes a very logistical, regulatory, safety, and security problem, especially when you're dealing with nuclear material off-site. And I think that's going to be a constraint going forward. So right now, eventually the market will run out of appetite for.
We got a triple top coming up.
I'm not
Magnificent.
sure if that's the case right now, but you have to consider low visibility means how much time and patience do investors have to wait for this to manifest down the road. Again, very challenging, but nonetheless, right now it seems like the momentum is to the downside. Considering the last 30 days, the stock is down close to 40%.
Pretty close.
All right, thank you, George. That's a good point.
One of them,
that's George
2
Siller,
bits,
Senior Markets
3 bits,
Correspondent,
4 bits.
For the breakdown, I should say, for Oklo heading into its results. Let's get Tom and Kevin back in here for the example trade. Tom, so you've got the example trade in this one. What's your approach?
Well, you listen to George. They've got no revenue at this point, so this is one of those stocks. It's hard to kind of take a look
different.
at. Nearly a
$16
billion market cap for a company that
I just now noticed I had this support level right here for some reason.
And all this optimism that all the energy needs that we're going to have. There's actually 2 data centers in California right now that can't open because they don't have the energy necessary.
This here was the pivot point area.
So this tells you the importance.
And I put that bar above it and
why
below
you're
it.
seeing the hype around
That's right where we found
don't
support
have any
at.
Sales yet, and they don't have their first power plant open yet.
So that's pretty cool.
At this point. But you've seen the stock pull back about 44% from
pretty cool to
those
know.
all-time highs of $193.
At previous peak.
Still up over 400% this year. So
we just now hit the 4th top, folks.
You know, these names.
The crowd's going wild here at the sports arena.
Don't have any comparables on any of this stuff. And it's 147 million shares outstanding. So it's not like a large share float. The option market priced it in.
Jim, you ever just have an urge to go grab your guitar and play some more?
In the stock. So I stayed risk defined on it. I think you should in names like this, especially it's got a high beta.
You'd never think that we'd reverse like that this morning.
For a neutral to bullish stance. If you're going to take a directional bias on something like this in a stock
how many people
like this,
were worried this morning?
The way that it does, you want to stay risk
Anybody in the room?
especially going into a
Livy Goose, were you worried?
Selling
you were too.
14th weekly options that expire in 3 days. Sell the 100 strike put and then buy the 95 strike put. Short $5 wide neutral to bullish put vertical. Collecting roughly about $1.40 credit on it. That's what you can make. The amount that you can collect $140 with $360 in risk, but that's all the way below the 95 level. Kevin, I wanted to get your thoughts on this neutral to bullish put vertical because there's not a lot to go on with Oklo when they don't have any sales. It's got the higher beta and all the other things I mentioned. Kev, your take.
Yeah, you're going to have to rely on guidance, right? And any news that they might bring up or any events, any actual things that aren't just
we're coming up to the double top
contract. So non-binding, you need something that's real and you can hold on to. So selling the put vertical, a 65% chance of finishing out of the money on the 100 put. So it's a passively bullish, risk-defined, collecting theta, about a 2/3 chance of finishing out of the money, Tom. Yeah, there's probably there's a probability that there's going to be a big move here. There already has been, right? The stock traded as high as $193, and now it's $107. So it really is. It moved up, and it's moving down just as violently. So the main thing, no matter what strategy you have, make sure it's risk defined.
Kevin, looking at the option premium and the skews in here, you know, this trade is a neutral to bullish trade. You've got that 360 in risk, but if you went all the way out to the 90 put to the downside, that is $17 or $18 below the current share price, Kevin. The puts are worth about $1.10 down there. So when you look at names like this, there's a lot of maybe speculative trading, maybe potentially speculative trading, but you've got to be aware that this stock can move with a beta of 2.6 at this point, right?
Yeah, 147 million outstanding shares, Tom, as you know, is wafer thin for a stock like this. So yeah, it can really move. Look at the beta that you mentioned, 2.6. Yeah, this stock is gonna move. I don't know where, but it's gonna move.
Yep, Diane, I think the key with this one, you want to stay risk-defined on this any type of trade, whether it's directional, passive like this one, or more aggressive. Just got to be careful on these names.
Yeah, absolutely. It makes sense. It can be very volatile. And again, this is a pre-revenue company, so I always want to add that caveat when you think about this one. That's going to do it for us today on Fast Market. I'm Diane King Hall alongside Kevin Hinks and Tom White. Download the Schwab Network app. It's available in the App Store. Tune in 24/7 on SchwabNetwork.com. Stick around. You've got Next Gen Investing with Jenny Horn and Alex Coffey coming up.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists.
We're definitely at a top with new high.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
Hey, Pop.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim's my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey, and we're checking in on markets here, looking relatively, I would say, fair in real time. I wouldn't necessarily say it's a day of strength.
Definitely better than earlier.
Yeah, definitely better than earlier. I was going to say it's not quite the same way we were opening the show yesterday, where we were just, rallying, but I mean, to Alex's point, far better than where we were faring earlier in the session. Our biggest loser of the day is the NASDAQ here, which is our only loser of the day as it stands. Now, a lot of trading time left, of course, in this day, but we're down about 0.4%. Russell's slightly higher, as well as the S&P 500. The Dow, though, is up just shy of 1%. This is actually the most, I would say, parity we've seen amongst the four major averages in quite some time, which
Keeps
I'm
moving.
appreciating right now.
Yeah, this is a nice turnaround.
25.70 for the
really
68.20s.
Starts the week
And the
yesterday
30s are
on,
at
the Senate. I guess you
17.19.
could say pretty comfortably the catalyst yesterday was the Senate
17.19
getting,
took a little
the
trip
first and probably
down the mighty
hardest part,
Mississippi where things
of the
were
government
hip.
reopening done and in the in the clearinghouse on that. Then a little bit of a natural pullback.
Livid Goose says,
hit
"Be
the
careful
5-day
here."
Moving average rallied off that. Now you got a nice little hammer candle building for the S&P intraday. Magnificent Seven still under pressure as a group, and that's going to weigh on the NASDAQ. So I'm not surprised that the NASDAQ's the red part of the market right now, but it too is held. It went down to the 1 month moving average, bounced off that, and is now back above the 1 week moving average. So technically, a lot of the trend remains intact, at least on a short-term basis, after a pretty dicey end of last week.
Yeah, a very good point. And I
I'll
think
be right
also,
back.
especially considering the way we ended, like to your point, last week, we saw a lot of that pressure and that risk-off sentiment really trickle in.
I'm not in anything right now.
Since last Tuesday kicked off. So at least we are on stronger footing, although I do think that markets can have short memory. I do recall that just in the beginning of last week, there was all this optimism, then things sort of just somewhat just turned to the downside, so we'll have to be watching overall headlines as well as the macro read to get a good sense, I think, of where the markets could end the week. A lot of trading time left in this week, for us, but we'll kick things off on this show with some of the biggest movers to keep on your radar today, as well as two names with earnings still ahead that we will break down example trades in, as well as, of course, dive into the technicals. We'll be also discussing today the move in CoreWeave, as this name has been a bit all over the place. I will say that has now actually seen some of its losses pare back, but we are still down about 14% on the session in reaction to those earnings. We'll also be discussing the latest situation we're seeing from an overall macro standpoint, as well as a maybe more micro standpoint, as we're joined by the co-founder and managing partner of Energia, as well as looking at Big Bear AI, seeing a pretty nice move today after we saw stronger than expected quarterly earnings and also announcing the acquisition of an AI platform. So the AI world is still very busy today, Alex.
Yeah, no, it's going to be a lot of fun. Big Bear AI making a triumphant return. I think we talked about that with George a time or two, so looking forward to that discussion. Let's get into some of our movers, because some of these I think are pretty big stories today, but maybe some of them are overlooked as well when it's not just NVIDIA, Meta, Alphabet all the time, some kind of secondary moves.
Yeah, and still, I mean, like, talk about a secondary move, but where we'll start is definitely not getting a secondary, price performance today. We're up in Paramount Skydance now about 10.7%, and seeing obviously a pretty nice move here, as we're seeing not only just a lot of analyst favorability, a lot of price target raises today, but the company also saw third quarter results and issued fourth quarter sales guidance above expectations. So seeing some strength today and also some outsized volume. I mean, really rallying after losses per share of around 12 cents. Did miss what would be expected for actually a positive earnings result, 34 cents a share. Now, we also saw sales that did slightly miss, but CEO David Ellison said the company's results are really reflective of the progress they're seeing in integrating their operations following, of course, that merger of Paramount Global and Skydance Media. Ellison also highlighted the strong performance in the company's film and TV segments and reaffirmed their focus on expanding their direct-to-consumer business and live sports offerings. So also went on to say that they have a of course, a long way to go, but they believe they have the ability to get to where they need to go as far as the latest developments. Also, it did announce that they are planning to raise now prices for U.S. Paramount Plus subscriptions now in the new year. The latest string of price increases, and I am still bitter at the entire streaming world right now that I couldn't access Monday Night Football. Different, of course, company to blame for that, but does show there's been a lot of shakeup and also, I think, shifting right now priorities in the overall media landscape.
Yeah, and it did. I think one of the big takeaways for me was, hey, better than expected guidance moving forward, excitement about some of the cost synergies, but that it's going to be noisy for a little bit as they kind of reorganize things, as they take some one-time restructuring fees. So nice move for Paramount's guidance, the first time that we get to hear from them as a combined company. Let's move to our next one. This is XPeng. We haven't talked some of these Chinese pure play EV makers in a while, and maybe we should have. There's a nice little move brewing here for XPEV.
XPeng is up 128 and some change% on the year now. So we have pulled back from the highs made earlier today, right now about 3.2%, but we've risen off of lows by a mere 144%, and I know the month of November really just kicked off, but we've risen now about 15% and some change on the month, thus far. So we're seeing, I mean, not only just analyst favorability here as Morgan Stanley does get a bit more bullish with a $34 price target from around 30. We did also get some news that they are now going to be offering, or we said this last week, now Alibaba's AMAP in 2026, and I think that showed not only the mapping platform capabilities have been seen as an best in class, but it also shows their commitment to continuing to build with also some of the biggest forces in China. We talk a lot about the way that, like Uber right now, connected to all things Waymo, which of course owned by Alphabet. Like our ecosystem right now is basically being comprised of like several companies, but that's really it. Seemingly, the trend is following suit overseas, but I do think it's encouraging that we continue to see this analyst really favorability towards a name that has not been always an analyst darling in the past, especially when you look at like the broader Chinese e-commerce focus.
So I think there's a couple things that are exciting right now for XPeng in particular. The robotics, the AI stuff, that's going to be your hype cycle. That's kind of what drives a lot of these names. But, you know, investors, particularly ones who are concerned with valuation, are going to like to know that this is also a company that's steadily been improving from a profitability standpoint. They've been narrowing losses, and they look like they might be on track based off some of the estimates that I've seen for their first annual profit in 2026. So maybe winning on both fronts, not just what we're going to do, but also what we're doing right now.
That's a good point, and I think also anytime you're able to excite, like, the street and give a compelling argument for like why your share should be bought, it's also, of course, seen as a pretty decent upside catalyst. So our next name today, AppLovin, also has been one of note as of late, although today's seeing a pretty substantial repricing to the downside here. As I mean, it's kind of amazing. The only real piece of news I was seeing on AppLovin today is down 9.5%. It was Citi actually cutting its price target to $820 a share from $850, and we're down today now about 9.5%. Now, granted, a name that has risen almost 76% on the year, but we're now lower this month and also off of highs that were made, I mean, just at the end of, basically the end of September, early October. We pulled back from those highs by about 21%, and we've now rallied still off lows by almost 200%. So it's not like this name is breaking down by any means, but a pretty substantial move today. Again, on one analyst lowering their conviction, we're talking lowering their conviction by $30 for the next 12 months, which to me feels, I mean, like a paper cut at this point when you're valuing the stock at $820 still a share.
Yeah, this is a weird one, right? I mean, there is some insider selling, but it doesn't seem like anything too out of the norm. It was a really, really strong quarter. Last earnings that we just got, which was last week. Tons of price target adjustments post that were all positive. But a 10% near move here today, where there's not a lot of big moves happening in the market outside of some semiconductor players. suggests that there might be more to this story. We just don't have the information yet.
That is, I think, probably all that it really is. But as far as now, I mean, the overall price activity, we are seeing a pretty big day, of course, to the downside. So something to keep on your radar here. Next name today now is C Limited, and this name is also down pretty substantially on the session. We're down about 8% and some change. We're down now about almost 9% on a month-to-date basis, but this name is seeing some reaction to right now. Again,
App's down big.
Third quarter results where we saw still, I mean, top line growth that was paired with an earnings miss.
I thought that was a little bit overbought.
Quarterly revenue still rose about 38% year over year. That was ahead of expectations, coming in around 5.99 billion. The company also did post earnings per share of 59 cents. That was actually slightly below forecasts of around 77 cents a share. And still said, as far as their expectations going forward, revenue from their digital entertainment segment grew about 31% year over year. Now they expected that to actually continue to rise going forward, especially now bookings with a 51% pace of growth in their third quarter. Adjusted EBITDA increased about 48%. Also, so quarterly active users climbed about 6.7%, and average bookings per user did rise to around $1.25 from roughly 89 cents a year ago. E-commerce revenue climb almost 35%, and adjusted EBITDA surged from a year ago. So there's still a lot to like there, and not to bore you with all these numbers, but I think also interesting from their CEO saying that they saw this strong momentum. But now this is about continuing to remain competitive in the back half of this year. They're also maintaining a focus on high and profitable growth now in their e-commerce, digital, finance, and entertainment segments, and expect at their core to continue to grow those markets, especially while they continue to grow internationally. So all that to be said, I think that there was a lot to still like when you look at just like the CEO commentary.
I'm loving these runs at the end of the day, that's for sure.
To get an 8% plus move to the downside. As we're still up 32% to their credit, but I think that the headline figure missing is exactly what's driving.
We're at a major support level.
A piece of what's driving that weakness.
Yeah, and I think it's important too.
If we don't hold, we're going to drop.
Super familiar with this company. It sort of operates in three separate, segments. One is like a game developer. It's kind of its Garena, digital entertainment arm, which operates in building some different games out, develop those. Shopee is its e-commerce platform, and then it has its money platform, which is a digital financial services provider as well. When you look at the commentary from the company, there was excitement around Shopee's 2025 GMV growth to be over 25%. And then also the Garena segment is on track to achieve more than 30% year-over-year growth in bookings. So pretty sizable growth there. Some positive analyst commentary. Citi buy rating with a price target of 203 said that the results were solid. Morgan Stanley with the overweight rating said that they're broadly in line with the forecast. No major positive surprises. So a little bit less optimistic. And then Jeffrey said, broadly better than they expected. So a lot of positive words, but not enough to keep the stock above water here today as it's sinking down 8.2%.
Oh, that was a good pun, C Limited.
That was an accident.
No, I thought that was on purpose. I thought I was sitting next to our chart master. Rick always has those good puns, right? But yeah, C Limited today. No, I will not make any.
Jenny, I love you.
Sinking jokes, but down about 8.4%.
You got a big mouth.
Yeah, I think it's fair to say a pretty mixed third quarter report from the company. We'll leave it there though for the top of our show today. Now coming up next, it's time to dive in to two
a bit too much lipstick.
We'll be looking at Circle as well as Oklo. Of course, a next gen
Oklo
does operate in the world of nuclear.
Oklo. The Dow Jones is up 496 points. Yes, it is. The Dow Jones is up 496 points. 501. Now, triple top. I think this is going to tell us how the rest of the day is going to turn out here, Randy. It's a triple top, an ascending triangle. It's now or never. Thank you very much. Washboard Jim, would you like to tour with me on my band? Narcissistic Washboard Jim. Sending
Stay connected to what moves.
triangle.
Download the Schwab Network app and stream live coverage wherever you are.
Okay, I'm looking at the 6850s.
It's your #1 broker with the best full-service wealth management
Randy.
skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing
Technical difficulties.
Kyle.
Schwab, a modern approach to wealth management.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Next Gen Investing. I'm now joined, of course, by our chart master, Rick Dupat, to help us look at two names from a technical standpoint into their earnings events. Circle today with actually earnings tomorrow morning, and we're also talking
Circle
about
tomorrow morning?
earnings after the close
Oh, this is a
today.
fall. This might be a good one.
Circle, also a relative newcomer to the public markets, as it has gone public just about in the last year or so, but it's been, I mean, not so much sideways as much as we've been in this downtrend. I mean, not to speak to the lack of enthusiasm we've seen in the crypto market, but Bitcoin has also itself had a very difficult September really through the month.
$4.50 all of a sudden.
Tied to also the world of
Boom.
assets. What are you seeing from a technical standpoint?
Yeah, so only about 6 months or so of trading here.
Washboard Jim called the 6850s.
Earnings event that we saw back
We're
here.
up $60 a contract.
Gave us a notable high point right here. But if we look back a little further, the overall high point was quite far above that area. That came in just shy of 299. So if you were to draw a trend line connecting the next high right here and the subsequent high that it reached, you can see it's broken above that. But the trend line then became supportive. Old resistance became new support. That's about where we bottomed out again most recently. So kind of an interesting example of why trend lines can come back into focus even after they've been initially breached here. However, when we do look at our high that we reached after earnings here, we can see that you could draw a different sort of shape going across these highs here. If you were to duplicate that line and put it across the lows, that would give us this channel type shape that you could draw to encompass the overall price action here. So that could be one place to look for potential downside support if things do continue to falter somewhat here. We can also see our recent low point right here. We've broken through that area near 108. You could have argued for a while that the price was in a range between about that 108 level and 150 to the upside here, but that does seem like perhaps it's not to be. Earnings could change things dramatically, though, so that would be a key point to consider as well as we digest some of the information on this chart. When we do look at our RSI study, we can see that even though our shorter-term, steeper trajectory has been broken, the overall slope of the momentum indicator that we're looking at here still remains downward, and really the RSI reading is quite low, so much more of a bearish lean as we head into earnings. We have two simple moving averages here, our 20 and 50 day. Those give us a confluence point to watch right around 123, 125, that general area for upside resistance. Finally, if we were to look at our volume profiles study, our point of control was all the way up here, kind of in that same area as our moving averages. That comes in more specifically around 135, 136. Volume, there's another smaller node here near about 116, but that's the only notable volume anywhere close to current price. Downside support could be found further here at around our -1 standard deviation channel, just below the 80 level.
Oh, yes.
So those would be some areas to watch.
Okay, yeah, and I mean down about 4% today as we do approach this earnings event. So we will have those numbers out in the morning, of course. Now, as we do think through though trading this name, for example,
There's your $6.
walk us through your thinking because again, we don't have a ton of historical context, but 6 months.
670, 680.
Many who look at the asset space for opportunity are optimistic about it. And if you look at a more bullish example,
I'm going to leave one on the table.
I looked at a call calendar spread, selling this Friday, buying next Friday around the 120 level. Sort of a level where our recent highs were for this stock, as Rick talked about. If you look for a move towards that, maybe that costs $1.20, so you risk 120, looking for the move towards 120. Risk profile is almost mountain peak-like, and it peaks out at the strike select. But this stock is trading around $100 a share, Jenny, so you're going to need a 20% rally. Now, it's not without volatility. It moves around a lot, as Rick's chart showed. But you need that to happen in a hurry, so really looking for some good news or at least a good reaction post this earnings.
Yeah, this is a reaction would be definitely welcome as we just looked at some of the little churn to the downside this name has experienced, of course. But now to shift gears and talk Oklo, the bit more of the larger of the two companies, I would say, just from like a market standpoint. But Oklo has been a really great read on nuclear, although nuclear has fallen out of favor pretty substantially, as you can see from its recent price activity.
For now, though, we are hanging on pretty close to a notable low point here near 110. You can see that this is one of those charts that kind of has two phases where initially we were moving at a decent clip to the upside here, but we topped out at this level around 84. Then when the breakout did eventually come, it was very energetic. We more than doubled in a very short time here, just a couple of months, to eventually top out at 194. However, since then, we have given back a large amount of those gains here. You can also see that the shape that looked like it was perhaps taking place was a head and shoulders type pattern here, with our neckline around 110, excuse me, our green line there, so you can see our shoulders, the head shape, and then the subsequent shoulder. They both topped out right around 143. This would be regarded to as a more bearish type of pattern here. Certainly, though, I'm not saying that's going to happen or anything, but this would be the breakdown point, that 110 level that many traders might have their eye on. So if we were to include our other studies here, we have fallen below two of our shorter term moving averages, our yellow 21-day and orange 63-day exponential moving averages. The orange 63-day comes in at around 113.50, so that could be another upside point to consider, especially because it lines up with our trend line as well. Our two downward sloping trend lines converging toward each other give us more of a falling wedge type shape, which is typically regarded as being more bullish, but really, once again, not a guarantee, certainly not going to happen that way. You'd be looking for a breakout beyond either of those two lines. RSI modestly improving somewhat here, but as we head into earnings, oftentimes things slow down and stagnate, so I wouldn't make too terribly much of that until we start seeing the earnings results come in. So if we were to look at our volume profile study, all of the heavy volume in this chart, way down here at the bottom near the 24 level, we have some smaller nodes to consider here that could help us provide some potential guidelines here. We have one node here near about 115 or so, and then we have another one up here near about 140. So those could be a couple of other potential congestion points. Finally, volume is heaviest in terms of being close to current price, down here at about 75.
Okay, and another thing that has taken it on the chin a bit, we're not necessarily selling off. We are down about 3 and now about 0.3%. So definitely underperforming the overall market on the session today. But we will leave it there for the technical help. Appreciate it to Rick Ducat for always giving us the insight from, of course, a chart master perspective. And now, last but not least, when we do think they're trading Oklo for example purposes, I mean, I will say that some of the enthusiasm and then like high volume, high volatility from this name has been let out of the balloon a bit, it feels. So, I mean, we are looking at a different Oklo than we were just, say 3-4 months ago.
You actually set this up exactly as I was going to, so I appreciate that. It maybe has seen some of the air come out of the sails from the excitement to the upside, but has enough disappointing news seeped in here to where it's actually going to sell off. Maybe, maybe not, but I looked at a neutral bullish strategy, selling a put vertical. Now, the most important, I think, and critical piece of this, Jenny, is that it's risk-defined. This is the kind of stock that if it really is starting to show signs of maybe a bubble popping, to speak with a little bit of hyperbole, it could move dramatically. So by being risk defined, you protect against that. What I looked at was a strategy that expires at the end of the week. It's the 96.94 put vertical for a 50-cent credit in this example. Now what it would do is it sets up a break even at 95.50, which gives you a little bit of cushion in case maybe it's decent news, but it goes kind of sideways or even a little bit higher. And then of course the 50-cent credit means you have a max profit of 50 with a max loss of 150. It's a 3-to-1 risk reward. And with that, if it does collapse, you know your worst case scenario going in, Jenny. So it sets up a scenario where you can be profitable in several scenarios. But most importantly, it protects you from that risk of ruin by being risk defined, because this is a stock that could move dramatically in both directions.
I mean, definitely. And we've seen that really in the last several months. I mean, just even like a session by session basis. So that will be definitely in focus when it releases its quarterly results today after the closing bell. We'll leave it there for Chartmaster today. Coming up next, though, time to discuss our FOMO candidate of the session, and unfortunately that is CoreWeave to the downside. We're seeing some selling that has really just lasted throughout the session on the back of some mixed now guidance going forward and some mixed spending habits from their management.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 4.
Well, I looked at the 6820s.
Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me and my advisor, Jennifer,
Dad,
with the journey.
how come Grandpa stopped sleeping with me?
Grandchildren planning for their college educations.
Honey,
Someday it'll be their turn.
he died. It's my turn.
Welcome back to Next Trend Investing. It's now time to discuss our FOMO candidate of the day, that being CoreWeave to the downside here.
Oh, there's Marley.
A very
No cleavage day.
reaction to its earnings. I can't really call it a mixed picture because we're pretty much selling off on the session. But joining us is Marley Caden, of course, host for the Schwab Network, to give us the latest and greatest and maybe some reason to be optimistic in CoreWeave today, which is now down about 15%.
It wasn't all bad. I do want to note they did
It wasn't all
better
bad.
than expected third quarter here.
Why
So
are
it
you
wasn't all
pumping
bad,
this
but there
stock?
was- There are a few sticking points. So let's just walk through some of the numbers. They had a loss of 22 cents per share. That
Why do you
handily
keep pumping
beat the
this all
estimates
day?
For a loss for 37 cents per share. Revenue
Can't
came
you
in
talk
better than
about something
expected as
else?
well, 1.36 billion versus expectations for 1.29.
This is about the
Now,
sixth
here
or
comes some
seventh,
of the
maybe
sticking
eighth
points
time
we're
you've
seeing
all
some of
brought
the
it up
declines.
today.
They
What is the
did
deal?
deliver some disappointing full year guidance.
They were
though, and that's
bad.
really what's weighing on shares. They're now seeing their 2025 revenue coming in between 5.05 billion and 5.15 billion. That was lower than the company's previous projection of 5.15 to 5.35 and behind the estimates. Now, the reason for the trim is that they were hurt by a delay with a third-party data center partner. So that took a lot of the luster away from the strong Q3 numbers that were driven by this demand that we want to keep seeing, and the numbers indicated we are still seeing, but this delay showing that one of the developers is behind schedule had an impact on their forecasting. Now, the CEO did come out and say that the delay will not affect CoreWeave's backlog, as there are 41 data centers in the company's portfolio, also adding that any issues tied to the delay should be dealt with by the first quarter. So, it doesn't appear that this is going to be a long-term impact, but it is enough to be a black spot on an otherwise shiny report. Also important to note here, the customer that was affected by this delay did agree to extend the contract's expiration date. So I think that's really important to note, keeps the deal's total value intact here. And they did not disclose the name of who this company is, but just that they did agree to an
That's what makes it horrible.
So there isn't a risk of an announcement coming now.
Marley.
They are, in fact, losing a client. This client agreed to stay with them in spite of it.
We don't
And I
want to
think it shows
hear
there's still
about.
demand for what they offer. Now, I will say there's a bit of a trend starting to develop, guys. Down about 15% today around earnings. Last time it was over 20%. And even the first time it was down, albeit only 2.5%. Those are the three earnings we've gotten. All three have been red responses, despite what you could, I guess, say is mixed reporting in terms of the numbers. But then you look at the stock, and it's still up like, almost 2-3x from where it debuted. And it makes it, I think, a little bit more of a complicated story. Any other either analyst commentary on
About somebody coming here with some common sense.
Adjustments here. BofA maintained a neutral but cut their price target from 160.
Then why are you talking about it? We're going to short it?
Maintained an outperform rating, lowered their price target from 175 to 160. Morgan Stanley equal weight reiteration, but raised their target up to $99 from $91. Mizuho maintained a neutral rating, but lowered their target to 150 from 120. Right now, average is around 126, so still an upside from where they're trading right now around the $90 mark here. Their street high is about 200. Their low, which hasn't been corrected since July, is $32. So clearly off here. But I think we're in a bit of a wait-and-see mode, Alex. As you said, we've seen now 3 earnings from this company. They have performed really well since they went public. More than double year-to-date, up 130%. But there are still a lot of unanswered questions, and as we keep hearing from guests and analyst commentary, the market doesn't like uncertainty, and there isn't a whole lot of certainty when it comes to CoreWeave. They aren't proven yet.
No, they aren't, especially because I feel like the most underreported fact about CoreWeave is the fact that they were launched as a crypto mining company. And so there's, to me, I feel like in general...
Marley, can I ask you a question? Are you going to short it? Or are you going to buy it? What would you do, Miss Know-It-All? Come on, tell us. I dare you.
Of like the given hype trade of that year, that's where I think my concern lies.
And interestingly enough, I was talking to Mike Maloney earlier today.
Mike Maloney doesn't know shit.
And he's from Insight, the CEO of Insight, and he was talking about the Bitcoin mining boom equates to more compute and power demand for AI infrastructure. So there really is an integral tie-in here, and also saying that one of the concerns here is that the CEO highlighted that they just simply cannot meet the demand that they need in terms of the physical space. While they are building their own ground-up data center in Pennsylvania, they need the actual shell of a building to offer their services.
They don't have a building?
This power shell strategy, which is where you take a building that was previously used to perhaps mine something like Bitcoin or whatever, and turn it over into now what they're leasing is these AI NVIDIA GPUs for compute and AI space. So I mean, there is an integration here. Yes, it is a different business, but a lot of people covering
Until you can talk about a better stock right now.
Could still have a strong tie-in in some way.
Yeah, I guess I don't hold it against the business for seeing opportunity and trying to take that opportunity. Maybe we could say the same thing about NVIDIA. It was kind of an obscure, high-end gaming chips company. It saw opportunity in Bitcoin in 2017, And then saw opportunity in AI. Now it's the world's
Jim.
biggest
But
company.
okay, like NVIDIA always made GPUs. The GPUs were just specialized for gaming. But like to me, it's a different shift to be like a Bitcoin miner to now like a major component of AI. I mean,
Netflix used to send DVDs.
I was going to say, what about Amazon?
Okay, we're coming down to support.
I mean,
Prepare ye.
we can talk about a lot of companies that used to do something that do 25 other things now.
I won't say that that means it's going to be successful at it, but it also shows that it's not a company that has limiting beliefs. So it's a $44 billion market cap. Like, they are doing some things pretty well, considering the fact that they've lost a good chunk of value, basically half the value, and they're still one of the world's biggest companies.
That is true. And taking it on the chin a bit today, and I mean, CoreWeave right now has been seen as, a major presence, again, in AI, so you can't argue with that. But also, right now, it's a matter of being able to prove yourself in an environment that is going to be very expensive to continue to build out at this scale in. So now when we look through, of course, trading this name here, Alex, I mean, given the fact that it's relatively newer to public markets, it's also, I do still say, it has a bit of an identity crisis when it comes to like your perception of this name, but is down about 15%.
Okay, here we go.
Yeah, I think a lot of the same things that we said in the
It's
opening
now
trade
or
apply
never.
in the sense that this is a stock that is under technical pressure. It certainly, to your point, may have identity crisis. It certainly doesn't have a good reaction to earnings today. And at the same time, it's a member of this AI trade that has seen a lot of dips bought. So if you want to be potentially brave, for an example, lean into the weakness, see this as an opportunity to increase exposure to the name into that weakness and negative reaction, perhaps a risk-defined neutral to bullish put vertical could make sense. And so what I did was went out, again, we just got earnings.
We broke
Spent a little
support,
bit more
but we
time
still
at
could
the
be
end of this
holding
week
it
and then
here.
Next, the November monthly 21-day, or 21st, which is about 10 days away from now, calendar days. It's the 85.80 put vertical, looking for $1.25, so that would be a quarter of the width of the strikes. Risk 375, chance to
Boom,
make
big drop.
125 with a break even of 83.75, guys. So that break even would be lower than the lows of the September move, and you're really going to have to go back to kind of that May run up in shares to get to a time where it traded below 83.75. So really just hoping that those lows hold as a support level in the midst of what's a pretty dramatic sell-off today, down 14%.
Yeah, I mean, definitely a pretty dramatic sell-off today, and we'll have to, continue to watch how this company continues to build. I mean, like its mining infrastructure, which is still definitely is a huge portion of their business, as well as into the very costly
We're at the 63
AI world. But we'll leave it there.
I
though,
beg
for our
your
focus on
pardon.
CoreWeave for FOMO today, and
I
appreciate
never
you, Mark
promised
Hayden,
you a
of course, host
rose
for
garden.
the Schwab Network. But coming up next, we will discuss actually a winner on the session. That's Pubmatic.
Did I ever tell you how much I love you,
following its
Jenny?
quarterly earnings.
I've waited all my life for a woman like you. I really did. The 68.50's at $3.20. I waited all my life. And I was just wanting to know if you still love me. Because I'll always love you. Cleavage or no cleavage, it doesn't matter. They're now at 390. The room was asking Jim, how's he do it? Well, he takes the 63 EMA on the 1 minute time frame. He runs it back up to resistance to 390. I beg your pardon. I never promised you a rose garden.
Believe me, when it comes to investing, you'll love
Then
Carl's
I'll be there.
But there's a Carl's way is the best way.
Is it?
Carl's way is the best way.
Is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them.
I don't like these two, how they treat Carl in this commercial, so I'm putting it on mute.
I'll get out here.
I think they're very rude.
Schwab.
Schwab, a modern approach to wealth management.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Never promised you rose
Morning
garden.
Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the
We're at
early
$4.10.
analyst call. Get your watch list ready. 8 a.m. Eastern. Morning Movers.
We're back
only
above
on Schwab
resistance. Now this is the exit idea. If you scalped it off to 63. Oh, there it goes.
Welcome back to Next Gen Investing. We now have some breaking news as we're watching AMD with shares seeing some increased pressure after Lisa Su made comments at the company's Analyst Day, including right now that AMD has roughly $45 billion in custom chip design revenue by 2026.
I don't know how he does it.
That customers are not leveling off of AI investments, and that the total data center market will grow to roughly $1 trillion by roughly year 2030. But now shares have risen about 90% this year. So this has been a significant outperformer. The stock did well initially during the commentary, but now have bounced a bit off of those lows. So Alex, seeing that's like now about 1.8% move to the downside. I mean, we're still up 95% throughout the year.
Yeah, they say they see tens of billions of dollars in data center revenue by 2027. They said that their data center growth is going to be more than 80% compounded annually. Which is super impressive. And then you look over and the market's like acting like this is bad news. I guess it is off the lows. So they say they see 3 to 5 annual revenue growth with a 35% compound annual growth rate. So all things to say, a lot of news hitting the wires right now. Looks like it's improving as some of those numbers are starting to hit here with it down only 60 basis points in real time.
Yeah, I mean, and we'll have to be continuing to watch this move in AMD, as I'm sure we'll hopefully get some further commentary from their CEO, Lisa Su. But now to shift gears and talk about a name that is definitely in a clear shot to the upside today, that being PubMatic, which is up a whopping 42% on the
We're now at 5:30.
Now to break down why we're seeing this move is Diane King Hall, the host of Morning Movers. And so Diane, walk us through this story. I forget what PubMatic to me like never clicks what this company does. It operates in like online advertising. I was hoping we were talking about like a company that operates in pubs. To my dismay, not so much the case for this Tuesday.
That's what one of the guys on the floor just said. We were having a conversation with that, and that's what he said it sounds like. But this is basically, when you think about this company, it's kind of about the digital ad world and the plumbing of the digital ad space. So they had a remarkably strong quarter. They did better than expected on both the top and bottom line. So the street was expecting a loss. It did not report a loss. Adjusted EPS was 3 cents a share. So that was much better than expected. Revenue coming in at nearly $68 million, also better than expected. So for PubMatic to catch people up, this is a space that connects publishers. You think news sites, streaming platforms, mobile apps with advertisers who want to buy ad space. They're using AI automation and real-time bidding to do all of this. So instead of like people negotiating ad deals, it's software auctions those and auction those and the spots in milliseconds, deciding what ads to show at what price. So it's like this, you know, kind of, it feels like a marketplace for advertising. So they're essentially on the sell side of that, helping publishers determine what ads they're going to use. So you saw growth here. The big story was that there was growth. There's streaming growth. Their connected TV business was strong. Connected TV revenue, excluding political ads, was up 50%. So you had strength there across the belt. PubMatic also has no debt, so that there is strength in its balance sheet, and it also has strength in terms of some of its cash flow. It has more than $136 million there. It's been buying back stock, so you're seeing this strong surge to the upside. The stock is still down year to date, even with today's move, but it's certainly for investors here a strong swing to the fences here.
Yeah, and I will say PubMatic, pretty big move today, but still not enough to erase its losses on the year, which is just kind of ridiculous. We're still down about 28%.
I was going to sing Home Home on the Range.
Now 41% climb. So Appreciate it, Diana King-Haldo, for all of that breakdown on what we're seeing today in Pubmatic shares. And now to shift gears here, as I'd like to now welcome in Mike Silvestrini, co-founder and managing partner of Energia, which we do know that Energia just launched a private wealth channel for its energy infrastructure funds. Really walk us through what helped drive this decision, and thank you so much for joining us on this Tuesday.
My pleasure to be here, and really our goal is to try to.
I feel like the property manager of this
of the investor
building, and I asked for a raise about a month ago, and they didn't give it to me, and I was pissed off.
Now. Almost every nation in the world needs more energy.
Now I've got to go in and out, and go down there and check it out.
Investors who use registered investment advisors or broker dealers can now join our products and have direct access to the steady yield produced by
Couldn't
these
afford to give me another $50
Okay,
a
Mike,
month.
talk to us a little bit about what you describe as cracking the code. Don't need to give away the secret sauce, but solar investing is volatile, and it seems like you guys have a pretty good track record.
Yeah, over the last 5 years, we've been able to deliver a 12% or greater return to all of our
We're at
clients
580
after our fees in dollars. And the secret to our success has really been diversification. We have products in Africa. We have projects throughout Latin America and here in the United States. And we're opportunistically looking for distributed generation scale assets. So those are projects that are smaller than utility scale assets and larger than residential, where we think we can find the greatest yield for our clients.
Okay, and you've said that the Trump administration is now sparking this new interest in clean energy investing. What really market signals are helping to drive this trend? And is it something you still see intact now for, like the short to midterm horizon?
I mean, across the world last year, or really over the last 5 years, about 80% of all new power generation has been solar energy. So this is a major trend. It's here to stay. Solar energy, when the markets are unadulterated, tend to be the cheapest kilowatt hours that are available to the marketplace, and it's fast to deploy. So policy is fairly temporary, but when we look across global energy markets, it's consistently choosing solar energy for new power generation. And there's a lot of great opportunities to invest in that. The U.S. is going to be a little bit going through some changes as it adapts from a phase where it was heavily incentivized with government dollars into a more natural cost profile. But there's going to be opportunities for investors like us that come out of that as projects come up for sale, and we take advantage of those opportunities for our clients.
When you try to assess risks, are things like a increased demand and comfort around nuclear energy something that is worrisome here? And does that kind of depend on the jurisdiction you're operating in?
It really does. I mean, every market is unique in the energy sphere. You go down to places like Brazil that have primarily been hydro over the course of history, are now benefiting from solar energy in a big way. Go to South Africa, where they have load shedding, where the coal power plants haven't produced enough kilowatt hours to properly power the infrastructure and the industries of that nation. Solar has been the solution. It's quick to deploy. It's actually caused a pause in what they call load shedding, where energy is cut off from certain customers throughout the day. So certain attributes of solar will be complementary to those baseload power sources like nuclear. So there's room for all of these technologies to play, but the leader has really been solar over the last 5 years, and we expect that to continue for the next 5 years.
Okay, and really, how do you go through balancing now what we're seeing from a risk and return standpoint when expanding into some of these new markets, like, say, Brazil, Africa, compared to here in the United States?
Yeah, we look at it as an advantage to diversify across multiple global markets. We're getting our clients access to some currency diversification, policy diversification, some technology diversification, and those things work in tandem to provide us a consistent yield. And quite frankly, solar energy projects in the United States are not the best returning assets. There are certain attributes of the U.S. market that we like. Certainly it's dollar denomination, it's rule of law. But there's also, you'd be remiss to overlook high yielding opportunities in places in Latin America and other places around the world. We think they're best done as a comprehensive portfolio of diversified projects.
Mike, as you mentioned, things obviously, very high demand with the AI build-outs and all the power demands, and that seems to be set to continue down that path. What would you look for confirmation that that's still happening, or on the contrary, maybe confirm that things are slowing down?
I mean, there is just an insatiable demand for energy, and we don't expect that to slow down for years and years to come. Whether it's AI in some countries as they start to compete in a more modernized economy, or you go to the developing world where they're still just trying to get enough energy to power a normal economy. Every nation is stricken with the same issue of not enough power.
I mean, absolutely. I think that that's going to be something that, why these conversations are so important to be had, because it's something that you hear over and over again where we can address like the AI build, but not without the need for critical power. And so I think really important discussion today and really important takeaways. We so appreciate your time. Mike Silver-Justini, co-founder and managing partner at Energia. Now, coming up next, last but not least, it's time to discuss the move today in Big Bear AI. We're seeing a pretty nice pop on the back of some strong quarterly financials.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time to discuss Big Bear AI. This one was at one point a Next Gen favorite. We took a bit of a pause on our Big Bear AI coverage, and now we're back today with a pretty nice session here for Big Bear AI. Joining us now is George Tillis, Senior Markets Correspondent for the network. And so, George, walk us through the latest from Big Bear, as we did see a pretty strong report, all that considered, but also a very mixed bag when it comes to like their AI offerings and the acquisition of course, that generative AI company.
Yeah, I think we talked about Big Bear AI in the past, and in fact, I think there's a theme, just a larger theme. I'll just express that first. If you look at some of the names that have been reporting lately and actually reporting today, like Oklo, Rigetti, which reported, and also Big Bear AI. I know they're 3 different companies, but I'm putting them in the same kind of camp right now, because if you look at the year-to-date and even one-year returns on these names have been phenomenal, but we're seeing able to pull back, and Big Bear AI is one of them, with the stock down the last 30 days or so by about 25%. But nonetheless, if you look at the overall business, it seems to be growing. It's, some would say, and some have said, that perhaps there's the element of maybe a Big Bear AI becoming more of a Palantir competitor, because it's got the same sort of technology with predictive analytics and decision analysis that is utilized mostly for U.S. defense and intelligence and markets. If you look at the EPS, they posted a loss of 3 cents. They were expecting a 4-cent loss, $33 million for sales. That was still down about 20%. So it looks like they had a little bit of an off quarter compared to last year. Guidance, it looks like they widen out the revenue range for the fiscal year between 125 and 140. So let's just split the difference, about 137.5. And that's basically pretty much in line with slight increase by about 500,000 to the midpoint 137 million estimated. One of the things about that's been going on is that there's also the aspect of domestic security and artificial intelligence that includes things like, manufacturing, logistics, travel, entertainment. So, like for instance, using artificial intelligence to detect, potential threats in ball games like football or basketball games. And that's really where I think Big Bear AI really fits the bill versus maybe a Palantir, which has a little bit more of a larger scale DoD contract presence.
George, I think the natural inclination is just to lump them together, AI, predictive analytics, and they're sort of rivaled in that way. But I got maybe a more nuanced question for you. Are companies like Accenture or Deloitte that are the traditional consulting firms, maybe McKinsey, those type of firms, are they competitors of firms like Palantir and Big Bear, or are they customers of companies like Big Bear and Palantir?
Well, that's a good question, Alex. I think it possibly could be a little bit of both. You got to consider these consulting firms have really been performing quite poorly, I suggest, because of the fact that AI may end up encroaching on their businesses from competitors, like companies like Palantir and Big Bear AI. But at the same time, these businesses also might be customers because they're trying to integrate artificial intelligence across the board. The reason I say this, and not all consulting firms are in the same camp, but Booz Allen Hamilton, I'm just going to give you an example, and I didn't tell them to cue up a chart, but you can look at BAH and see how poorly that firm has actually performed. That is a military consulting firm or a DoD consulting firm. So my point is that, I think a lot of these consulting firms may see companies like Palantir and BBAI as a threat. And I'm just using BAH as an example, which has actually been trading quite poorly since even last year, November. So for what it's worth, again, the market is growing. Competition is relatively fierce across the consulting program firms. But again, scale really matters. And for what it's worth, or however it happened, Palantir seems to have done it, generating lots of revenue, lots of scale. There are concerns about valuation. But if you look at, BBAI, I can see why it's down the last 30 days because irrespective of sales in the trailing 4 quarters, about 140 million, they did lose about $400 million, give or take.
Yeah, and I mean, hey, Namath's up about 11.5% now on the session, and so I see a pretty nice pop, but still has, again, a degree of uncertainty as far as their outlook is concerned. I think that it's important to acknowledge, but so appreciate it for that breakdown. George Tillis, of course, always giving us the insight on Big Bear AI when we've discussed several times on this show. That will also do it for Alex and myself for Next Gen Investing for this Tuesday. We have the watch list coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. Schwabnetwork.com. I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com. Good afternoon. Welcome to the Watch List. I'm Nicole Pedalides. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange. Stocks has been trending higher, at least on the Dow Jones Industrial Average, sitting right around session highs. We have a big show for you today. We'll break down the very latest moving in the markets, the impact the market performance is having between now and the end of the year, what you need to know. It's also Technical Tuesday, so Rachel Dashel will join us and take a look at the charts of the S&P 500 and Oklo and Expedia, and our panel will discuss Rigetti Computing. When you think about quantum, what you need to know there. Also, we're getting the very latest from AMD and the growth projections there from the Analyst Day, so we'll get more on that. And of course, the government shutdown certainly seems to be on its way to an end as the Senate passes its part and moves it along to the House for the finalization. Take a look here at the markets right now as we speak. The S&P 500
I'm back. We're at the 63 again. What timing do I have or what? Do I have good timing?
NASDAQ and tech has been under some pressure. It's down 0.1%.
Do I have good timing?
SoftBank has been selling off its stake in NVIDIA. Dow Jones Industrial Average up nearly
Slash ES is at the 200.
47,850.
And the S,
And the
$3.09. Look at that.
1%.
390 to 460.
Some
Boom.
barrows worth talking about. And just peeking at the Dow Jones Industrial Average, the high on the Dow Jones Industrial Average is 48,041. So you're not quite there yet, folks. But these major averages are about 3% off the highs. The highs on the S&P 500 was 69.20. Oil and gold is finally pulling back, has been up, has been at 3-week highs. It's down about $3 at 41.19. The Troy ounce 60.97, the barrel on oil. Bitcoin 103,470. That's down 2.7%. 10-year bond yield sitting right there at around 4.09. Bond market's closed. It's Veterans Day, and the U.S. dollar 99.26. Kevin Inks, host of Fast Market here on Schwab Network, is joining me.
The bond market is closed. It's Veterans Day.
AMD, the Analyst Day, all these great growth projections. Tell us a little bit about it.
I'll tell you about it.
Yeah, AMD having a investor day today. Lisa Su making some comments.
I love you.
Stock rallying on that news. It's starting to settle back in, but it rallied sharply when she originally made the news. Here's some of her headlines. AMD has about $45 billion in custom chip revenue beginning in 2026. Customers not leveling off AI investments, so demand continues to accelerate on the upside. She also says customers demand insatiable for AI compute infrastructure. Also, data center total market will grow to $1 trillion by 2030. So, if as hoped, AMD is a serious competitor against NVIDIA in this market, it's big news for AMD. Remember, if they start to compete with NVIDIA, AMD is a fraction of the size of a company bidding to
Who said yes?
So
Randy?
This could be something really incredible if, Nicole, they actually do start to compete with NVIDIA GPU chips.
I mean, it's amazing. The data center growth, more than 80%. I mean, it's tens of billions of dollars in AI data center revenue by 2027. I know you said some of these, but it really is very impressive. Let's get the CoreWeave down 7% today.
So, I'm sorry, it's really loud down here. I think you asked me about CoreWeave, right? And their earnings today, that stock trading down about $9 to $90, about $15 lower. Their earnings were very good, Nicole. They only lost 22 cents per share. Estimates were anywhere from 35 to 50 cents per share in losses. Their revenue, 1.36 billion, up 134% year over year. But it was the guidance that disappointed, and here's why: they lowered the guidance from about 5.15 billion to 5.35 to 5.05 to 5.15 billion. The street was looking for something right in the middle, about 5.29 billion revenue. And what was it? They delays in data center development. And so one of their developers is slow, and so they had to push. They didn't eliminate.
They're talking about it again.
Some of those numbers to next year.
What the fuck?
Thus lowering the guidance for this year, and any delays. Like I said, the stock has rallied so much.
Why do they keep talking about Coreware?
Rallied so much that they're hitting CoreWeave on that news.
CoreWeave or whatever it is.
You're at the New York Stock Exchange.
This is about the 8th time.
I was on CNBC this morning from the New York Stock Exchange talking glowingly about the demand for their products and the strength of his business, Nicole.
I'm sure
Why?
he thinks today is a big buying opportunity if that's the case. I mean, it's down 15%. This morning it was down 7%. And it's been trending lower, but, you know, as he talks about his growth prospects, maybe some folks think it's buying opportunity. Hard to say. They're not stepping in and buying just yet. Kevin Hicks, great to see you. Thank you, Kevin. Now let's take a look at the bigger picture. Mark Travis, CEO, President, Intrepid
Help me,
Capital,
Lord.
is with us. Some of your thoughts here on the market action we've been seeing. I mean, pretty impressive to see the market climbing throughout this day.
Help me, help
Some of
me,
your
help
thoughts?
me.
You know, Nicole, I think we're in a seasonally favorable period. I think we had a Santa Claus rally on Veterans Day. God bless our veterans, all of them. You know, again, I think if you look seasonally, this last quarter or last couple of months of the year are usually pretty favorable, considering we've come into the year.
I don't want to hear
up
it.
in the mid-teens in the equity markets.
We're back at the 63 again.
Suggest
Ladies and gentlemen, we have a special guest today.
You know, their equities
Brandon.
far outpace fixed income, but in 40 years in the industry,
They're talking about CoreWeave because Hunter is in it deep,
comfortable being
and it's sunk.
As Mr. Buffett said,
And I'm trying to get
yesterday.
Hunter out of debt.
You know, there have been 3 times in
So I
the history
appreciate
of
it if everybody
about 50%.
jumps and buys CoreWeave for me.
I think
I was
people forget that
president
when we have periods like
of the United States
but I like to remind them.
in 1980 to 1985. Oh, I mean, 1921 to 1925.
You know, look, we think about duration. If you have a long space and it drops, you probably have a long time to pick it up. If you're later in
This
life,
microphone
you don't have that
smells so good.
situation. The question now is the AI trade and whether or not we're in a bubble and if people should take the profits.
You know, it's hard to say, and I don't have a crystal ball on my desk, and I'm not sure many people do. I do think the market is beginning to question when is the payoff for all these investments? Is the marginal revenue going to offset the marginal cost? You know, you're talking about OpenAI being profitable by 2030. Well, 5 years is, you know, a good ways from now. I'd also like to remind viewers that more people turn 65 in this country than ever
You did
before.
more than laugh. You okayed it.
My guess is most
You gave it a thumbs up.
have spent a lifetime of accumulating capital in their 401k.
That's more than laughing.
Probably really don't want to be 100% equity, and they need to reconsider even their indexation in that 40% of the index is comprised of.
Did everybody like my Brandon imitation?
5 or 6 equity
Wayne,
securities.
is your daughter listening?
They're maybe not as diversified as they think they are.
And you
Tara,
talked
that
about
was my
rebalancing strategy in a portfolio. I
President
want to get to some of your
Biden
picks here,
imitation
like
there.
Garmin and Levi's and all that. But a good-looking portfolio to you is what right now?
Did she vote for
Well,
President
I
Biden?
think as a traditionally balanced manager over the last 20
I
years,
hope you raised her better than that.
portfolio has grown significantly, like it has, for many people. Again, I think if you kind of look on a risk
Jim, that's
return
quite
basis,
offensive.
and I tend to think of kind of a Sharpe ratio, which I'm trying to deliver a high one. For many people, that equity allocation is the first place to start, so that's probably in the 55 to 65% of their total holdings. Then consider fixed income. Again, we're likely in an environment where
Absolutely
rates drop,
not.
so it might be beneficial to kind of lock in some higher rates before the Fed moves, this month or next, or subsequent to that. So, and then keep cash.
Okay, we're now at 350.
Emergencies. So just a general kind of financial planning model around your portfolio.
And then what about names like Garmin, Levi's, Jeffries? Tell me about those names. Which one do you like the best there?
Well, I think if you look at Garmin, what I like about what I call founder-led families, like a Garmin that, went public in, I believe, 92, the founding family owns the two families that started it still own 20% of it. So they have a $2 billion with a B dollar equity exposure to that company. What's also interesting is on a
We're back at
$38 billion
68, 44.86 right now. We're retesting that support again with an inverse head and shoulders.
So you go to
This time we did
Jeffries,
break
same
below
way.
the
I'm old enough to remember
63,
when it was
so that
called
does concern
Educator
me a notch.
Joseph
But we're
Steinberg's
still above
there.
support.
Rich Hadler, the CEO.
So if you're
again,
still
also
holding, you're
owned
fine.
about $2 billion
So far
worth
until we
of
break
shares.
below it. And then it
So
could be a double
I think
bottom.
for many people,
Goal
they
is
turn over the
68,
portfolio too
36,
often.
10.
My family's has benefited from, again, Mr. Buffett owning some A shares back
And I'll
since
move
the
up
late
the calls if that
80s.
happens.
I now have a 250X on them. I owned them before they even had B shares. And so I'm looking to co-invest with management that will treat us,
I'm back,
me
YouTube.
and my shareholders fairly, and we can
Does anybody have any
compound
questions?
capital without a lot of turnover in tax if I can help it.
That's another good point there. You have Markel, Watsco, also Sprott. Tell me about some of those names. Which one's your favorite there?
Any questions? This
being
is
a native
YouTube
Floridian, I can
time.
tell you can't deal with.
I would take a few
AC.
minutes out of my
So the
trading
Nahmad
schedule
family down in Miami
to
is
answer
replacing
any of
ACs
your
all over Florida. Now that we've
undivided
got the new mayor
questions.
in New York, I suspect that he's going to drive a lot more people that need air conditioning in Florida.
This goes to
All kidding
YouTube.
aside, the challenge with a lot of these founder-led businesses is there's two share classes. And that can work for you.
$3.90 to $4.70.
We were longtime
It
shareholders
went down to
of Skechers.
$3.60.
And even though there were two share classes, the Greenberg family finally monetized it. Levi's
Oh.
has two share classes.
I'm
there's
tempted
an
to make a
example of
hot
another
chocolate.
holding where the family has a large interest.
Yeah. And are you a believer in gold or Bitcoin? Do you love either one of those? Are you buying them up or
I think
not
I might
really
just
at
do
this
it.
moment? Quickly.
I've owned gold for a long time. I like Whitney
It
George.
is
who runs
65
Sprott
degrees
out of,
outside.
Toronto. He was a former small cap successful manager at
And the
Lloyd's
painters were
before he
not there.
became CEO. I think it's a good proxy for gold. I think as long as we're running $2 trillion deficits as a country, gold should be a part of individuals' portfolio to the tune of maybe 5%.
Mark Travis, CEO, President, Intrepid Capital. Thank you, Mark. Thank you. Coming up, Options Corner. And Tom White is standing by, and he'll highlight unusual options activity we're seeing from the day and how investors are looking to trade on some of the recent news of Starbucks, Rivian, Oracle, real trades. He'll explain. We'll be right back.
Hey, hey, hey. There it goes. The more they pump this stock, the farther it goes down. We got a new low on this thing. Hey man, just got back as well. No. Nope. I've scalped it a couple times since my major first entry, the 68.50s. So I'm just kind of waiting now. We're still bullish as long as we stay above 68.44.86.
Experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live
coming up to a Head and
or
Shoulders.
on demand. Head over to schwab.com/coaching and start learning today.
I could have took it here at 360, 370 and got out at 520. But I didn't. I just got back.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab
Are you at 'em,
Network
Ricky?
connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to the watch list. Time for Options Corner, where we analyze unusual options trades that we're seeing throughout the day. Real Trades, Tom White, host of Fast Market here on Schwab Network, will comb through and explain some real options trades that he's seeing. In the meantime, I do want to get a quick market thought. I saw an article that says something like, the market cheers as the shutdown nears an end for the government. Some of your thoughts, is that the case? We are seeing certainly plenty of green.
Yeah, I think it was yesterday. I think that was the optimism that the deal was going to get done. The Senate approved the vote last night and now goes to the House tomorrow. But does that clear all the hurdles and all the potential headwinds? Maybe not at this point, but you did see that big rebound from losses that we saw last week. Yesterday's rebound led by tech. We saw that push back into Palantir, NVIDIA, some of the other chip names, Micron, AMD. AMD was down over 3% before their
He might be busy
here today, and Lisa Su gave some positive commentary on their expectations moving forward. Stock went positive, now it's back negative again. So it's just a choppy day, a little thinner trading on Veterans Day here, Nicole. But you know, some of the headwinds are starting to go away, and I think that that has investors excited. S&P 500, remember, is still only about 1% off its all-time highs. The NASDAQ about 2% off its all-time highs. So, yeah, you know, even when you're at these elevated levels, any pullback thing might seem to think like there's bigger
We're at a
issues
double
out there,
top.
but the market's been pretty resilient. And November
We're at a
is
double
historically
top.
a pretty strong month for equities.
Yeah, we talk a lot about seasonality, right? And we've even started to talk about the Santa Claus rally. How about Starbucks? You found a bullish trade. You're going to share with us some of the details on this bullish trade for Starbucks.
Yeah, nice bounce back so far this month, up about 7%. Nice gains here today. You wonder if Brian Nichols actually turning this ship around, because I think it's taken a lot longer than
There's three bounces off to 63.
They thought he was going to come in.
I'm afraid if we come down one more
away,
time,
but
we
it's
might
been
see
a
this.
slog for him running the company. There was some positive news
Let's
over the
triple
last
bottom
week.
here.
They've diversified portion of their China business. They're still retaining about a 40% stake in that. Boyu Capital is taking the other 60%. So that was kind of a hurdle that was crossed because they had seen slowdown in sales over in China. So that will help. They do have a potential strike from some of the baristas that might come into play. Congress is pushing them to continue negotiations with the union at this point. So that might be headwinds. their last earnings report. They missed on EPS, beat on revenue ever so slightly. Global comparable sales, same-store sales increased only 1%. So starting to see some green shoots here in Starbucks, but it's still down pretty significantly over the last couple of years. But we did see some optimism here in the options market today. Out in the December.
Now they're talking about Starbucks.
So about 24 days to
It
expiration.
has been kind of doing good.
Nearly 4,000 of the 86 strike calls. Paid an average debit of about $2.06 on those. So that break even of 88.06 over the next 3.5 weeks. That's about just under 2% above the current share price there in Starbucks. So we highlighted this one last Friday. There were call buyers in there. The stock has continued to move to the upside. We're still seeing call buyers come out here in Starbucks with the expectations that, hey, Brian Niccol is turning this company around.
Yeah, look, it got that little bounce that you noted. I mean, just month to date up over 6.5%. So nice move there. What about Rivian? By the way, I rode in a Fisker car this past week. That was pretty exciting. I mean, I only reported on Fisker, and it was sort of long and had this great glass top with lots of squares that were solar power. It was a beautiful car, but I don't know.
It is not a pretty car.
Let's get back to Rivian, though.
Yeah.
If you're talking about Rivian.
Yeah, maybe one of those cars that you might not see. It might be, one of those cars that they'll just talk about because I don't know if they're making anymore. But Rivian's up about 5% today, hitting 16-month highs, up 30% on the year now. And this comes on the back of earnings that were okay. They cut some people, so they're cutting costs at this point. CEO, they have a pay plan
expensive.
After Elon Musk got his approved from shareholders. Pay plan as much as $4.6 billion over the next decade, and his pay package is also linked to profit targets and milestones.
I personally don't like the headlights.
Get to at this point, but last earnings EPS they missed. It was minus 96 cents versus about minus 86 cents they expected. Revenue was just above expectations, just above $1.5 billion. But they did say that they had to pull back a little bit on production. Then you start wondering about the EV credits rolling off on this one. But the R2, their new SUV, has been doing well. Price target at D.A. Davidson today, up to $15 from $13. So some positive green shoots here in Rivian, as I mentioned, hitting 16-month highs for the stock. And the traders, option traders were in here in full force.
It's the headlights, man. I just don't like that.
November 14th,
I don't like that
weekly
either.
options that expire in just 3
Don't like
days.
that.
So really short-term
Don't like
position
that.
by these traders.
Don't like that.
But over 25,000 of the 17 strike calls were bought. Average debit of about 60 cents.
Oh, that was kind of cool.
Even of $17.60 where these traders needed to get above over the next 3 days, about 1.5%, 2% above the current share price in there.
Little side door.
Normal daily
This right here.
volume. And this was a big write-up on Wall Street bets, so maybe a little bit of speculative call buying here in Rivian, but having a nice pop today.
Yeah, and look, I mean, as you talk about D.A. Davidson with the neutral rating and the $15 target, right now it's at $17.60, so, that doesn't bring too much optimism, but right now, it's $17.61. Okay, let's get to Oracle, neutral to bullish trade.
I talked about this one yesterday.
Please, Tom.
Yeah, that pop that we saw just about a month and a half ago, we're coming down pretty hard from those all-time highs that we reached.
Well, it
in
was
September.
way overbought.
Now down about 32% from those levels. So we've seen a big fall off in this stock. It's still up 40% on the year, so it's had a great run. Michael Burry came out with a note about the hyperscalers, mega cap tech. He highlighted Meta Platforms. He highlighted Oracle. He highlighted Microsoft. Shelling out big money for this AI infrastructure build out. And then he stated that by 2028, Oracle will likely overstate its earnings by around 26%. So digging into these hyperscalers, I know that he bought puts in Palantir and NVIDIA also, but this comes on the back of big AI investments. They've got partnerships with all the big hyperscalers. At this point, they might compete with them in some areas, but they've also got partnerships with them. Stock was downgraded yesterday by Ernst Group to hold from buy. But this has been a pretty steep sell-off. But the parabolic move that we had may be a little bit overdone. But we did
it wasn't
see
even a
something,
move, it was a
this
gap
is one of
up.
those unusual option strategies that I kind of
Hey, it wasn't parabolic. It was a gap up, you bald-headed Tim. But we are coming to the 200 EMA, if you want my opinion. That could be a support level.
slid so much, and that allows you to collect some more option premium. So one trade that stuck out to me today was a cash secured put. A trader sold 3,500 of the November 28th weekly options. These expire in about 17 days. They sold the 225 strike put, collected an average credit of about $6.90. So the break even where the trader starts to lose money is all the way down below 218.10 to the downside. That's about 7% below the current share price. And this trader, what I think they're doing is, hey, if you put a bid in for the stock at $218.10, you might not ever get filled on that, right? But if you're selling out of the money puts like this trader did, and collected a pretty hefty option premium of $6.90 per put they sold, that they just get to keep that option premium if the stock remains above the 225 strike into expiration over the next 2.5 weeks. So cash secured put, maybe trying to take advantage of this steep pullback that we've seen in Oracle.
Yes, understood. Thank you for explaining that.
Understood,
we appreciate
baby.
it. Tom White, a good look there at Options Corner every single day, taking real options trades and explaining them to us, the ones he's found based on news and action. Thank you, Tom. Coming up, we'll break down some of the breaking news that we've seen in this performance of this market and where it could be headed going forward.
I love that
Maybe
woman.
a little bit of a year-end outlook, too. We'll be right back.
She's wearing her snake outfit just for me, for the sneaky snake trading strategy.
Kick off the morning with the data and the decisions moving markets.
I bought it for her last
Morning Trade
month.
Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
So far, SPX doesn't want to give up.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
We're now at $6 on the SPX.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange. The optimism on Wall Street continues to see the Dow here up about 532 points, but there's a lot of different story stocks. So here are some of the movers for you. Paramount Skydance rallying today after its first earnings following the merger of Paramount and Skydance. The post-earnings reaction to the media giants report has been fueled by guidance that topped expectations and growth in its streaming business. On top of the mergers and acquisitions, CEO David Ellison said, "There are no must-haves for us, that the company absolutely has the ability to build to get where it wants to go." Up arrows there.
Now, check out NVIDIA. Lower today, SoftBank announcing it has sold its entire stake in the chip giant for more than $5.8 billion. In the earnings statement, SoftBank disclosed that it sold more than 32 million NVIDIA shares last month.
God.
And the SoftBank CFO saying that the sale has nothing really to do with NVIDIA itself. I'm
32 million
but
shares?
It's a move for financing its investment in OpenAI. SoftBank also noted it had completed a partial share of its T-Mobile stake. All right, let's get the very latest on the market action, the seasonality. Look, we're almost a few weeks away to the end of the year. So we bring in Brandon Pizzurro, President, CIO.
What month do you think it is?
Capital Management. Good to see you. Now, they tell me November, December, January seasonally are pretty good. What say you?
Yeah, thanks for having me. You're right. November, December, I know your last guest, you had mentioned the Santa rally. That's certainly right around the corner. There is a lot of seasonality behind these last few months of the year, but there's also a lot of earnings momentum. We're just coming off a really strong quarter in earnings, and of course, that's what propels everything from a market standpoint. This 13% that we're getting thus far is probably our fourth consecutive quarter of double-digit earnings. We continue to see that momentum through the end of the year, so we're probably looking pretty good and green on the screen. Up where we are, we're looking at the third year in a row of S&P 500 up double digits, which is pretty astounding.
So when you say there's plenty to like in the earnings announcements, explain that. You've been pleased?
Yeah, sure. Yeah, we're definitely pleased. I mean, if you dive in a little bit further under the hood, we're about 90% of the way through earnings for Q3 here. About 61% have beat on both EPS and sales. On average, that's around 41%, so that's a really big delta, relatively speaking. Coming into earnings season even, we really had an astounding kind of run up there. So it's only the fifth time since 2003 that growth estimates have been revised higher as we headed into that earnings season. Last stat I would give you is just revenue year-over-year growth rates up about 8%. That's the highest since 2022's inflation surge. So there's really a lot to like from that standpoint, a lot of strength, a lot of durability. So just fundamentally, you're seeing stocks come out with some really strong earnings. So it's easy to see why people would be excited about it.
And are you excited about the shutdown coming to an end? Do you feel like that too can be a catalyst to growth? Because we will get out data, and that could show weakness in the labor market, for example, what the Fed may or may not do next. What's the process here?
Sure. Excitement around the government shutdown, certainly a good theme. We're on day 41. We eclipsed the longest by 6 days thus far. Obviously, Senate voted last night, headed to the House, ultimately President Trump's signature. So it's good to see things moving in the right direction there. Now, what we now have to get through is a backlog of data that was not revealed to us. There is a lot of alternative data that I'm sure plenty of guests have talked about, and there's some reality in why that's good data. But we still have to get the official economic data, of course, from the government. Next up, we then have a bit of a delay from data that hadn't been collected while the government was shut down. So just because it opens doesn't mean we're going to get data on a regular schedule going forward as well. So we're going to continue to see a bit of a backlog through December. And importantly, to your point, from the Fed's perspective, we missed a couple of important data points there. We had 2 CPI data points that didn't come out. It's unlikely that the BLS will be able to collect that data prior to that December decision. A lot of other important data points there as well. So while we're not flying blind, especially because of the alternative data out there, we and even the Fed to some degree is flying in a fog.
And so at this point now, we talk about how you really move forward with this. You talk about the consumer. Do you like consumer-related stocks, or you want to see how the consumer will behave? I mean, because we want to know also what's your advice to investors.
Sure. Yeah, consumers have been pretty resilient. That's been a story for the last several years. We obviously had excess cash that was available to your average person post-COVID, and that's largely dried up for the most part now, I think we can safely say. But the consumer is getting stretched. 22% of new car loans are at 84 months, which is a record. You know, the top 10% are spending about 49% of the spending is coming from them. Last stat I would share that comes to mind is that the average age of a first-time home buyer is now up to the age of 40. In 1981, that was 29. So the consumer is getting stretched. There's been idea of floating a 50-year mortgage out there as well. We want to wait and see as far as the consumer goes. There's still a lot to muddle through there outside of the wealthiest consumer cohort. Directionally, I think an area that one might be able to look at is materials. There's a few tailwinds in the pipeline there, just in terms of government contracts. But also it's the U.S. sector with the highest correlation to Chinese equities. And that's one area that, of course, is starting to get a little bit of lift in the market. So, investors might be well served to take a look at materials from here.
I like that you mentioned the 50-year mortgage because I was reading about that earlier today. It's one of the ways to sort of, help with affordability because people get a 30-year mortgage, and if you get a 50-year mortgage, your payments will be less. I mean, that's sort of the premise behind it. The Trump administration, the policy changes have not actually been announced, but it's been an idea that's floated. When we think about how investors can invest to make money in the stock market, do you have favorite sectors or names that you think can work?
Yeah, beyond that, the financial sector, since we're going to talking about mortgages a bit there, you could move into financials. They're at the low end of the historical leverage point, so they could benefit from ongoing deregulation. Diving in a little bit further under the hood, maybe not just big banks, but more specifically, if you look at some exchanges, they're kind of the pipeline, of course, for markets, and as long as market momentum keeps going and trading keeps happening, those pipes are going to continue to be filled, so exchanges can be interesting. Insurance is another industry within the financial sector that could shed some light on interesting areas. Specifically, again, because you have the opportunity to proliferate insurance, even in times when you might be a little bit more crunched for, say, margins at the big banks. So underneath financials, we like exchanges, we like insurance, is kind of some adjacent plays there.
Yeah, understood. When we think about electric vehicles, Tesla, there's different sectors that sort of have come and they were hot and then they were not. AI seems to be staying for the moment. But do you have certain sectors that people have watched or been excited about, whether it's crypto, something that's been off the beaten path that you continue to watch?
I mean, off the beaten path tends to get people caught up in what could be bubble territory. We're not calling AI a bubble at this moment. But I think the fact that so much hype has gone into anyone mentioning AI on an earnings call, you're starting to see that creep into the Russell 2000. And so about 10% of the Russell 2000 has what we might call memes and themes. I was reading in a piece the other day from Sell-Side. I was just highlighting the fact that kind of this AI craze to some degree has really crept down into these lower cap stocks where they're really not doing much in terms of the picks and shovels for the AI industry. And so those are some areas that are starting to feel a little bubbly. Other than that, though, I think people playing straight down the fairway, taking the gains that they've had thus far this year is sound advice. I would also mention maybe another sector is from healthcare. There's a little bit more clarity on tariffs, and healthcare was held back a bit by that tariff overhang. It's been a relative laggard year to date, so there can be some areas to pick off there. Clearly, there's been a little bit of M&A in the space as well, so finally starting to see a little momentum in healthcare.
And by the way, the Dow Jones Industrial Average may have a record closing high today. I mean, it certainly had a big percentage gain today at 1.14%. So we'll see whether or not it would close above 47,706. We're above that right now. But I have noticed a lot of fund flow into ETFs and even ETF bonds, bond ETFs. What do you think about that?
Yeah, ETFs, of course, have become the vehicle du jour. The ETF proliferation has really expanded quite a bit over other historical vehicles. And they really came about 20 plus years ago, and now you're seeing them take up a big swath there. From a fixed income standpoint, if you're looking at ETFs that are just simply mimicking an index, so beta, replication, what you're getting is the most indebted companies at the highest weight. So we wouldn't be advocates for just going into kind of a fixed income indexing approach. Active ETFs that are actively looking at sector rotation within fixed income, that can be an interesting way to play that. The transparency there is obviously one that's a little difficult relative to some other vehicles like, say, a mutual fund. But we like ETFs probably more in the equity space where it just makes a little bit more sense in the way that people are trying to approach that.
Back to 63 again.
Indexing.
Great to see you. Brandon Pizzurro, President, CIO, Guidestone Capital Management. Thank you for joining us on the show.
138.
Still ahead, we have Technical Tuesday, and Rachel Deschelle will join us and take a look at some of the technical levels for the S&P 500, Oklo, Expedia. The S&P, 10 of the 11 sectors today have up arrows. Rachel will explain. We'll be right back.
So today was no cleavage day. We still had a good day. So it doesn't take cleavage to have a good day. I've always thought it did. It's no cleavage day. It's no cleavage day.
Sometimes, you know, you could have done better. Same goes for where you invest.
Only if it breaks below the 63.
Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardas and connect with me on LinkedIn or Instagram for more.
Is your name really Sam?
Schwab is powered by America.
Or is it Samantha?
The award-winning trading platforms. Bring your trades.
It's not ladylike. Or are you really a man?
Including over 400
Sam.
studies. Tailor the platforms to your unique.
They call me Sam.
Customization. And track market trends with up to the
Not Samantha. Because I am really
with Schwab.
a man. Samantha, Samantha, the cold is light today.
Senior Manager, Trading Services at Charles Schwab. I haven't seen Rachel in a while. Good to see you, Rachel. And I'm glad you're taking a look at the S&P 500 for us today. What are you watching there?
Hey, great to see you as well, Diane. You're right, it has been a bit, but with the S&P 500, obviously we've seen earnings season, tariffs, the government shutdown, and we've seen that the S&P has actually held up pretty well throughout all of that, really only pulling back roughly 4% from all-time highs, and now it looks like we're mostly out of the woods for a lot of those factors. And
Her name is Samantha.
Friday,
It's not Sam.
A bullish reversal candlestick right at the 50-day
Oh,
moving average,
635
which
put.
has acted as that longer-term support really
Randy's
since
got
the
big
April
balls.
breakout. And we saw that bulls continue to buy the dip, and price gapped back above its 20-day moving average, really putting the S&P right back into that rising channel to continue its trend on higher. And there's obviously been cracks in the surface, like weakening breadth, volatility around the shutdown, tariffs, earnings season, all that. But the bulls haven't really seemed to care much and seem to have shrugged it off. And honestly, a tailwind that bulls may be looking for is a rally into the year end, with November statistically really being the strongest.
I'll join you if we break below
month of the year.
63.
And if the usual seasonal trends don't really play out, that may give traders a bigger signal that some other factor that they're not really expecting may be on the horizon.
And as I look, Rachel, I see, you know, the advanced decline line and market breadth seems to be improving.
We got a new girl on
that's
here
something
today.
that
Let's see what she's
people
got to
were worried
say.
about. I mentioned that 10 of the 11 sectors have up arrows, and I see at least 3-to-1 up to down volume. So that's pretty good. And when I look at the market watch, like this hot chart that we look at, so many names in the green. NVIDIA and Broadcom, yeah, those are lower, but many names from Walmart to Netflix to Microsoft, all in the green here today. Apple, AT&T, a variety. Let's take a look at Oklo, because we are waiting to hear from that company. Some of your thoughts there.
Yeah, you're right, Nicole, and it definitely speaks to the sector rotation that's taking place under the surface here. So the next one for Oklo we've all seen has had a phenomenal run this year, scoring 1,000% move from yearly lows to highs. And you can see the market has just respected those Fibonacci retracement levels in this name. The trend stalled out at the 423.6% retracement, which is over quadrupling that initial basing pattern that it broke out from early this summer. And we all know that no trend can run forever. And we did see a bearish divergence in the RSI when price was making those new all-time highs. And we've seen a distribution looking pattern really taking place over the last month or so.
You're 110.
And with that pattern, I drew a purple trend line that really served as the neckline of a slanted head and shoulders bearish reversal pattern that just completed last week. And now we kind of see price trying to retrace back to that level, with which also kind of coincides with the 50-day moving average and some of our resistance levels to the upside. So some levels to watch in this would be 126 to the upside there with the next Fibonacci, and 100 to the downside. But obviously, got to reclaim that 50-day moving average first as well.
Understood. Last but not least, before I let you go, could you take a peek there at Expedia for us, Rachel?
Of course. So Expedia started the year with a familiar bullish basing or bull-shaped pattern that we saw in many different stocks, followed by a few months of consolidation as somewhat of a breather for price before its next move. And I'll mention this too. I know it's not shown on the chart, but if folks zoom out to a 5-year weekly chart, they'll see a much larger cup and handle pattern that just completed as of August, which is a bullish setup for this name in the long term. And we just had an analyst upgrade yesterday to 271. We know a lot of times these analysts tend to chase price, which is something that we're kind of seeing now with that bullish breakaway gap on Friday, where price broke above prior resistance, kind of finding itself around that next Fibonacci retracement zone. And it's continued that move higher with strong momentum, reaching overbought levels and more than doubling in price since its yearly low. So it remains a name to watch. But traders may look for resistance and possible profit taking around that next level of 285 or so, which is the 200%. And then on the downside, right around 256 or so. And if that level breaks, the breakaway gap from Friday will act as that next level of support.
And Randy, 115.
Understood. I mean, and you noted, look at the bullish trend that it has there. And I saw that Argus has a $300 target. Citigroup has a target at 281. Expedia has been rising and outperforming some of its peers. It's
Woo,
Rachel,
130.
thank you so much. Rachel Deshelle taking a look at the S&P and also Oklo and Expedia. Rachel Deshelle, Manager of Trading Services at Charles Schwab. Coming up next, let's take a look at quantum computing and talk all about Rigetti, because the company had its latest earnings report, and we want to see why some of the story is mixed, why it could be under some pressure, what it means for your portfolio. We'll be right back.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Sam, I just wrote a song about you.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour,
I'm enjoying a hot chocolate.
you can trade globally with Schwab.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Bartis, live from the New York Stock Exchange. When the market
Sam
moves,
Bartis.
we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Sam, huh?
watch list. Want to bring in our panel to talk all about Rigetti Computing, the earnings. Quantum computing has been such an exciting story.
Yes, it has.
Well, we just got the earnings out. Corey Johnson, Chief Market Strategist at Epistrophe
/ES had a nice rebound there with a new high.
Networking and infrastructure at Hyperframe Research. Thank you both for
God,
being
look
with
at
us.
that,
So Michael,
360 to
start with you.
$6, just like that.
Corey, I'll start with you. When you take a look here, tell me a little bit about your thoughts on Rigetti.
The 6850s.
Well, look, this is a science project. It's not a business yet. It has tiny, tiny little revenues that are in decline. Revenues down 18% on a year-over-year basis. It's kind of cool stuff. They're Novera QPUs. They're making science projects to sell to other science projects. And it's, as in terms of buying the stock or trying to figure out what an investment is, I mean, $1.94 million in revenues in a quarter. It's ridiculously small. This is more like a biotech than it is a computing company. Maybe it'll be something in the future, but right now it's not much.
God.
And it's amazing how much the stock has soared, right? In 1 year, it's up over 2,000%. People were really excited. I mean, you did have Jensen Huang at one point really put out a word of caution on quantum computing stocks. Ron, what do you say
Trump
about
also
this?
said something.
Fully agree with Corey. I think this is definitely a long play, so this is definitely, patience warranted. And on, I would say, the bright side in terms of, okay, this is a long-term investment. What is Rigetti doing right today to, back that up? And I see them making the right moves in terms of their R&D investments. I see them actually making progress with their stuff.
We have an ascending triangle
system, and that is using a microchip architecture that is actually more flexible than, say, a monolithic single chip approach, and that's also referred to as a chiplet architecture. And so I think this is something that will actually work to their competitive advantage further down the road as the academic community and government researchers learn more and more about how to optimize quantum computing. And as a result, Rigetti will be in a solid position to take advantage of those developments and become a warranted long-term investment.
That's already up over 2,100% in the 1 year. But let me ask you, Ron, as you talk about Rigetti being in a good position, is this a quantum computing story or is this a Rigetti story? Because there are several names in the group. Do you think the others, too, could benefit? Like which ones?
Well, right on. No, I think Rigetti in itself is a story that is going to warrant continued, I would say, attention. And I think that, yes, Rigetti is also in a position that can help drive the overall quantum computing market segment that has drawn, more interest in what's going on in terms of the research and development side. And so, Rigetti is definitely one of the smaller players, but you're looking at the full spectrum here, and you certainly have players such as IBM definitely I would say enhancing its overall position as well in terms of being able to take advantage of quantum computing developments and also delivering that innovation. And so I think what's important here is that we're seeing advances in terms of getting toward what is called a 100 plus qubit system. And it's not just Rigetti, but it's also the other players, including IBM. And that I think is going to be a difference maker in terms of being able to catalyze that research and development that's going to be so vital in terms of how this market will play out.
We're showing some of these here. We have Rigetti, we have D-Wave, IonQ, quantum computing, just to name a few. So what do you think here, Corey? I mean, what's the final thought? Because I do want to expand it out a little bit. Is it a win in the long term for all of these names?
I drove by the Rigetti headquarters yesterday, as it happens, because it's down the street from the Berkeley Bowl grocery store. The Berkeley Bowl grocery store is 4 times the size of Rigetti and has greater revenues. So, This is a science project. This is like, investing in a company like this or D-Wave or something is kind of like believing in organized religion and then going to church's fried chicken as if you're participating in the same thing. There's nothing here yet. And maybe there will be something from IBM. Maybe there will be something from Google. Maybe there will be something from Rigetti. Their approach to follow the kind of path of development that they've seen in semiconductors, to look at chiplets, to kind of compare themselves to the development of CMOS chips and the accuracy of those chips over time, is an interesting approach. But it is very, very early days, and these valuations are like lottery ticket bets.
So definitely some nervousness and caution there, Corey. Where would you put money to work instead when it came to tech then?
I mean, quantum computing, like I said, is more like a biotech guess on something that might work someday. We see real money being spent right now in AI, and I still think that that's the dominant theme that we're going to see for a long time in technology. And as we see the change in data centers, right, there's been a lot of interest in power and energy, but I think as we see the change in the way data centers are developed over time, and you and I have been talking all year, Nicole, about optical networking, connecting data centers as data centers go from scaling up to scaling out. I think we're going to see a lot more there and a lot more spending there. Whether or not Meta and Microsoft and others Amazon, Google, see a payback in the amounts they are spending in data centers, we know that they're spending in data centers. So it may be the picks and shovels, if you will, that are the real beneficiaries for quite a while to come.
Understood. So looking at AI and beyond. Ron, what about you? I mean, when you expand, so it sounds like you are a little more positive on the quantum computing stocks, but if you expand it out, what kind of names do you like in tech?
Well, I think Corey is correct. I think AI has plenty of runway despite all the talk about a bubble. It's not going to be something in the foreseeable future from my perspective.
Exactly.
Naturally, the NVIDIAs as well as the Mag 7 stocks, for the most part, are going to be solid investments. They all have AI plays. And what's going on with AI is that there's just massive investments that are going on to build out those data centers. And it's called the data center migration that's going on in terms of building them in more remote areas, rural areas, i.e. where you can get the energy to support all of that intensive
Good
GPU
luck with the bubble
training
talk.
that's required across all these clusters, including distributed
Okay,
data
prepare
centers
ye in
as
the
well
name
as
of the Lord here,
across
Randy.
data centers. So
It's now or never.
I would say that the Microsofts, the Googles, and / Alphabets, as well as I would say anybody who is playing in terms of
Shut up. It's now or never. As we approach not the first or the second or the third or the fourth or the fifth or the sixth or the seventh time of breaking this resistance line, we are at the final squeeze. We have a 1, 2, 3, 4 on the bottom. There it is! What did I tell you? Not 1, not 2, not 3, not 4, not 5, not 6, but 7. We did break out of the squeeze. It's very important that we hold this resistance level and not dip below the 9, because that'll be number 5. Then we just might take a nosedive. Do you understand? Someone say yes. JoJo has a song called Do You Understand? Trust. Let's see what this is. I don't understand. Sorry. I just can't understand it. You ruined a good song.
Two shots in, building for a moment. By the booth face, always a little warmer. Pretty girls and they don't know what they came for.
That's a commercial. Just gonna say.
Yeah. Young Happy Homes. Yeah. Run it back, turbo. Choppers on deck. Everything is on demand.
Okay, I'll give it one more shot. That was okay. Sorry. Don't understand. Well, I guess I'm going to have to put it out in LP called Do You Understand Me? As we pulled back here, I think this is it. It's had its chance and it didn't do it. We're still squeezing. But I would think 7 was just a little bit too much. So I'm going to look at the put. The 68.40s. Do you understand? I'm not ready yet. It is now power hour.
Focused on growth. Stick around for those conversations. In Options Corner, we'll look at Oklo ahead of its earnings after the close and dive into what the options market is saying ahead of that report card. And today's overlooked stock is Xpeng as shares hit a new 52-week high after it unveiled its humanoid robot. George Sillis will join us later to break down that one. But for now, Marlene, take us through what you're watching today.
Yes, Sam. Nvidia shares trading lower after SoftBank revealed it sold off its entire stake in the company. And this isn't even the first time that SoftBank has fully exited its position on the AI giant. We'll discuss the details on that coming up.
Marley.
Also down today after reporting better than expected results for the third quarter. The culprits
We don't
behind
give
this
a
downward
shit.
move, though, disappointing full-year guidance and the disclosure of a delay with one of its data center developers. And Paramount Skydance reported its first earnings since the merger creating the mega media company. Third quarter revenue fell short of street estimates, but optimistic 2026 projections for cost savings from the Skydance merger are giving shares a boost right now. We'll break down that full report shortly, but I do want to check in with the markets. We are still seeing a bit of a mixed picture, but much improved from what we saw earlier this morning. The S&P 500 trading up 0.25% right now at 68.50. The Nasdaq trading down 0.2 at 25,556. The Dow trading higher at 1.2% higher at 47,932. And the Russell 2000 up about 0.1% at 2458.85. The dollar slightly down today, 99.31. Gold slightly higher at 41.29. Crude oil, though, making a rise up 1.5% at 61.05 a barrel. And Bitcoin under pressure, still trading down close to 3% right now at 103,375. Now, before we get to some of those top stories I just mentioned, I do want to check in with Sam in New York and see what stories caught your eye today, Sam.
We're watching this progress towards ending the longest government shutdown in history, Marley. A bill to fund the government through to January passing in the Senate. Now it goes to the House of Reps before heading to President Trump's desk to be signed into law. House members are making their way back to D.C. to vote on this.
I've got an announcement to make. When their pump CRWV hits $81, we will all go long, but not until then.
However, there are questions about how much data officials were actually able to collect during that time. In the absence of that data, the market has been turning to other reports for updates on the economy to fill the gaps. That includes ADP, which showed today companies are shedding 11,250 jobs per week on average for the 4 weeks ending on October the 25th. The report lines up with the slew of corporate job cuts in recent weeks in the University of Michigan Consumer Sentiment Survey, which also raised some concern about jobs. We also got that report out from Challenger, which showed the most job cuts in more than 20 years. And we're tracking updates from AMD's first financial analyst day in 3 years, which kicked off at 2 hours ago. One headline that analysts have been latching onto is this $1 trillion in total addressable market that is up from $500 billion before in 2030. Now, this is a different AMD to 2022. Shares in the company have been on a roll lately, particularly since it announced its partnership with OpenAI, the company reporting a double beat on earnings, but the markets have been focused very much on the inline margin guidance. And some analysts believe that AMD will be more of a 2026, even 2027 story with its MI450 chips and Helios system as well. Now, this will be key for investors as AMD positions itself to compete with NVIDIA. So we'll be watching any more lines that come out of that event. So let's then send things back over to Marley, who's with Jenny Horn over in Chicago with some of today's top movers.
Thanks so much, Sam. Yes, like you said, Jenny Horn in studio with us right now, co-host of Next Gen Investing, to talk about some of these big movers we're seeing today, some of which on the heels of their earnings. Paramount Skydance is one of them. You know, a very interesting price action here, up about 9% last I looked a few minutes ago, after posting a miss on revenue.
Yeah, there was a lot to like, a lot to, I think, be more mixed about, more cautious about within this report, but we do know it was the first true report since we saw Paramount and Skydance merge in August of 2025, which marked a strategic shift under, of course, CEO David Ellison. So he emphasized streaming scale, creative output, and tech integration as core priorities.
PSKY.
But financial performance, we saw revenue $6.7 billion, a slight miss as far as street expectations. Losses were around $257 million. That was compared to a $1 million profit just a year ago. Operating income $324 million on a loss of around 37 cents a share. That was versus the 34-cent share profit that the street had been expecting. So streaming remains a bright spot. If you want to find out a positive takeaway here, direct-to-consumer revenues surged 17%. Paramount Plus subscribers also rose to around 79 million, from up about 1.4 million from last quarter. And they also reaffirmed that overall DTC will be profitable by 2025 with growth in 2026. And they're also still targeting a lot of these cost-saving and really restructuring synergies, like expecting right now cost savings to at least rise to around $3 billion from around $2 billion last quarter. A lot to like within the report, but it sounds like also a lot of these like one-off numbers that don't compare to estimates are a result of this merger and the expense right now that they've seen from like a legal and tax standpoint, that they're facing some rising costs that are, I think, expect to be dismissed in the future.
And I think anytime you can say we're going to have an excess of $1 billion in savings we didn't factor in, generally will lead to a move to the upside here. Under some pressure though today, NVIDIA, SoftBank exiting its full stake in the company. You know, not the first time it's done this either. Some interesting commentary they made around why as well.
Yes, so this is an interesting story, and I actually think one that has been like under discussed today by the markets. But I mean, we're seeing NVIDIA, like you said, trading lower pretty substantially after SoftBank offloaded its entire stake in the chip maker. So selling around 32 million shares of NVIDIA in October, raising around $5.8 billion to help fund its major investments in AI, including this pretty significant commitment now to OpenAI. But their CFO did note the large AI investment requires the use of existing assets. So the negative reaction is not necessarily due to shares flooding the market, as the stock sales did occur in October. Instead, we're seeing, because of the disclosure and the market signal that the trade frankly represents, this does appear to have shaken some confidence, and I think given some question as far as we look ahead to NVIDIA's third quarter earnings, which are expected now next Wednesday after the closing bell. But heading into the announcement, I mean, we're still expecting some staggering growth, and despite this sale by a major holder, of course. Broader analyst sentiment does remain overwhelmingly
I don't think you
positive
understand
on
how much
NVIDIA.
money I would have had.
It does carry an average weight of right now buy or overweight, and we've seen most recently
48 times
firms like Citigroup even earlier
$3,300.
yesterday actually continuing to reiterate that buy rating,
Let me
raising
see.
its price target.
48
so from a technical
times
standpoint, we actually are slightly above our 50-day moving average. I know
$3,300
we've pulled back from these current levels, and last week saw a pretty big correction in price. But hey, any trader will say this is always an opportunity when you see a name as strong.
I would have had $158,000 on that trade. Do you understand? I would be worth 100 and well, they went to 3,400, so 3,430 times 48, I would have had 164,000. $640. And that's no exaggeration. That's what I would have made. That's what I would have made. Back to Marley.
Potential delay with one of its third-party data center providers was not met with any type of enthusiasm.
And unnamed, like not giving specifics on that, I think was also a problem.
Yeah, it's certainly it could be a short-term pullback, but we are seeing a significant drop-off in CoreWeave in the wake of their earnings. This last story not necessarily tied to one specific stock, but more an industry on the whole, and quite an allegation. We're talking about Michael Burry here, saying that some of America's largest tech companies, particularly those in the cloud and AI infrastructure space, are using aggressive accounting to pad their profits and potentially being dishonest about the life cycle of a chip.
Yeah, so what he has been credited for is, of course, being one of the masterminds of being able to foresee the mortgage crisis coming, of course, ahead of the collapse of the mortgage and housing system in the United States. So he's been pretty bearish about the U.S. stock market, though, for several years now. So keep that in mind also. This is not the first more pessimistic tone we've heard from Burry, but his most recent call does seem a bit more bearish than what we've seen in the past, or perhaps he's being a bit more outspoken about calling out some of these companies. So he said he's made a pretty big bet against the high-flying AI stocks that have seen huge run-ups in the last several years. But in a recent 13F filing, Cyan Asset Management disclosed that they purchased roughly 5 million put options with a notional value of roughly over $912 million on AI, of course, linked company Palantir, also purchasing around 1 million puts on NVIDIA, selling right now the remainder of its holdings for the second quarter and purchasing several new long positions as well. But he's also frequently changed his position on NVIDIA within Cyan Asset Management's portfolio just over the last several years. But it does seem, I think, very concerning when you consider the fact that right now he is basically saying that some of the deal workings that a lot of these like back end, basically like technologies of companies, that they're elongating the lifespan of them that are not actually correct, thus inflating some of the various fees they collect. And this would be a really major issue if that is actually true. And he goes on to give specific examples. It's a pretty detailed report, but it does then give you some question about, some of the back end accounting practices of our biggest companies in AI and also tech.
It is very interesting, too, because everything I'm reading and seeing and people we're talking to saying that while it is a very serious accusation, it is one that would be exorbitantly hard to prove because of the leeway that these companies are given in terms of how they estimate depreciation. So a very interesting thing, but he did say that he will have quote unquote more details coming November 25th. So I guess
excited.
We'll wait for that day and see what those details are. But Jenny, thanks for being with us to break down those top stories for us. That's Jenny Horn, co-host of Next Gen Investing. I do want to check back in with Sam, though, in New York and see what we have coming up in the show.
Well, Marley, we'll dive more into the recent market volatility and how you can set up your portfolio to help manage swings in the market. That's coming up next on Market on Close.
Marley, we broke resistance.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
Yep, it sure does.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to Market on Close. I'm Sam Bartis on the floor of the New York Stock Exchange alongside Marley Caden in our Chicago headquarters. Let's just get you a quick market update right now because we've seen somewhat of a turnaround, a bit of a comeback for equities just in the last couple of hours or so. We were mostly looking at red with the Dow Jones being a bright spot there, but we seem to have been picking up some momentum over the last course of the last few hours, I should say. 3% put on the S&P 500 now. We're at 68.53. Some of the top performers certainly have been away from the tech space, very much more so around Paramount. We've also seen Moderna gaining some speed on the NASDAQ. Very much it has been tech very much leading the declines there. You've got names like AppLovin, Lamb, Micron, all lower in trade today. So this seems to be somewhat of a rotation into sort of more of a defensive type cyclical play today. The Dow Jones has really seen gains thanks to some of the names like McDonald's and Nike, which have shown some strength today. And we've also seen a bit of a pickup now in the Russell 2000, sitting up about 0.2%. So just some fractional gains there. But as I said, we have certainly seen a little bit of momentum gaining in these markets. The US dollar continues to sit around 99. So things looking.
If we break below this support level, okay, this is what I'm looking at. Are you listening? 68.50. The 68.50. And I'm really not in the mood to scalp anymore. I've had a real good day. I could have had one of the best days ever. Times 3. Did you read that number up above, Randy? If I'd have had enough sense to hold the SPX. $164,000. If I would have won that, I would have said, screw y'all. No, I couldn't have said that. But I did go in big. This is really 2 good days we've had. Yesterday we had that low volume, and today we just had a hard sell-off. The volume wasn't like it was yesterday. Yesterday was weird. It's like they just gave it over to all the shorts at the first thing in the morning. I don't think there were that many of them, but and then today we've had volume with the pullback, so it's easier to trade. I had more confidence because of that. Yesterday I just didn't know what to think because that volume was just so low. But you see what happened. Okay, we're getting close. Pay attention. Pay attention. You're having wings. You gonna fly? Can you imagine if Funky was still around? He was Funky's one of them kind of guys where he's kind of private in a way. Self-centered in a good way. There it is. My way or no one's way kind of guy. But he taught me a few things. As you can see, I have 684494 for support. Randy. These things are going to get cheap. Yippee-yi-yi. Yippee-yi-oh. I'm going to try something here. Never been done. Oh, it worked. Woo! Pay attention to the yellow dot. Pay attention to the yellow dot. The 6850s. Pay attention to the yellow dot. I'm going to hypnotize you. Pay attention to the yellow dot. Pay attention to the yellow dot. You will be hypnotized. Pay attention to the yellow dot. It's not what I wanted to have here. That's not what I wanted to see. I wanted one more red candle. Oh, we got a new blonde on here. What did I miss?
Something that's
She's gone.
That's right there. You know, it's honoring the men and women once they get out of the military and continuing to set them up for success. You have a market view.
Oh, what's wrong
so
channel?
We're upstairs right now. It's
kind of
there she is.
A game plan for that area.
Always a pleasure talking to you. Thank you for taking the time
My
to be
pleasure.
with us here in studio. That's Marta Norton. She's from Empower, and we'll send it back to Sam in New York.
Thanks for that, Molly. Well, coming up next, we'll keep the investing theme going and look at an active ETF that's focused on growth and some secular growth themes as well. To keep on your radar, Market on Close will be right back here.
Well, I did see the double bottom, but I wanted one more crow and didn't get it. Do 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 do. Do do. Do do. Do do. Do 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 do. Do do. Do do do. Do do. Do 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 do. Do do Can you give me one more? Are we going to hold the triple bottom, or are we going to come down and hit my support level? 684494. We had a triple bottom.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. no matter the hour. You can trade brilliantly with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Marley Caden alongside Sam Bottis in New York. Shares of AMD have been volatile today during its first analyst day in 3 years. CEO Lisa Su announced the company has $45 billion in custom chip design revenue that will begin in 2026, saying that customers are not leveling off their AI investments and the demand is, quote, insatiable for the AI compute infrastructure. Some other key announcements coming out today saying that AMD is on track for tens of billions of dollars in AI data center revenue by 2027. Also saying that seeing data center total market will grow to $1 trillion by 2030. That's the headline I'm seeing.
Bury ye in the name of the Lord.
$1 trillion in
Correct.
potential data center total market value, but also seeing data center growth of more than 80% its compound annual growth rate. So some pretty impressive figures there. Also projecting revenue growth of about 35% per year, but still AMD shares under some pressure today, trading down about 2% right now after we did see a significant move to the upside after some of these announcements. It's been a volatile day.
Okay, here it
Let's move
comes.
on from this, though, welcome Sam back into the conversation and our next guest, Rob Haugen, the Chief Investment
Well,
Officer
Marley,
at
shut
Riverline
up.
Asset Management. Rob, thank you for being with us today. Now, you are about to celebrate a very important milestone. Can you tell us about it, please?
No.
Yeah, thanks for
It's
having
none of
me.
your business. Okay, we're getting there. Might have to raise it up just a little bit. I was listening to YouTube this morning and I kept repeating what Nancy Pelosi said the other day to that reporter. Shut up. I thought that was really good. Shut up. Did you hear that, Randy? Shut up. Okay, here it is. Here we are. The 6850s. Shut up. Shut your mouth. If I got anything out of Nancy Pelosi, it was shut your mouth. Shut up. $2.75. Uh-huh. Oh, yeah. $2.80. All right. Let's do it. Prepare ye in the name of the Lord. Exit your trades, please. Exit your trades. For I'm Washboardjim, the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. I've never seen anything like it in my life. That was amazing. Oh, yeah. Oh, I forgot to put the out on it. That was perfect. Look where that candle landed, right on the 200. If there's anybody that follows me and you don't have that 200 SMA on your chart, shame on you. Jim, my grandma called and she said she was pregnant. She did. You sure it wasn't a fake phone call? Spam? I'm going to have a great uncle. Yippee-yi! I thought that was pretty funny. I'll never get that out of my head. My grandma called, said she was pregnant. I don't know what to say about that. Jim, my grandma called. She's pregnant. What do you think of yourself? I wanted to take a DNA test. We're at the triple bottom right now. I'm done. I think I've had a good day. I could have had one of the best days ever. I wouldn't know what to do if I had a day like that. I would probably suffer a heart attack. $164,000. Someone in here said, hold on to them. Was that you, Livid Goose? Oh well. I think if I did a day like that, I'd be a turning point. It was you. I think I would call myself turning point. I'd definitely go get me a jet. Just fly somewhere and have a peanut butter and jam sandwich, like Vegas. Oklo's got a double bottom. Or is that, yeah, Oklo. Oklo says that DOE approves nuclear safety design agreement for Idaho facility. Unbelievable. That's what I am. That was just beautiful. I mean, I'm still can't get over that trade. It's a good way to close the day. I've got 20 more minutes, so I think I can put up with Marley for another little bit longer.
Centers has seen its stock pull back
Oklo after close.
last month after a year of some really impressive gains. And with all that said, of course, it's time for Options Corner, where we will be highlighting Oklo today in advance of its earnings. Rick Ducat, our lead market technician, joining us today to walk us through some of the most important numbers. Now, when we talk about Oklo and we take a look at them, I just mentioned that we have seen this pullback, obviously very evident on their chart. You know, we are seeing them pull heavily to the downside too, just today in advance of the earnings, down 6% today alone.
A significant pullback, but if you don't squint, you might.
Randy's heading out to dinner.
The utility sector ETF all the way down here, so
going to have wings.
335.5% during the past year versus about 13% for utilities. Certainly not what you would think of if you asked me to picture a typical utility type stock. Usually much more like a consumer staple, almost something that's more stable, pays good dividends, more of a defensive play. But this is other stocks in that nuclear space.
Everybody say goodbye to Randy.
Scale power,
and say, don't get choked on a chicken wing.
LEU Centrus Energy, LTBR Lightbridge. Not exactly household names, but you know, even the weakest ones are outperforming XLU here. So some great interest in this sector.
Don't get all choked up.
Ever increasing demands for power from AI intensify here in this space.
Yeah, certainly. Our last guest even mentioning nuclear as a place to keep an eye on, where we have seen considerable moves to the upside, but also some valuation.
I think I'm going to start a collection pod here soon for my next vacation.
At Oklo, not against its competitors, although I did love that you said don't squint or you might miss the actual market action performance against the chart. You know, what are the technicals showing us as they come into this important report card?
Well, as you said, a pullback here, and I had to laugh a little bit. This company was described as being pre-revenue, which is just kind of a funny way to phrase it. But really, though, that's kind of how things go when you start out here, so I'm not making fun here. But a head and shoulders
making
type
fun,
pattern
you
is
fat
what stood out
slob.
to me potentially here. Typically a more bearish pattern. We are below that supportive neckline area near 110. But, you know, earnings could really change everything. That's a huge potential.
It's a falling wedge.
I don't think I would put too much emphasis on a pattern like this when we have a large event risk type of situation right on the horizon here. Still, it's
a beautiful setup, Rick.
Also see here, this was our old high point, this was our breakout point. So 84 stands out as a potential supportive level if this move were to start to dematerialize and start to move back toward the lower edge here. When we do look at our moving averages, our orange 63-day EMA is pretty close to this 110 neckline level. That could be another resistance confluence to break through in the shorter term, but the level of our shoulders near about 143 stands out potentially as
I don't see his
upside. Momentum trailing off, moving downward here. Once again, though, as we head into earnings, that is certainly not uncommon, not something that we would really make too terribly.
I think I like it down here better.
Finally, if we were to look
this
at
is a falling wedge.
Volume profile study, volume nodes here near about 140 as well as just below near about 113, 114 or so. Those areas stand out as potential congestion points to the upside. Meanwhile, things don't really pick up again to the downside until about 75, which is where we also have our -1 standard deviation channel. So if things really do start to fall apart, that would be another line in the sand.
Yeah, and you highlighted that 140, 143 level for where the shoulders are. You know, we're trading roughly 25% off of that right now at about 104. So, you know, pretty far removed from that shoulder level. But as we look at options activity, you know, how's the volume been ahead of their earnings?
Slightly heavier than a typical day. Sizzle comes in at about 1.3 versus the 5-day moving average here. About 105,000 options changing hands though today, so pretty elevated relative to the other part of the market. Rather unusually, 43% calls. Typically you see calls outpacing puts here, so something a little bit unusual I noticed about this one here. In terms of the high open interest for our November expiration, 95 on the call side, 75 on the put side were very large outlier numbers here, so those were some interesting points to consider. One big trade, -600 January 16th, 125 puts done as a spread with plus 1,200 of the 95 puts in the same expiration here. Seems like it was probably a closing trade though, otherwise they'd be selling in the money puts. Net credit came in at about $310,000.
A big trade though. Well, Rick, we appreciate you being with us to break down Oklo and also the options activity we're seeing ahead of their earnings report, which is expected out here in about a half hour. But I do want to send it back to New York and Sam to find out who we're talking about for overlooked stocks today.
Well, George Tillis Mali has his eye on Chinese EV maker XPeng as the stock has rallied to a 3-year high today. He'll break down the news on that company and what you need to know about it coming up next on Market on Post.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
How's it going? First day, so...
Sometimes, you know...
Next. Try again.
You could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing
technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Welcome back to Market on Close. I'm Sam Vardas, live from the floor of the New York Stock Exchange. It's time now for Overlooked Stocks, and we're watching XPeng today as shares rally to a 52-week high after unveiling its humanoid robot. So I'm joined by George Sillis, a senior markets correspondent, to get us across this one. What do we know about this company going full Tesla, as it's been described, off the back of its AI day, and the reaction we're seeing in the stock, because it's up at 7% as far as the ADRs are concerned. I saw in Hong Kong it rallied 17% overnight, George. So what gives?
Well, I think, if you're interested in, Chinese automakers, I suggest that this one is certainly one to keep an eye on. I mean, it's sort of a dark horse player in the autonomous driving space. But also, we have to consider, competition for companies like Tesla in the EV space. XPeng is actually producing over 400,000 units globally. So they're playing catch up to Tesla, which has, close to 2 million annual units on a for-sale basis. So that's important in the context of, getting closer towards profitability. And XPeng is actually not just producing EVs in China and selling in China. They've been expanding their footprint quite aggressively in other areas like Singapore, Europe, very big in France and Norway, as well as Israel. They're starting to sell and produce cars there as well. So they're really expanding their global footprint. But the other thing is their technology, I think, is actually quite compelling, considering they utilize what's called their own Turing AI chip, which means that it's an in-house AI processing chip, but they also provide alongside that vertical integration of their vision language action model technology, which is
that sounds interesting.
Software. So if you think
this
about
company does.
Tesla's not just an EV manufacturer. You really could consider it a software and robotics company. XPeng is actually, I would suggest, probably the next best fit in the Chinese market, much like Tesla. And of course, today they unveiled their own humanoid-like robot, which we know Tesla is going to start mass producing their Optimus robot to compete with them, and XPeng is going to be called Iron. So I think this is a very, very much vertically integrated company. The EV space, autonomous vehicles, software space, and hardware, but also robotics really is, again, like I said, a close parallel to Tesla. Even though Tesla, if you look at it year to date, has not performed very well at all. I think it's up about 10%, which is actually less than the benchmark market. But XPeng is up, I think, about 130%. So it gives you an idea that this company's been growing quite aggressively over the last year.
Yeah, it's so fascinating, George. I mean, I've been covering this company since it was an emerging EV
it's one of my favorites.
And you raised such an interesting point.
I didn't know about the
robot. It really brings
robot.
us back to, the valuation story here, like with Tesla. I mean, is this a technology company or is it a car company, particularly as it sort of makes its foray into technology? And if you've got companies like Xiaomi, for instance, over in China, which is a household electronics name, which has come out with this very popular car as well. So it's been really interesting to see what the Chinese EV makers have actually been doing here. But I saw one take that maybe this validates what Tesla is doing now, which might be actually good for Musk as he needs to hit all these very ambitious targets. But it sort of brings us back to, I suppose, the same old narrative that we wonder whether this, is seen as more of a inexpensive way to sort of play the whole humanoid trade now, like we see with the Barber v Nvidia and maybe the Tesla previously v BYD as well. But I'm just wondering also what the analysts are saying about that path to profitability, because it looks like they're very close to that.
So I think you bring up some excellent points. If you're looking to play this humanoid robotics, secular story, one would say just looking at the price performance of XPeng relative to Tesla, you can see that maybe the market is obviously valuing XPeng at a discount than Tesla, because Tesla's trading, I think, depending how you look at it, 100 to 150 times forward earnings. If you actually look at the price action in XPeng in the last year, up nicely, hitting new 52-week highs, that's very telling, especially in this market, where if you look across the board, companies like Rigetti in the quantum space, or even Oklo, which is going to be reporting earnings, those stocks are down about 30% to 40% last since September. So I think the valuation concerns in the market are being demonstrated in other areas. those stocks, where now you can make the case that XBET is still undervalued, considering this year the company's still expected to lose only 13 cents. Next year, adjusted profits of 30 cents, and the following year, 64 cents. So the point is the inflection point towards profit is coming up. For XBET, price is moving first. And I think that's quite valuable in terms of what is matching price action relative to the news, which again is all about humanoid robots. XBET is not going to be scalable in that production. Neither is Tesla right away. But nonetheless, XBET is moving in the right direction in their EV and other technology stack. I think that's why it's been rewarded.
Oh, for sure. Investors certainly paying attention to this name. Thank you so much for that, George Sillers. A really good look at XPeng today. I'll send things back over to Marley in Chicago.
Thanks so much to Sam and George. We're nearing the end of the market section. We'll be bringing in Alex Coffey to break down today's action next on Market on Close. Stay with us.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
We're back here on Market on Close. I'm Sam Vardas here on the floor of the New York Stock Exchange alongside Marley Caden in our Chicago headquarters. So there's just a few minutes left to go now in the session. So let's welcome in Alex Coffey today, host of Next Gen Investing, to help close out the session. What are your thoughts on the session so far? Is it just a few minutes to go now? It looks like
it's a beautiful day
in the final couple of hours here.
Yeah, I think today was kind of a unique day in markets. I've talked a lot about the relationship between the Magnificent Seven as a correlation to the overall market. And over the last 3 months, it's a 0.98. Well, today would be one of those rare days where the Magnificent Seven stocks have underperformed, but the broader S&P 500 has been able to weather that. Now, when you look at it intraday, about 70% of the S&P 500 stocks are set to close higher on the session, but the Magnificent Seven stocks as an index would be set to close down by about 0.25% here in real time. So kind of interesting, and also explains why the NASDAQ 100 has struggled relatively intraday. When you look at the NVIDIAs of the world, when you look at AMD, of course, AMD's got more going on that we'll get to in a bit. But you look at more of this AI build-out trade, there are headlines in it today, whether that's the CoreWeave story, whether that's SoftBank offloading its position in NVIDIA, that's weighing on the sentiment of that trade. Of course, that's pressuring the more tech-heavy NASDAQ. When you look at the S&P 500, that was a whole 2 days now into this week, and we take a look at a chart I sent over to you guys, I think it was actually a pretty interesting setup and a scary one into the end of last week. but the market held on. And
it did.
One of the things I look at, there's quite a few lines here on this chart, but I'll go through them.
Yeah.
First off, this is just the last 1 month of the S&P 500, so we can zoom in and really get a look. But the two lines that are following are a 1 week moving average, the teal line, and the yellow line is
what
the
time
1
frame
month
did
moving
you
average.
use?
Short-term traders will look at that relationship as an indication of trend, and when the 1 week goes below the 1 month, that can be indication of a trend shift. We got awfully close to that on Friday, and without the big move that we got yesterday, it probably would have happened.
It would have held.
We were
It
able
held
to
that.
weather that, didn't actually happen, and now we're above both.
Yin-yang.
So basically the trend is fully intact. On the far right-hand side, I know Kevin Green likes to go through some of the important options levels. I should preface this as these are all levels for the end of this week, or the expiration at the end of this week, of which only about 2% of options open interest for S&P 500 are in this week so far, and only about 2% of the volume. But we're trying to see where things are building as the week rolls on. And anymore, about 75%, or 3 out of every 4 options that trade in the S&P 500 on a daily basis happen in options expirations that expire within 0 to 1 trading day. So about 65% in the 0 DTEs, and then about another 10% in the 1 day to expiration. So this will start to build up as the day goes, or as the week goes on, but really watching 6,900 to the upside, 6,950 to the upside, and then 6,800 to the downside is some early levels that are building in the options market.
And Alex, as I'm looking across the sector performance, as you mentioned tech repeatedly there as being part of the pull down on the S&P and the NASDAQ, tech is all we have in the red right now. So as far as sectors that you were keeping an eye on today, what else are you watching?
Yeah, that is super fascinating. Industrial's basically right at the unchanged line, but when you look at...
Okay. Well, I don't know how I do it. I want everybody to look in my eyes. I don't know how I do it, but I sit here 8 hours a day, talk smack, and I don't get paid for it. I make money. Can't tell you how many times I've been preached to. Why don't you charge? Why don't you charge? Well, I don't need to charge. But I would like to have one vacation out of the year from y'all. So I'm thinking about gathering up some funds so I can at least have a little help with my next vacation. So y'all think about it and private message me if you think it's a cool thing to do. In a private message, of course. And I am going to call it a day and relax and have a burger. Watch my YouTube channels, get caught up on my YouTube channels. I like to help them out. But it got pretty nice out. It's been cold yesterday. I think yesterday was our first below freezing weather day. 22 degrees. I'd like to have a couple nice months, but and no ice storms, but if we get one, we get one. I ain't going out in it if we do get one. I tried to drive on it last year and that was horrible. We get ice storms in Missouri. We get tornadoes, we get snow. We had a lot of rain this year. A lot of rain. Maybe we won't have that big of a snow this year. We had a lot of rain. A lot of rain. 32 inches in 2 months. That's what you get on a tropical island in Hawaii all year round. And one side of the island you get that, and then the other side of the island you get 6 or 7 inches. And when it rains there, it rains. There's no doubt about it. I kind of would like to move back there, but I wish I'd have stayed in a way. But I don't think it ever led me to this. And I'd, be working a job there. I don't know if I'd ever. Moving back here allowed me to look for another trade so I could learn how to day trade in the daytime. So I'm kind of glad I had to make that. That wasn't the reason why I made the move. I made it for a girl. But it come down to working out just perfect. Because I started getting interested in 2004 when Martha Stewart got in trouble. And I said, well, shit, I might get interested in stocks. So I'm going to head on out of here. I really appreciate everybody. And thank you very much. I do this all for you. And I appreciate it. And YouTubers, thank you very much.